Yes, good morning, viewers. This is your tutor again, and we are continuing with our series on overheads. And right now, what we are going to be talking about is how we are trying to assign those overheads we've incurred, which cannot be directly traced on a given output to a particular specific cost centers that were where they are incurred. And we've seen how we can separate some of those costs into the fixed and the variable components. And now what happens is that when we find out those variable costs, we need to allocate them direct to where they are incurred, so that in the final process we can try to absorb them, as we shall see in the next videos. But here we said that we need to identify these costs or the overheads we've incurred with the specific cost centers, and we want to assign them. After identifying them, we assign them to the product. So because some of them they are part of the product cost, or they are part of the manufacturing costs, so we need to assign them to the product. But the only way we can do that is by going through these steps. And the first step, we said we first classify and we collect those overheads, and that's what we did in the first video, where we looked at the high, low, the least squares, and we separated those costs. But having separated those costs, we need to go to the next step, which is assigning these overheads to the cost centers where they are incurred. And what we need to do is, one, we select a base that's where they are going to be, that is appropriate, that can help us to assign them to that department or specific cost centers. We said a cost center can be a service center, a process center, or a department, or a production center. So when you're talking about these cost centers, we are meaning the production cost centers and the service, because we said that these service centers, they help us to support the production. So there are some costs we've incurred in the service centers that we need to allocate there. And in this term, we are talking about these indirect costs. So as we said, the first step was to collect and classify the overheads. Now what we are going to see is allocation and apportionment of overheads. What do I mean by allocation? Allocation refers to the process of assigning indirect costs to cost centers or departments. But don't forget that in these departments, we are talking about the production department and the service departments. It's only done, or it can only be identified with the cost center or department when those costs can actually be identified there, if you can really trace them there. There are some costs that we can directly transfer them, that we can directly allocate, like the indirect material, indirect labor. Those ones we can just assign or allocate direct without using any common base, because for them, at least you can trace where they went or on which part of the product they have contributed. You can see that they have contributed to this. So if, let's say, you've used indirect materials in the stores department, in the production department, let's say mixing department and other departments, you allocate each as where it is incurred. And that's only applicable when we can actually identify those, or we can find those costs we've incurred to that certain department. So if you find that those costs you can't even know how much we've spent on a certain department, then we call in the apportionment. Now this apportionment, for it, if that cost you can't really look at how much is spent on a certain department, then we use appropriate bases. And these bases, they become our cost drivers, or what consumed the whatever the resource we are talking about. And having known those cost drivers, but remember here we are taking the appropriate ones, the exact base that can help us trace a certain cost. So we use that base and we compare it with all the departments, including the service departments. Here we are not absorbing. You should get a difference. When you're absorbing, it means you are removing from, we only absorb in the production department, not in the service department. So when we are talking about apportionment, we are just distributing those indirect costs to different cost centers using an appropriate base. Why are we using an appropriate base? Because we couldn't allocate them to a certain department. And in doing so, we do it within the production and the service department. And the whole of that you are seeing, the allocation and the apportionment of overhead is called the primary apportionment. It is called primary apportionment because we are just getting the costs to the production and the service departments, not necessarily in the production. Because when we are transferring the service department costs, since the service department costs are just helping us to make sure the production is moving on smoothly, then when we are transferring those costs into the production, that's what we call the secondary apportionment. But as for now, we are talking about primary apportionment. Since we are just apportioning, it means we are only getting proportion, what went to this department and what went to the other department in terms of the cost and the total item or the total base that we are using to apportion. I hope you have understood that, and you can read through the notes, and it says apportionment of overheads refers to the distribution or sharing of indirect costs, those are the overheads, by different cost centers using appropriate bases. So when you are dividing apportionment, you make sure you put appropriate bases. That's what separates it from allocation. Allocation, we allocate because we can directly trace where those costs are incurred. As I said, in terms of, let's say, indirect material, indirect labor, and others. So when we are apportioning, the bases to be used are influenced by the nature of costs to be apportioned. Let's say when you're talking about the nature of the cost to be apportioned, it means what are we exactly incurring? If it is electricity, then what can help us to trace electricity? Are we tracing the electricity in terms of the units of output, or we are tracing electricity in terms of the kilowatts? Remember, the unit of measurement of electricity is in kilowatts. So if the unit of measurement of electricity is kilowatts, it means then the base is going to be kilowatts, not number of units. So that's what we mean by the appropriate base. The purpose of allocation and absorption and apportionment, of overheads to the cost center is to ensure that all costs that cannot be identified with the cost center are directly linked to the cost center. And remember, with these cost centers, we said it includes both the production and the service department. So hope you don't forget that. Thus, allocation and apportionment ensures that all overhead costs are directly traced to the cost centers involved, like the production, that is the transformation, where the transformation takes place, and the service department, which is the supporting departments. So when you're apportioning overheads, what we use is overhead cost apportioned it will be equaling to the total overhead. Total overhead, if let's say we've spent electricity 10,000, it will be that 10,000 over the total number of departments. Now we are talking about the departmental shares, what each department is taking. So if you want to determine for a certain department A, it will be, let's say the total departments, they are A up to, let's say, C. Then it will be the total cost of electricity over the total departments from A to B. What A is taking, what B is taking, what C is taking in terms of the kilowatts. Then we multiply each department cost. That is how many kilowatts each department is taking. Remember, we get the totals of the cost we've incurred. If we say we've spent 10 million on electricity, it will be 10 million over the department shares. If let's say units are in department A, 30 are in department B, and 50 are in department C, we add up, and when you add the 20 plus the 30 plus the 50, you get 100. So it will be the 10 million over 100 times what each department is taking. Hope you've got that. And I will not mix it with the absorption, because if I mix it, you will get confused, but it's almost the same. But here, let's first do this as for now, then we shall come and we talk about how we absorb. Here, having known each department what it is taking from the total department, then we can be able to allocate those costs to different departments. So we can now proceed to the next slide. And this slide I have arranged for you some bases, what we can use to allocate these costs. We are saying the apportionment is done with the appropriate bases. So some of the appropriate bases, we said electricity, the unit of measurement for electricity is kilowatts. This, they are saying kilowatt hours. You can put hours, but you can just leave it kilowatts, because you find that they are saying kilowatts hours. You may find that some, they are determining hours and depends of we use the, let's say, in an hour. But for now, let's take that electricity is charged and the appropriate base. If this is the cost of electricity, if let's say we are spending 10 million, so we are supposed to determine how many kilowatts that are consumed by each department. When we get the total, then we shall get the total electricity we've incurred divided by the total number of kilowatts that are spent within the whole organization, including the service department and the production department. Then we multiply for each department. We see what cost is spent on each. This one you can talk about if let's say we have 10,000 and we are saying that these 10,000, an example we can use here. If let's say we are saying that we've incurred, let me put this one here. If you have 10,000 units and they are telling you you've incurred 10 million in the production, 10 million. It means if you want to determine what will be the cost of each item, it will be this 10 million divided by 10,000, which will give us a cost per unit of, when you remove this, it will be 1,000. It means this 1,000 is the cost per watt per each unit. So it is the same thing here. When you get the total number of the total of electricity, if let's say it is 10 million, and you divide by the kilowatts, you will be getting how much per kilowatt. Then having known, because you've got the total number of kilowatts that were used in the production, you will be able to get, because you will be able to get the cost that is spent to each department, meaning that to get these total kilowatts that you spend in the whole production department, in the whole factory or in the whole organization, it means you will get each departmental contribution of which it will be that contribution you multiply by the 10,000. That's what we are meaning. So we said the electricity, let's lap this one off and proceed with the building repairs, cost of cleaning, they are charged the floor area. Of course, when you are incurring repairs of building, you are building what? If they have given a building, because when they are setting these questions, they set them in a sense that when they are giving you, they give you the cost they have incurred and they give you the different cost drivers. But for you, you have to select the one which is at least, which is appropriate. Like if, let's say, for the cost of cleaning, you find that someone may just say that me, I'm going to allocate this cost on the number of employees. That one, it won't be a wrong cost driver or a cost base. But if there is a floor area, because what are you cleaning? You are cleaning the area, or you are cleaning a building, not, yes, we are using workers to clean the building, but what are we, what is the element that is consuming the resource we are saying? The number of employees, yes, we are using the number of employees. They are the ones we are paying, but they are cleaning the building. So the first portion that is taking the cost, it should be the number, the floor area, which is, because to determine the number of people who are going to be cleaning the room, you have to first know what is the size of the room. Hope you've got that. You have to first know the size of the room before you put in the number of workers. Then for depreciation and insurance, we said it is net book value. You know, depreciation is charged on the book value. Rate and rates, this one happens most of the times in urban areas. When you are renting in urban areas, they give them meters. They measure meters. That's, you find that someone is renting, let's say, a second floor or first floor, but the unit of measurement, how they measure the room you are going to use, they measure it in meters squared. You find that square meters, how many square meters are you going to rent? That's how we can identify those costs. As you've seen, that cost staff canteen, when you're talking about canteen, it's not what you see at, let's say, at a secondary school. We are talking about now employees, what they eat, not the building itself. That's why the basis of allocation, we are putting it on number of employees. And I hope you can be able to get that. So allow me stop here, and we are going to pick a practical question in the next video so that we can try to find how we can compute the primary apportionment using a standard paper. I'm using standard questions because I want you to get used to the questions and you know how they are set. Because if I set you my own examples, they are going to be very simple. And when you reach the question, the examination paper, you'll find it a bit hard for you to interpret. So that's the reason why I'm using question or standard papers. Thank you for watching. I emphasize that you guys should subscribe so that we see how we can help each other. Thank you for watching. Good day. We are continuing with our series on overhead costing, and today we are going to look at primary apportionment, and we are going to see how we can apportion these overheads. We are using question 6. We are using question 6. That is December 2020 CPA paper 7. Question 6 part A, December 2020. That is what we are going to be following. And question 6 says, part A, Roman 1, discuss the meaning of under absorption of overheads and how it is treated in accounting. Roman 2 says, explain any 3 causes of under or over absorption of overheads for the 3 marks. But my emphasis for today is on part B. And if you want to know the above or the solution to the above answers, you can watch my previous videos so that you can be able to understand that. Part B says Premier Bakery Limited manufactures bread and cakes, that is PBL Limited, and PBL has 3 production department, that is mixing department, fermenting department, and baking department, and 2 service departments, that's maintenance and labeling. Of course, you label what, sometimes they label what they have produced, sometimes they label what they have not produced. Most cases we label what we've produced out. The following information relates to overheads and apportionment basis for the year ended 31st December 2019. We have the departments, production, the service department, as you can see them. These are the production departments. Then these are the service departments. So we have the department number 1, that is mixing department, fermenting department, baking department, maintenance department, that's the service department, and labeling department. We have the overheads they incurred in a month that year. That was for mixing, it is, remember we have these figures are in millions, so don't forget when you're reading, when you're working out, you know that those costs are incurred, those overheads we incurred, they are in thousands. So it is 168,750 for fermenting, for mixing, sorry. Fermenting is 135,000, baking is 101,250. Then we have the maintenance, which has 30,750, and labeling, which has 81,000. So we have the number of workers. Now these are the bases. These are the bases they were talking about, because they said we have the overheads and the apportionment bases. These are the bases. These are overheads. These are the departments. So these are the bases. Bases, those are the activities or what consumes. The one, we have the number of workers in mixing department, we have only 39 workers, and fermenting department we have 36. Then the baking department we have 33, and maintenance we have 12 workers, and finally labeling we have 30 workers. Then we got the number of kilowatts. These are the kilowatts that were consumed by each department, and we have mixing had only 84,000, fermenting had 70,000, baking had 47,600, maintenance had 36,400, and labeling has 42,000. So when you go to the floor area, this is the area that is each department is occupying. The mixing department occupies 6,000. Those are, because when you talk about the area is always measured in square meters. So these units, you may find that they are 6,000 square meters. So the mixing department sits on that floor. Then the floor area for the fermenting, it is 8,000. Baking takes 4,500. Then maintenance takes 3,500, and labeling takes 3,000. That's in floor area. Then you have the value of machines. These figures are in thousands. So we have 75,000, that is for the mixing. Fermenting has 60,000, baking 35,000, maintenance had 10,000, and final labeling had 45,000. So they are saying PBL incurred the following overheads. Now these are the costs that we failed to trace them to the final cost centers, or to different specific cost centers. Those are in terms of the production department and the service departments. What we fail to allocate is what they have given us down during the year ended or ending 31st December 2019. We have the overhead items and the amounts. One, we have, these are the overhead amounts, these are the overhead items, and these are the overhead amounts. So we have, but remember we have these figures are in thousands. So it is 60,000 for electricity. Rent we incurred 54,000. Depreciation was 18,450. Cleaning was 30,000. Then canteen was 8,000. Then the required says using primary distribution method, apportion overheads to the departments. Here they are saying apportion to the departments. It means we are apportioning everything, these costs that they failed to apportion to these other production and the service department. So let's go to the solution and we'll see how we can handle this. Okay, so we can say that we are starting with we can have a column for particulars or details, particulars. Then we can have a column for the bases, can have a column for, you can put total. Let's put total, but sometimes you may even leave this one, but there's something I want to explain. Allow me put that total. We'll go to the departments themselves. We have mixing, fermenting, and baking. Mixing department, allow me write that department like that. And we have the fermenting department. I also use the short form. And we have the baking department. Then we have also this other service department, which we have the department. And finally, the labeling department. And try to make this one a bit broad. Then this was baking department. I hope we've done that. You can also fill something here, and we try to separate these ones, but even if you don't, these are production department and these are service department. I'm just putting it for you to understand, but even if you don't put it there, because everyone can know that this is production department. Try to remove that. So that's it. So these are our production department. Can try to highlight them and make them a bit broad. Hope everyone can see. Then we are starting with, we have the overheads that were already allocated. These overheads you are seeing here, this amount they gave us, this one is already allocated. What they have given us here, I'm repeating that this is already allocated. So we take it the way it is. So the first one is, you can try to copy it. The first one we said it is 186,750. That is for mixing. These are the overheads. They are already apportioned overheads. Now in the bases here, we say they are already allocated. These ones are allocated because we said if they are allocated, it means we can directly trace them to the specific departments. And what is our total? Not known our total. This was 168,750. But allow me add the other zeros so that will work. We don't, is 168,750. Then this one is 135,000. It is 135,000. This one is 135,000. The other zeros, this one was 101. Check and confirm the figure. It is 1,250. Then I add the other zeros. This one is 30,750,000. 30,750,000. And the last one we have 81 million. So if it is 81 million, yeah, it will be that. Then we get the totals here. We say cosine sum, we sum them up, but we are summing from here up to the last one. This is our total for those ones that are already allocated. So we go to the, now these ones, we are going now to use the bases. We are going, let's first put in these costs, these total costs. We see where they are going to end. We have the total is 60 million. 1, 2, 3, 1, 2, 3. Yeah. Then we put also our rent, which is 54 million. We have the rent, which is 55 million. Then we go to our depreciation, which is 18,450,000. Depreciation is 18,450,000. Hope it is the one. 18,450,000. Then cleaning, we have 30 million. Cleaning cost, we have 30 million. Then we have the last one is the canteen. The canteen is 8 million. Canteen. So the next, having got our particulars or our costs into those departments, now what you do next is to find out which cost drivers or which bases are used to absorb or to allocate or apportion those overheads they have given you. This is depreciation. So when we do that, what we are looking at is finding the appropriate base. For electricity, we are going to select an appropriate base. And we said from here that electricity is going to be absorbed using the kilowatts, because the unit of measurement of electricity is kilowatts. You can take it in that way. But what we are trying to look at is how easily can you trace electricity. The only way we can do that, we cannot trace electricity that is consumed by, let's say, production department. We just follow the production department, that in this department we consumed, let's say, a figure of 10 million. We can't just allocate it like that. We have to use a base or an appropriate base. And in these terms, we are saying that how many kilowatts, because if you know the kilowatts that are spent on each department, we can easily multiply it by the cost of each kilowatt, and we try to know what is the cost that has been incurred in the mixing department. So what we do, we said we have the cost, and the total cost is, for rent, it is 60 million. So it will be this 60 million, we divide it by the total of these, because these are the number of kilowatts that are spent within the production. So what we want to know, and this is the total cost we incurred as far as the electricity is concerned. So what we want to know is how many units, the kilowatts, we consumed as in the whole factory. We consumed this 84,000 plus the 70,000 plus the 47,600 plus the 36,400 plus the 42,000. The total is the what we, as in terms of the kilowatts. So if you want to know what is cost per unit of each kilowatt, you get the cost of 60 million divided by the total. Then what you'll be getting will be the cost per kilowatt or per unit of the kilowatt we are incurring. So when you get that, you can just multiply that by this for each department, for each cost we spend in each department. And that's how we do it. For the side, we are it is the base that we are going to use to allocate the electricity. Then we have rent. Rent, we are saying rent is supposed to go with the floor area, because when you get the meters, the square meters you are going to be utilizing or occupying in a certain building. So we measure that using the floor area. We measure the area, then we determine what you are going to be consuming. But what we want to know is what is the area that is covered by the whole organization. What we shall do to get that, we shall add what mixing department is taking on the floor, then the fermenting, the other service department, what they are taking. We find the total. That total, the total area for the whole organization. When we get that, then we want to know what is the unit cost of each area, of each meter, square meter that is occupied in the organization. When you get that, then you can be able to know the departmental costs. Then we go to the depreciation. Depreciation, we said depreciation is charged on fixed assets. Even if they don't give you the value of the machine, but they give you the book of you may in some questions they may say book value and you get confused. Book value, it is what is remaining when you deduct, after deducting the accumulated depreciation that has been incurred. So we've confirmed that depreciation is going to be going within the floor area. The next overhead we incurred is the cleaning cost. Cleaning cost, we incurred 30 million, but that 30 million we did incur the in cleaning, but we want to know what was the area that we are going to be cleaning. Cleaning overhead is charged to floor area. That is the appropriate base. But if the floor area, if it wasn't there, then we could go by the number of workers. But since we have the floor area, we first know that since, yes, we are incurring the cleaning cost, but what is the area we are going to clean, determine the cost. Because you can just know the area you are going to clean, then you determine the cost you are going to be after cleaning. But you know, when you are cleaning, you use employees. There it means the employees, they are coming as a second option, because you first get the area and you determine the cost. From there, you get the number of people who are going to be working. Hope you don't get confused from there, because most of the people could charge the cleaning cost on number of workers, but that's wrong. You only do that when the floor area is not given. Then the last one, we have the canteen. Canteen, we don't mean here we are meaning the service they are getting. Who consumes that service is the number of workers, because those canteens, most of the times they are when there is, you find that there is a canteen or a place where they sell something, consuming most of the time is perishable goods, what they can consume, but those are consumed by the workers. So the cost of running that canteen is, we can directly apportion number of workers, because when the workers are many, we can determine how many when we need that we have more workers, we can determine how much we are going to be incurring in the canteen. And because the demand is there, people are there who are going to be eating what we are selling in the canteen. When the people are many, we expect that the cost is also going to increase. And that's how we narrate that. With that, then allow us to go ahead and execute what we discussed, and we see how we can finalize this. It is very easy, so I hope you can be able to understand it. So what we are going to first do is to first get the totals of these bases. Here we've said that the rent, that electricity is going with the kilowatts, and we said the rent is with the floor area, and depreciation is going with the value of the machine, Then we said cleaning is going with the floor area, plus canteen, which goes with the number of workers. They used the NO. Let me also use that, number of workers. That's how we do that. Then the next step is to get the total costs for the bases. So here we are going to be talking about bases. We have The first one is kilowatts. The second one is floor area. The third one is value of machine. The fourth one is number of workers. So we can try to find their total. And remember, we are using the same in here. We are comparing these bases. So I'm going to just be putting them the way they are in the same line so that you don't get confused. We have the number of workers. We have 39, 36. We have number of workers here. Sorry, this one is supposed to be O. Number of workers here, they are 39. And here they are 36. I hope so. They are 36. This is 33 and 12. 33, 12. And the last one is 30. So the last one is 30. We can go to the number of the value of machine, or we select what is next. The next one is kilowatts. That's kilowatts. This is 84,000. The other one is 70,000. 70,000. Then 47,450. 47,600. Then 36,400. This is 36,400,000. Remember, we have the zeros there. This is 600. 1, 2, 3. 1, 2, 3. Oh, sorry. These are, I've picked a long figures. This is 42,000. Here we don't have the zeros. This one is 42,000. These ones we don't have these 3 zeros. Sorry for that. 2, 3. 1, 2, 3. So we go to the next one. The next one was floor area. That is 6,000, 8,000. Floor area 6,000. Floor area here we have 6,000. Here we have 8,000. Then this one we have 4,500 and 3,500. This one is 4,500 and 3,500. Then we have the last one. We have 3,000. 1, 2, 3. Then one can go to the remaining one. That is the value. This is 75,000, but remember we have these zeros, 75 and 65, 75 and 60. This is 75 million. Then this is 60 million. 1, 2, 3, 1. Then 3510. Have 35 million. 1, 2, 3. 10 million. 1, 2, 3. 1, 2, 3. The last one. 1, 2, 3. 1, 2, 3. So we've got that. But remember, this one is not part of one is up. So we are saying those are the bases, and merge this one so that will remain. We don't get confused up here. These are the bases we have, and we said what you want to total. So we can put the total here, can put the totals, equals sign, sum. Said we want the totals from here up to there. Let's enter, that's the total. These are the number of kilowatts we incurred. Double click here and we get those ones. Then this one we just enlarge a bit and we get our, these are the costs we incurred, the totals, the total kilowatts. These are the number of kilowatts we incurred. These are the number of the floor area. They are 25,000 meters squared. Then the total value of the machines, that is the cost, and the number of workers, they were 150. So what happens is that if you want to get for this department, we said can go here and we say for mixing department. Now we are distributing, let's say we are distributing electricity. So what we want to get is our mixing department. It will be this, allow me not here put, we said we are going to be using the total overhead, that is total overhead as our formula. The total overheads can put this over the total department shares. Then whatever we will multiply it by, whatever we get, it will multiply it by we multiply it by, I don't want it to get underlined, we multiply it by, allow me stop there, department share, like that. This is the formula we are going to be using to get our absorbed overhead. The whole of this will be giving us the absorbed overhead for each. So I'm going to be putting in directly, not computing each, or maybe I can try to illustrate for you one, then the rest I do them from up. Mixing department will be equaling to this. Let me not even put equal sign, you'll be seeing it. It will be equaling to our total cost in terms of electricity we spent on electricity. It was 60 million, 123. Then divide by the total number of kilowatts, which were 280,000. Then the answer we get, we multiply it by each department contribution. For maintaining the mixing department, we incurred 84,000, and that's how we get each of what you've seen there. This one is, let us put it in a bracket so that you can be able to identify it. You can even highlight it, because I'm going to be doing one, then the rest we can do them from there because we are using Excel. Then this one will be giving us, let me try to compute it here, is equal sign, this divide by this total. Now this, what you are seeing it here, will be, this will be the unity cost of kilowatts. Can try to, that's it, and I hope you can be able to see it very well. That I wanted to wrap it, but there is no way it can. Then hope you are able to see what I'm representing, and we said it is equaling to that, what you are seeing here. This is the unity cost. So if you multiply this times this, you will be getting exactly what we want. So it will be this cosine this, multiply that by the number of kilowatts. So for this one, it will be equaling to 1888. That is 18 million. Sorry, it's 18 million. 123. That will be the answer. So it will be this 18 million that we shall be taking. It will be this 18 million that we shall be taking here. Hope you've seen how we get each and everything. Then we can be able to understand each and everything of what we are computing. So allow me just put everything in here, but I'm going to be explaining as I'm putting them there. We said equal sign this, divide by this, which is the total number of kilowatts. Then we multiply the answer by this, that is spent to get for the mixing department. So in the mixing department, we spend this amount. So if it will be the same for the rest of, sorry, we are supposed to be doing it each, because they are not in line. These ones are not in line with these formats. So that's why it is bringing that. I hope we'll do it each and we'll be able to know how we can. It is equal sign because we shall be also following. It will be this, divide by this, then we multiply by this. There you are following. Let's enter. Then for it will be this, divide by this, and multiply it by this. Then for this one, it will be this, divide by this, then we multiply it by what we've incurred. It will be this, divide by this, multiply it by this. Then we go to this. It will be the same way. I'm not going to be repeating this because it is very easy for you to understand. So we can go to the floor area, to the floor area, and we apportion the rent. And whatever you are seeing starting from here, this is what they call apportionment, but this was allocation. It is equal sign this divide by the total of the floor area, this we multiply by this, will be giving us that. Then this one will be equal to this, divide by this, then multiply it by this. Then this one will be cosine this, divide by this, multiply it by this. Here it will be cosine this, divide by this, multiply by this. Cosine the total cost, divide by the total area, multiply it by the area for labeling department, so that we can get the labeling cost. Then this one will be equal sign. We are on depreciation, so depreciation we are taking this as our total base. It will be this divide by this, multiply it by this. What I want you to understand is that when you add up this department and this department plus these ones, all of these, they must give you these totals in each column. If let's say you add this and this and this and this and this, they must give you this. We shall automate that. The other one, the reason why I just filled them is because I wanted to show you how you can first do that, but you are sure what you are filling in here must be equaling to this. So it will be cosine this, divide by, so now I'm on cleaning, divide by the cleaning. We said it is going by floor area, then we multiply by this. Then you can proceed with this. We said it is this, divide by, for the depreciation it is number of the total value, which is that, multiply by this. Sorry, we've done mistake. That must be mistake. Say the cosine this, divide by this, then we multiply by this. Oh, sorry, we've multiplied again mistake to this, divide by this, then we multiply by this line. We are coming here. It will be cosine this, divide by this, then we multiply by this line here. Cosine this, divide by this, and we multiply by this. That's why I put them in the same line so that you can be able to follow. It is cosine this, divide by this, then multiply it by this. Departmental contribution. So we said for this one it is cosine this, the cleaning cost is incurred as a whole, divided by the total floor area, then we multiply by the area that is occupied by the fermenting department. We'll be giving that cost. Cosine this, divide by this, multiply it by this, the corresponding is cosine this, divide by this, then we multiply it by the corresponding area. It is cosine this, divide by this, then we multiply it by this. So we go to the last one. The last one says is this. We are getting by the number of hours, which are these ones. Oh, sorry, it is this, divide by the number of hours, then we multiply by the number of employees. These are number of employees that are in that department. Sorry, is equal sign this, divide by, then we multiply them by 39, and we'll be getting that. So it will be equal sign this, divide by the total number of employees, which are 150, multiply the number of employees in that department, which are 36. We shall be getting that. Equal sign this, divide by total number of employees, and we multiply by the number of employees that are in that department. Equal sign this, divide by total number of employees, and we multiply by the number of employees that are in that department. Equals sign this, divide by the total number of employees multiplied by the number of employees in that department. Hope it's fine now with you guys. I hope even if I just remove these ones, we can try to, but I'm not going to remove them because when I remove them, they are going to disorganize my work because I've been basing on these ones. But we can try to prove it here, and we set totals. We want to prove, this is proof that what we are getting is exactly the same. We are saying equal sign with sum, but we are summing from here, the totals are not included. So we are proving that what we've done is correct. When double click here, we must be getting the same because we are seeing the ones which are here, they are the ones here. So we can make these ones a bit broad, and you see that to prove that our answers are okay. Then we don't stop here. We also get the totals. Remember, even the totals, these totals of the overheads we've incurred, they must be tallying. When you add this one, the grand totals here, they must be tallying with the grand totals we are going to get from here. Let me here be putting the grand totals. The grand totals for that is supposed to be this sum. We are summing for all of this. So this cost, when we add up these ones, the whole of what we are going to be getting from here, it must give us the same like this one. So we can also try to find out the sum for each, or we can even just do like this, add up this, get equal sign, sum. We are summing this, the whole of this. Since we want to prove, let's start from here so that we can prove it well. Sum of this, because if you start from there, we can't prove it. That's the cost we've got. But we want to confirm whether when we add this plus this plus this plus this plus this, we get this. We prove it from here. We say equal sign sum. Now we are summing from to this last one. Then you close. So you are seeing what we have here is the same as what we have when you add this one. That is how you prove that you've done exactly the same thing, because you can't, when you do the wrong way, you will not be getting the same answers. And there we are done. That's all we needed for each. So we can put a heading here, and our heading is going to be, insert the last one, and we call it, this is our cost sheet. Start with the name of the company, cost sheet, using primary apportionment. For the year ended, you can even put for the year ended, but we can stop here. Maybe you can add the name of the company. It was PBL. Can put here PBL cost sheet for the year ended. For the year ending, because they use the ending 31st December 2019. And try to merge this so that it is in the middle. So we've done exactly what they wanted. So we can try to put the currency. We can try to put the separators here so that we can be able to get those values when they are bit. And even these ones, you can try to make them a bit broad. Can broad these ones, and we know that's welcome back, viewers. This is your tutor CPH House Cafe, and today we are going to be continuing our series on overheads. And the last video we saw how we apportion and allocate overhead costs to the cost centers, both the production and the service department, and that's what we call the primary apportionment. But having made that primary apportionment, now the next thing or the next step is to reapportion the service department costs to the production departments. Here, what we are apportioning, we are apportioning the services, the service department costs, or the costs we've incurred or we've allocated in the service department. We are removing the whole of that cost and we are assigning them to, or we are distributing them to the production departments. And the reason why we are doing so is that in the service department, there is nothing like production taking place there, because what these service departments are doing, they only offer support to the production department so that the production can take place. Some of these, some of the examples of the service departments we can talk about, it may be the stores department. We say the stores department is the one storing raw materials that has been used in the production department. So the storage costs we've incurred, we apportion them to the production so that we accumulate them. We are piling up all the costs in the production department. The other one, we can talk about the maintenance department. That's where the machines that are used in the production department, that's where they get repairs from. So the repairs cost is supposed to be taken to to the production department so that we accumulate that and we get a total cost that can be identified on the product at the end of the day. And the indirect costs, the indirect materials that are used in the stores department and the maintenance department, we are supposed to remove them and we put them into the production. The reason why we are doing so is because in the service department, there is nothing like production taking place there. What we are interested in is to know the total production costs, because those service department, they were just helping the production. So we accumulate them, since some of them, they consist of the production costs. So we have to accumulate them that side so that we get the production cost. And that's the reason we are doing so. And the whole of that, the process we are going through is called the secondary apportionment. The first one was to allocate costs to where they were incurred. That was primary apportionment. Now we are reapportioning the service department costs to the production costs. We can read through the notes. The notes are saying the primary distribution of overheads assigns overhead costs to different departments. However, it's important to further assign service department costs to production department, because the service department do not themselves manufacture anything. They don't manufacture anything. But the production department, which performs manufacturing activities or transformation activities, supported by the service department to undertake production process, and that's called secondary apportionment. These costs are reapportioned to the production department depending on how much each production department has benefited from the service department, or to the extent to which a service department has been used by the production department. What happens is that when, let's say, these machines that are used in the production department, you find them, you may find that in a certain month or a certain period of time, you may find that the machines have not been maintained or they have not been repaired. They have been working, they did not break down. So it means that the cost that would have been incurred in the manufacturing department, the maintenance department, has not been incurred. So it means we are only allocating these costs from the service department to the production department on the basis of how those production departments have used those services that are offered in those service departments. And these are some of the methods we base on to allocate those costs or to share those costs from the service department to the production department. And the purpose as to why we are portioning these costs is that we want to accumulate all the overheads that are incurred in the service department, and we will link them to the production cost centers. The reason why we are doing so, we want to accumulate those costs at once. When we put those costs in the production department, from there, because the last step says we are absorbing the costs. What are we absorbing? We are absorbing costs from the production department, because that's where the production takes place. And we are relating those costs to the final outputs, what we have produced out. It may be in terms of we are relating it on each unit, that is a unit cost, or the whole production cost that has been incurred. That's what we call a secondary apportionment, and we have the methods that can help us do that, can help us reapportion those service department costs, the production costs. One of them is direct method, and in this direct method, we are going to see how we apportion these costs. In the next videos, we have the elimination method or the step-up method, the repeated or the continuous method, and finally the simultaneous method. That's how we do that. And in each of these methods, I'm going to pick an examination question, that's a past paper question, and we'll look at it. We try to know how each of these costs can be shared from the service department to the production department using the whole of those methods. So follow and subscribe so that you can be able to, so that you will be able to receive whatever I'll be posting, because those videos are coming. I'm posting these videos frequently so that you can be able to learn and we try to understand more. Thank you for watching. Welcome back, viewers. A good evening to everyone. Today we are going to continue our series on overheads, and we've picked a question, that is question 6, March 2021. It is question paper, CPA question paper, paper 7, and we are going to be doing secondary apportionment since we finished the primary apportionments. So the question says, Designers World Limited specializes in production of world-class garments for sale to all age groups in Uganda. DWL's main product is the vitenge, which are popular among the youth and the elderly. DWL has 3 departments, that is 3 production departments, namely the machining department, cutting and the finishing department, and 2 service departments, namely the quality assurance and the marketing department. During the year ended 31st December 2020, DWL incurred the following overhead in the production and sale of the vitenge throughout the year. We have the production departments, which are listed from the machining, cutting, and finishing department, plus their costs in million shillings. So we have the service departments, that is the quality assurance, and the marketing department. With the below it says a technical assessment conducted at the year ended revealed that service department overheads were consumed by other departments in the following proportions. These are the proportions. And we are seeing we have the machining, cutting, and the finishing. That's the production department. Then these are the service departments. Here we have the distribution per each department. We are seeing that the quality assurance is giving out 30 to machining, 20 to cutting, and 40 to cutting. These are just proportions, and it doesn't give to itself, so there is a dash, and 10% to its fellow service department, that is 10. It means that even this quality assurance helps to service department, that is the marketing, to sustain. Then the marketing department also gives 20% to the machining, 25% to cutting, 50 to finishing, 5 to quality assurance, but it doesn't give to itself. Required, we have here it's saying using simultaneous equation method, prepare DW's secondary overhead analysis sheet for the year ended 31st December 2020, 10 marks. So without wasting time, we can proceed and we'll see how we can do and get the production costs that are going to be increased by adding more from the service department. So we go to the solution, and here we are made certain summary from what they have given us. We said we start with the name of the company. You can make it in 3 lines. You start with the name of the company, what you are preparing, and the period. So I'm going to be using this question to take you through all the 5 methods that are used in the secondary apportionment. What we are looking at here is that we have already apportioned these costs to different departments, including the service department. Now the next step after the primary apportionment is to reapportion the service department costs to the production costs. The reason why we are doing so is because in the service departments, there is nothing like production taking place there. We don't produce anything from the service department. So we have to transfer all the costs we've incurred in the service department to the production costs so that they can be part of the units that are going to be produced out. That's main reason why we are doing so. And they have given us the basis of how we can do that. So we are going to use this question because if I just take you direct to the simultaneous, it will be a bit confusing. So allow me to take you through the direct method, the elimination, continuous, and the step up, or the simultaneous, so that we get to know each and everything. I'm going to be using one question that will help us to understand each and everything before we go to the ones which are a bit complicated. We say we have the production departments and the service departments. These are distributed in we start with the particulars, put the bases. We use, I say this total you can ignore, but I've put it for a reason. There is something I want to explain to you. Here there is nothing that is given there. So we are going to, these are the machining department, cutting department, finishing department. These are the production. Then this is the service department as they were given in the question here. These are the ones I've just analyzed. And what we have here, the whole of this is primary apportionment. That's where the primary apportionment is stopping. So what comes next is to remove these costs and we put them into the production department, and that's what we call the secondary apportionment. But to give you a brief on the direct method, one, the main emphasis here is to make sure that there is no inter-service sharing within the service departments. What do I mean by inter-service components being not allowed in the direct method is that you are seeing that here the quality assurance, it distributed the proportion of 10 to the marketing department. What the direct method suggests is that when we are distributing these production costs, we give them out to the extent that we don't give service departments, they don't get anything. We distribute whatever is in the service department to the production without distributing this. So what it means here, we shall be considering the 30% that quality assurance gives to machining, the 20% that it gives to cutting, the 40% that it gives to finishing, and we ignore this 10 because this 10 is given to marketing department, of which it is a service department. So we ignore the inter-service component. Also here, when you see that marketing is giving 5% to quality assurance, this one we shall also ignore. and we consider only these ones. That's what we mean by inter-service components. So we are coming here. Let's have some working. The working we are going to, working one is about these bases, what we are going to be using as the bases. One, they gave us that marketing is giving 30. This one is getting 20. This one is getting 40. So these are the ones we are picking. Marketing, we start with the quality assurance, then the marketing department. You can permit me to use, to make it short for the department. And we are seeing that, let me make it in line with what it is distributing. Quality assurance is giving 30, 20 to cutting, and 40. So here we come and say this is getting 30 from the quality assurance, this one is getting 20, and this one is getting, sorry, it is 40. Then this one 20, 25, 50. This is 40, and this one marketing department is giving to machining is 20, 25, and 50. Sorry, here I put much. So what we want to get is the total. We first get the total. Get the total contribution to the whole departments. Now here we are ignoring this service department because we are using direct method. We are excluding them. Let me put it in red so that you can get the difference. So we get the totals here. It will be equal sign. We sum up. It will be this from here to here. Close that. It is 90. Then we also get equal sign here. Sorry, it is equal sign sum from here to here. So this one is 95. You are seeing that it would have been 100%, but we ignored this 10%. And this one would have been 100%, but we ignored 5, and it becomes a 95. The other person can take it in this way, or let me put all. Permit me to use 2A for quality assurance and MD for marketing department. We would say that since this one is giving, it is giving 30, we make it in proportion. We try to reduce them into small figures which we can easily use. If let's say this one is applicable when you have given, if let's say these figures were in thousands, what will you say? At least you reduce them, you say equal sign, you divide by any number that cannot give you a decimal point. Like in these ones, which number that when you divide it throughout, it will be giving you a number that is not in decimals. We may say we divide through by 10. All of them will divide through by 10. It will be equal sign this divide by 10. Even this one will be equal sign this divide by 10. So when you add up plus this one, you'll be getting a 9, and this 9 will be representing this. So the other one you can also reduce the marketing department, and you divide, because we are looking for here, we can't divide by 10, because when you divide by 10, this one will be getting is a point. We get one factor that when you divide throughout, it will not give you the small figure, because when you get the small figures, you will get confused and it will be hard for you to compute. It will be this. We can now divide by 5, because when you divide by 5, at least that one you are getting a whole number. And even this one, when you divide by 5, you'll be getting a whole number, which is 5. Then you cosine this, divide by 5. When you add up the whole of this, this is when you get equal sign with sum, you'll be getting, I think it's 19. Is it 19? It is 17. But this one, I think we've divided differently, because it's supposed to be the equal sign this, not the other 40. Divide by 5. We shall be getting 19 here. So you can either use this or this upper one. When you're using, here we said there is no inter-service component. And the other thing, we don't have any criteria that we follow, whether we start with the one with the smallest or with the highest. But what I can emphasize is that at least we start with the smallest, we end with the biggest. But even if you go the other way around, it's also okay. What we're only interested in is that we don't see the inter-service components when you are using the direct method. So since we are distributing any, me, I'm going to start with the one with the smallest cost, and it's going to be this, which is the quality assurance. It means I'm going to start with the quality assurance. The quality assurance distribute the marketing department. The other person, you can put it here as in ratio, it is 30 to 20 to 50 to 40, which is the quality assurance. Then for this one, you put it is 20 to 25 to 50. But if the digits are very big and you can't just use them here, you can try to reduce them like here. So if you want to get what we incurred, let's say for machining department, it will be what we have here. It will be this divided by this, which is the total. Then we multiply by the cost we are distributing. Now we are distributing this, which will give us that. So what we are distributing this. It is 12,400, 1, 2, 3. And you can put it here as the total. 12,400, 1, 2, 3. That's our total. Then we can go to this and we also say that it is this equal sign this divided by the total proportion multiplied by the cost, which will give us that. And even this one, it will be equal sign this, which is 40 over this multiply by the cost, which will give us that. So when you add this plus this, we must be getting this. If you're not getting that, then you just know that we must have made a mistake. But remember this one, since we are distributing it, we put it in a bracket. So when we put it in a bracket, it will be a negative. So you are seeing it is bringing a negative, meaning it will be this. When you add this, it will turn out to be a 0. So, but this one, we are not distributing anything, so that one receives a 0. When we are done with that, then we distribute the 16 million. This 16 million, it will not give to its other service department, so we shall be getting, this is the total we are distributing. And when we get that, it means here we are going to be having this 20 to be equal sign this divide by this, then we multiply by the cost we are distributing. Or you can click this one, N, press enter. Then equal sign this, the preceding, divide by the total, we multiply it by the amount we are distributing. So it will be equal sign this 50 divided by 95, multiply it by 16 million. Even when you add this plus this plus this, you must be getting this. Here we can also look for the total here. We can try to look for the total, but we can leave that and we put this total there. Cosine sum, we are adding this, adding horizontally. That's what they gave us. So we want to find this. We want to get what is included in that. It will be this equal sign sum. We are summing up from up here. Sorry. From here up to there. It will be giving us that. So we get the total for the whole. Sorry, this one was supposed to be in the bracket because we are distributing it. We distributed that, so it's supposed to be giving us a negative. Then having got our totals, these are our totals. So we can, let me try to highlight them. make them a bit bold, so that will get the difference. So that's how we get these costs. Already we have the whatever, maybe putting them into borders, and you can say that that is done, and that's how we use the direct method to distribute this, because we say this one becoming negative, and when you sum up, you can also try to prove from here, this, the reason why I gave you this total, that when you add this, they will have to give you the figure that we are supposed to be equating to these ones. Like, I can put it here, let me put it here, equal sign, sum, let me put it here. You are seeing that when you add this, make it a bit broad, oh sorry, when you're seeing this amount here, the one we are seeing here, it is the same as the total overhead they gave us up. These totals must be the same. When you add up these, the whole of these costs up, and what you have apportioned here, when you add them up, they must be giving you, they must be equating. That's how you know that what you have done is right. Thank you for watching. I'm posting the others. As we said, you're going to be using the same question to handle each method separately, so that you get to know each and everything. Thank you for watching. Until we meet again. Hello viewers, this is your tutor again, and today we are looking at our second last video about the overhead apportionment using the secondary methods, and the one we are going to be looking at today is elimination method. For this one, I hope you guys, you could be able to understand it very easy, but it's one of the complicated scenarios when we are handling the secondary absorption, but I've tried to simplify it and could be able to understand. One, we have the steps. These are the hardest parts that make candidates to really panic about how they can approach the elimination method. And when you are using elimination method, you follow these steps. There are two. We follow these steps, and there are only two. One is that we follow that the service department that gives out the large number, or that gives out its costs to large number of departments, other departments. What we mean is that if, let's say, we have a service department, like the way we have a service department here, and this service department is giving out more. Let's say we had like 3 service departments, and you find that one of these service department, for it gives out to this, and it gives out to the third service department and these other ones. It means for it is giving out more than these other departments. So if we find that there is one service department that has, or that distributes its overheads to many to many departments, you find we take that one and we distribute that one first. Then there is another scenario whereby they are like 2, as the way you are seeing them here. If they are 2, then what we do with those ones, we just compare which service department gives out the highest cost to others. In this term, we are talking about the amount, the service department which has the highest overhead is distributed first. Here you are seeing that the quality assurance department is giving out 12,400,000, but the marketing department is giving out 16 million. So in this case, if we are using that second step, we consider the one which has the highest cost, which is 16 million, and we distribute that one first. Please, I repeat, we are saying that the service department that has or giving out the largest number of the overhead to other departments. If that service department is giving out to more than what these other service departments are giving, then we start distributing that. And giving out more than it may be in terms of percentage, you may come here and you find that this one is distributing 10. These other ones, they are distributing 5. So we start distributing with the one that has the highest percentage. You can term it in percentage. You may find that this one, yes, it is the one having the highest percentage in terms of distributing to the others. If you compare what this department is giving and what other, if let's say there were 3 service departments and they were supposed to give out to all of these ones, you find that this one is, let's say this one is giving 50 and this one is giving 20 and the other one is giving 5. You may, when the other two, you'll find that for them, they are just giving out 20% or 25, but this one is giving out the whole of it. Like let's say if it was giving out 50 or 30, it means that this one is giving out more percentage of its cost to others. That is the first scenario. If you find that it's not like that, then we take the service that gives out a highest cost. In this term, it will be the 16 million. When it is one giving out the highest cost to others, we take that one and we distribute it first. Those are the 2 steps how we determine which one is supposed to be distributed first. Then the second scenario is that when we distribute, when that department which has, let's say, the highest cost distributes out its overhead to the other departments, when we are redistributing, we don't distribute it again. We distribute it once, and if we are done with that department, we don't redistribute to that department again. That's why it is called elimination. It's like we are eliminating that department which has already given out its overheads. It is called elimination or step distribution. It is called a step distribution because we first giving out to all the departments, and at the end of the day, we stop with the first service department cost and we distribute to others without allowing the second inter-service department. I hope you get that. I know you may be a bit confused with the explanation, but we are going to do it and we see how it goes. It is very easy, but it becomes very complicated when let's say departments are more than, if let's say there are 4. But on this level, I'm sure if they have given you more than, they can just do like 3 and they can't exceed there. Like this service department, they may go up to 3 and they give you 3 service department. But as for now, since we're just starting, let's concentrate on this. We know how to do, what to do, and we shall be able to reach that point where we have so many service departments with different contributions. So we can go to the question. The question, we said we are going to be using the same question like the one we've been using. It's question 6, March 2021. Hope you've been able to write it down, but we can go through it together. And we say that Designers World Limited specializes in production of world-class garments for sale to all age groups in Uganda. DWL's main product is vitenge, which are popular amongst the youth and the elderly. DWL has 3 production departments, namely the machining, cutting, and finishing departments, and the 2 service departments, namely the quality assurance and the maintenance, the marketing department. During the December 2020, DWL incurred the following overheads in production and sale vitenge throughout the year. We have the production department. These are the departments. We have the service departments. These are the ones. and the costs, the overheads we incurred. They are saying that a technical assessment conducted at the year end revealed that service department overheads were consumed by other departments in the following proportions. So we have the machining, we have the quality assurance. The quality assurance is giving machining 30, 20 to cutting, 40 to finishing, and it doesn't give to itself. So it gives out to its fellow service department and it gives it 10. That's marketing. Then marketing distributes 20 to machining, 25 to cutting, 50 to finishing, and 5 to quality assurance, but it doesn't give to itself. So the required, we said we are going to be using one question and we do the rest. So the last one is going to be looking at how we can use the simultaneous equation, and we try to find the secondary apportionment of those overheads. So we go to the elimination. Here we can change it a bit. We say elimination. It is called step elimination. So those are the ones. These are the costs they gave us. This is what they gave us in the question. And we said that we can either start by distributing the one that gives out a highest percentage to the other, or we go by the one which has a highest cost and distributes its cost to other departments, including its fellow service department. And when we are done with that, we don't redistribute again to the service department that has given out. So we get the workings. These are going to be our workings. I can put it here, workings. Say working 1. These are going to be our bases. The ones we are looking at the quality assurance. Then we have the marketing department. So we can try to enlarge this. When we enlarge that, let me remove this one here to put it here. These are bases. So we know that from here, we know that this quality assurance was giving 30 to machining, 20 and 40 to other fellow departments. So it is 30. This one is getting 30. Sorry, these ones were bases. So here it was giving out, these are supposed to be our totals. Then here it is giving out 30. This is giving out 30. And this one is giving 20 and 40. This one is 20. Then the other one is 40. And it doesn't give itself. So, sorry. It's supposed to be here. 30, 20, 40. It doesn't give to itself, so it's a 0, then 10. And delete this. Then the marketing department is giving out 20, 25, and 50. It is 20, 25, 50, and 5. Then it doesn't give out to itself, so this one will be a 0. I hope I'm not going to go the other way. The other way I was getting the proportions. I hope now you can be able to get that. Then here we said the one which gives out, first of all, we first compare what gives out the highest. Is giving out the highest percentage, which is 10%. Since it is giving out the highest percentage, we shall take this. And the other scenario we can compare about, you just choose any of them so long as it is applicable. Any of the two scenarios. If the service departments are more than 2, we use the percentages, what total is distributed to others. But if they are 2, you just compare the highest, the service department that gives out the highest cost, and it is going to be this. But if they are more than 2, of course, from there you can't compare. You may find that you are not, it's hard for you to compare. Then you look for the percentages. We have 2 scenarios. So we are going to begin with our marketing department. Hope you've seen our marketing department, and the ratios are 20 to 25 to 50, then to 5. Sorry, I've taken this and I was supposed to take this because it is this one. Let's first check. It is marketing department, it is service quality assurance that gives out a highest. Quality assurance gives out a highest percentage, but here we said we take the one which has the highest cost. We distribute the one that is giving out a highest cost, which was going to be marketing. Sorry for that. It's marketing. Then the last one was giving 50 to then 5. Marketing department. So it's marketing department that we are going to issue to first exhaust first before we go to the others. So it is 16 million. It is 10. Yeah, supposed to put closing bracket. Yeah, so it's going to be that which is going to be giving out the highest. So it will be this to get what will be for machining department. It will be 20. Then we get also the total. We can get the total here. It is this. Sorry. It is equal sign sum. We are summing up from here to the last one, and we close the brackets. Then we press enter. So it's giving us 100. Even here you can just put 100. But remember here we said when we distribute this, we are no longer going to distribute the last one. If marketing department gives out its component to this, then when we are distributing the quality assurance, the quality assurance will not be giving to the marketing. So this one will not be there. Hope you are getting why. That one will not be there. So it will mean that this one, they will just distribute direct to whatever, to this production department, because they are just two. If there were 3, then we could be remaining with this one could be giving the other 2, but not giving this one. I hope you guys, you can pick this from here to there. Press enter, and it will be 90. Meaning we've given out the other, we've eliminated what this quality assurance is giving to this. Hope you guys, you can get it very clearly. It is equal sign this. So we are distributing this, divide by this, then multiply, we multiply that one by this cost we are distributing. It will be that. So when we've got that, then it means we are going to be getting this one. This one will be the same as equal sign this, divide by this, then we multiply by this. Equal sign that will be this 50, divide by this, then we multiply by this. Then it will give to its fellow service department. So what happens is that when now we are distributing the quality assurance, we don't distribute to the marketing. We only consider what this is giving out to these other departments. So it will come to be the quality assurance, which will be in terms of the 30 to 20 to 40. That will be that. Then we try to get what is supposed to be in the machining department. It will be this, divide by this, then we multiply by the total cost. Now the total cost, it will be this plus this. So we can try to first get the total cost before we reach there. Can try to first get the total, can first try to get the total. It will be this plus this. It is this. It means that that's what we are going to be distributing, and we shall put that one in the bracket. We say it is 13200 triple zeros. Then we put it across the bracket. We say now we are distributing that. So if you are distributing that, it means you can try to put this figure outside here. It is 13,200, and we remove it from here. So we said we are distributing to be equal sign this. Remember, we are distributing the quality assurance. It is this divided by this. We multiply it by our total. We've got this enter, and we can also get for this one, it will be equal sign this, which is 20 divided by 90. We multiply by this. Then the last one will be equal sign this, divide by 40, 90, multiply by the amount we are distributing. So when you add this plus this, you must be getting this. But this one gets 0. And that's all, and we are done. So we'll get these totals, can get the totals from here, equal sign sum, the summing from here to there. Said we are putting that one just to confirm, to act as our proof. Totals, we said we start with this cosine sum, the summing from up. We include even what was already allocated, and we go by this side. So when we are done with that, we said we proof from, we get our proof. This is proof. But when you're in an exam, you don't put this word proof, you just add up and you go. You're adding this to that. It must be giving you the same answer that like the one up. So that's how we get that. Maybe we can try to make these ones, we put some borders. So we stop here, put in some borders so that it looks a bit. We said this is not empty, we have a 0 and a 0 here. We said the other 10 we don't include it, it's eliminated. So that's how we handle that. I hope you guys you've mastered that, and we can proceed to the last one in the next video, which was simultaneous equation, and we see how we do that. Then we wind up the overheads by doing the absorptions, and we'll go to the next chapter. Thank you for watching. God bless you. Good day. This is your tutor CPH Oscar, and today we are going to continue our series on overhead analysis or overhead costing, and we are still on secondary apportionment. The reason as to why we are putting more emphasis on absorption and overhead analysis is because this overhead absorption and analysis is what makes everything that is done in cost and management accounting. It's the main aim, because after knowing the cost of the product, then we can be able to do the rest of the things. So I'm emphasizing and I'm taking my own time to do each and every video separate so that you get to know the things, and because when you understand this, the rest of the things are going to be easy, because most of the topics we shall be seeing, they are going to be rotating on this same topic of absorption and overhead analysis, because it's a bit challenging. That's why I'm taking my own time to explain each and everything. We said we are using the same question, and it is March 2021, question 6, and we are saying the question wanted a simultaneous equation, but we said we are going to use that same question. We try and understand all the formulas, all the methods that are used within the overhead apportionment using the secondary method, where we transfer the overhead costs from the service department to the production departments. So the question says, designers specializes in production of world-class garments for sale to all age groups in Uganda. DWL's main product is the Bitange, which are particular among the youth and the elderly. DWL has 3 production departments, namely the machining, cutting, and finishing department. Those are the 3 production departments, and 2 service departments, which include the quality assurance and the marketing department. During the year ended 31st December 2020, DW incurred the following overheads in the production and sale of Bitange throughout the year. We have the production departments and we have the overhead costs we've incurred in shillings. So these figures that are given down there in thousands, because we are seeing shillings and thousands in inverted commas. So we proceed with the question. It says a technical assessment conducted at the year end revealed that service department overheads were consumed by other departments in the following proportions. So these are the proportions of how we distributed these service departments into all the other departments, including the service departments themselves. And the question says using simultaneous, but here we are going to be looking at the repeated. We finished the direct method. If you have not yet seen it, just go and check out. We've already posted that, but here we are going to be looking at the repeated distribution or the continuous. What means in the continuous or the repeated distribution or reapportionment of overheads is one scenario that we base on is that we distribute all the service department costs. We distribute it to both the production and the service department. It is the opposite of the direct, where the direct says we are distributing to only production department. This one says we are distributing it to each and every department within the organization. But what happens is that by the time we are distributing this figure, this keeps on reducing. When it reduces, we make sure that we stop at a point where the figure is inefficient or immaterial, that you can even ignore. If, let's say, you've been working in millions and you find the figure is in, let's say, 1 shilling, you can that one ignore and you say, you quote at the end and you say this and is immaterial. We assume that that is immaterial, depending on where you've reached, because we distribute everything till the figure becomes immaterial or it is completely finished to 0. So we can go ahead and see this, how we're going to be solving this. And I've made the title. The title says DW cost sheet using the repeated or the continuous method for the period ended 31st December 2020. So we have the production departments and the service departments plus what they have given us as in terms of what we are going to be using, because here what I've just analyzed is what they have given us in the question. We have these costs, they were given to us, and these are the ones we are going to be using as our appropriate basis of reapportioning these costs from the service department to the other production departments. But what this method says is that you distribute these service departments to each other throughout those departments from the production to the service until those service departments becomes immaterial. Remember, here we are just distributing only the service department, but here we allow inter-service components. So we can proceed that when you're seeing like here, this quality assurance is giving 30, this one is giving 20, and it gives this one 40. It also gives out the 10 to the marketing department. It means when you're using repeated distribution or the continuous distribution, even this 10 is going to be considered. The other time in direct method, we considered only these ones, but even this one is going to be considered. The same way like the marketing is giving this one, this one, it also gives us 5 to the quality assurance, which is the service department too. So we can come here and say, can make our workings from here, workings, and working 1. Then we are looking at the bases. So we have the quality assurance. Then you have our marketing department. So let me put it exactly in the same way they are. And the totals, I'm going to put them here in that column for totals. We are saying that quality assurance gives 30, 20, and 40. This is 30, 20, and 40. So what will be, then it also gives out to whatever. It doesn't give to itself, so this one is going to be 0. So it gives out to this also by, it gives it 10. So what is this marketing department? For it, it gives out 20, 25, 50, and 5. 20, 25, 20, 25, 50. This is 20, 25, 50, and 5. But it doesn't give to itself. So there we can leave, we put a 0. But they told us we are distributing even the service department, we give to them. So we shall get the total from here, since we are even including all of them. Close. Let's enter, that's 100. Sum coming from here to that. It's also giving us a total. Let me also put one total, sorry. But what I want you to know is that it's not a must that they're supposed to give you the things in percentage. You may find that in some questions, they are just giving you machine hours. They give you the basis of how they apportion these. So don't get used to only one scenario of setting this question. They may use other machine hours, labor hours, raw material percentages, depending on whatever they want to use, as we saw these overheads, how we can get these bases. We saw how. And the other way is, I've got a question from someone who was asking me if we could as well use the OAR, when we are apportioning these costs. Yes, when you use the OAR, the overhead absorption rates, they will be giving you the same answers. Then, but remember what we are doing here is not absorption. We are not absorbing overheads. We are just apportioning. There is a very big difference between apportioning and absorbing. When you're absorbing, you absorb when all the costs have reached the production department, and we are absorbing into the final products. But here we have not yet reached to the final products or the production. There are some costs which are still within the service department. That's why here we are using proportions, and we are just getting proportions, because if you are to use the OAR, you could get this departmental cost, this service we are distributing, you get this, you divide by the total, you multiply by what this department is contributing to each. You'll be getting the same answers, because it's like someone saying A, multiply it by B, and then divide by C. It will be the same way like someone saying B, multiply it by A, and divide by C. Those things are going to give you the same answers. Those ones are giving you same answers, so long as you are not changing whatever the figures, that instead of multiplying by A, you multiply by C. So I hope that one is okay, is cleared. Even if you use the OAR, you will still get the same answer, because you'll be getting this, divide by this, multiply by 30, of which it is the same as saying 30 over 100 times this. Hope we've cleared that. Then we can proceed with our scenarios. We can proceed, but here, the other thing, they don't specify that you are supposed to start with this scenario. But as I said in my first video, that we go by what service, by which this service department is giving us less cost, or which has a less cost, is the one we start with, because there is somewhere we are going to get an explanation that is a bit different from this. That's why I'm following this stuff, so that you can be able not to get confused when we reach there. So we are starting with distributing the quality assurance. The other person could start with the marketing department, there is no problem, but I suggest we go by this, the one that gives the less cost first. We go in the ascending order so that we can be able to understand. This one, how are we taking it? We can go by the other ratios we said. We are using ratios, and the other way you can also say is that all, let me put all, because I know people may need different views on different issues. Permit me to use QA for quality assurance and MD for marketing department. You can also divide this one you divide by 10, and this one you divide by 5, like the same way. This one would be 3, it will be equal sign this divide by 10, which will give us 3. This one will give us 2. This one will give us 4. This one will be 0, and this one will be 1. So for this second one, we divide it. This one will be a 0, and for this one will be a 1. This one will be a 10, because when you divide 50 divide by 5, you get 10, and it will be 5, and the last one will be 4. So when we sum up, you'll still get the same, because this one divided by 5, what will that be? You can just sum up from here, you get sum. We are summing from here to, we are saying sum starting from here to there. It will give us a 20, and even this one we can sum up, cosine sum from here to there. So we start distributing. This is 10, this is 20. So we can start distributing. That we are distributing, we go with the figures. Since they are not big enough, we can still take these 30s, 30 to 20 to 40, then to 10, because we are giving also this service department, but this one is 0. Then the next one will be distributing marketing department. Permit me to use that. Then this will be 20 to 25 to 50 to 5. This 5 we are seeing here. So you can put these ones in bracket if you want. These ones you can put them in bracket, that the work looks a bit fine, like that. Then we can get also the totals here for our proving. It will be this, which will go up to that, which will be giving us that. Then we start distributing this. Here we said we are starting with this. We are distributing 1 to 400. So it is that. Let me first remove these borders so that we'll be able to get, we shall put them back when we are done. But this one, since we are distributing this, is supposed to be in brackets. It is what we are distributing. You can either put the totals here, so that what is here and here will sum up to what will be in this. So we start by saying this, divide by our total, multiply it by the cost. The cost is this. Then for this one, it will be cosine this, divide by our total, we multiply it by this. Then for this, it will be cosine this, and this one divide by our total, which is that, and we multiply by that. It will give us that. Even this one will be this cosine this, divide by this, and then multiply by that. It gives that. So having known that, then we can now distribute this marketing department. But remember, This one had 16 million, so it will be 16 plus this. We get what we are going to be distributing. It will be equal of this and that. We get what we are going to be distributing. Close the bracket, press enter. This is what we are distributing out. So we can put it in a bracket. This is what we are distributing out. So it will be, we can keep this total here and we can try to keep this total here so that we get, it is 172400. Because when we keep it here, we can be able to point here. We put this one in a bracket. We can't put it in the bracket because we computed that using the formula. So we can remove that. But the good thing we've known, it is 17240123. That is the total. It means we sum up these two. So we put it in a bracket. Now it will be able to go into our bracket. It means we are distributing it. That's why it is turning out to be a negative. So when we distribute, it will be equal sign this. Now we are distributing the marketing department. It will be this divided by this, then multiply it by this. But this is a negative, so we are multiplying by this. Hope you get what I'm talking about. So we go to the next one. It will be equal sign this divided by this, then we multiply by this. It is equal sign this divided by the total and we multiply by those units. Even for this one, it will be this equal sign this divided by the total and we multiply by this. And we repeat the same way that we are distributing. This one is done because when you add this one plus this one, it will come to 0. That one will be a 0. So when it becomes a 0, we distribute this. We are now distributing 86. It is 862000. It's now the one we are distributing. We are distributing now the quality assurance. This is quality assurance in the same proportion. So we can copy that one the way it is and we paste it here. We are now distributing this. It will be equal sign the same, that percentage divided by this. Then we multiply. Now we are multiplying by this one. It will be that. Then we get equal sign this divide by this, then multiply it by this, give us that. Then it is equal sign this divide by the total, multiply it by the cost we are distributing. Even here it is equal sign this, which is 10, divide by this, then we multiply it by this. Must have made a mistake. I think it is fine. Yeah, it's okay. Thought it's a mistake because when you get 10% of this, you remove 1 0. Then we go to, now we are distributing this. Remember, these costs were in millions. Now it has turned out to go into a very small figure. So now we are distributing this, which is 86. It is 86,200. It is 86,200. So when it becomes a negative, oh, sorry, Control Z. I'm leaving that figure there because it's the one I used to compute some of those figures there. Now we are distributing the marketing department and in the same ratio, which is this, and paste it there, and we go to say this one is going to be equal sign this, which is 20 over 100, multiply it by this. It will give us that. Then it will be equal sign this, divide by this, multiply by this. Then this one will be equal sign this, 40%, divide by 100, multiply it by this. Then for this one, it will be cosine this 5 divided by 100, we multiply it with this. It will be giving us that. So now we are distributing the quality assurance department, and we are distributing this. What we are distributing, we put it in the bracket, it is 4, 3, 10. It is the one we are distributing, and we are distributing now the quality assurance. Quality assurance in the same way, in the same proportion. So we distribute, it will be equal sign this, same percentage, divide by this, multiply by what we are distributing. Even this one will be equal sign this, it is 20 divided by 100, we multiply by this. Then this be cosine this 40% divided by 100, then we multiply by this, we shall be getting that. Even this one, it will be equal to 10 over 100, then we multiply it by this. So now you are seeing the figure, it was from millions, now it became 400. Now from here we can say that this figure is immaterial. The other, you can proceed and you add here the marketing department and you distribute this to all of them. But from here, because if a company loses this 400, we say it is immaterial. And the logic is that this balance you are calling immaterial, when you try to sum up here, the total cost of this one and this one and this one and this one and this one, the difference must be this immaterial figure. We are going to prove it. We come here and we say, we put the totals, we say we call that, we assume, and that figure is immaterial. But if you want, you can proceed when you're in exam and they have not given you, most of the times they give the immaterial figure, they may say that 500 will be immaterial. So when you reach for this amount, you can say it is immaterial. But if they have not given, make sure you calculate until you get 0. Don't get 0 point something. So long as you get 0, you stop there. That's how it is. So these costs, it will be equal sign sum from here up to here. Let's enter. Is that. You can also add this, the whole of that until there. We said, how do we prove? The way we prove this is, let me just put proof. Proof is that when you add plus this, you must be getting this. It will be equal sign sum this to there. You can even proceed from this side, but we are supposed to that. You see this figure? It is not exactly this one, but the difference is this figure we call the immaterial, or the insignificance. When you add it here, let's try to add it here. You shall see that this, we add this plus this, we are getting almost this, meaning that there are some decimals here we've ignored. And that's how we get that. So that's it. And here we are done with that. You can try to put these borders, then this one. That's how we do that. Hope you can be able to understand. And let's go ahead and we see how we can handle the one which is a bit different, that is elimination method or step up. That one is a bit tricky and it has something that you need to be able to understand first. Till we meet again, it's bye for now. Good evening, viewers. This is your tutor CPA Charles Kafil, and today we are ending our series on secondary apportionment, and we are going to look at the simultaneous equation method that we use to prepare secondary overhead analysis sheet. And we are going to use our question, the one we've been using for the first method we handled, and hope you can be able to appreciate how those methods are handled in respect of secondary apportionment. So we are going to use this question 6 part A, that is March 2021 CPA paper. We are saying Designers World Limited specializes in production of world class garments for sale to all age groups in Uganda. DWL's main product is the vitenge, which are popular among the youth and the elderly. DW has 3 production departments, mainly machining, cutting, and finishing department, and we have has 2 service departments, namely the quality assurance and marketing department. During the year ended 31st December 2020, DWL incurred the following overheads in production and sale of vitenge throughout the year. We have the production department, that is machining, which takes an overhead of 64 million, cutting 40,500,000, finishing to 72 million. Then the service department have the quality assurance, which takes 12,400,000, and last one we have the marketing department, which takes 16 million. And as we said earlier, that these are the overheads we allocated as far as these cost centers are concerned, the production and the services. So we go to, they are saying a technical assessment conducted at the year end revealed that service department overheads were consumed by other departments in the following proportions. So they have given us the quality assurance, which gives out 30% to machining, 20 to cutting, finishing we have 40, and it doesn't give to itself, so it gives out to the marketing department at 10. So we have the marketing department, which gives out 20 to the machining, 25 to cutting, 50 to finishing, and 5 to quality assurance. And the last one, we have a dash because marketing department cannot give to itself. So the question is saying, required, using simultaneous equation method, prepare DW's secondary overhead analysis sheet for the year ended 31st December 2020. Allow me give you some brief about the simultaneous equation. The simultaneous equation, as we use an equation and we try to solve that equation and we try to find the unknowns. Method assumes that these overheads you are seeing here, the ones that are already allocated, then they assume that these overheads they are not complete, that they have ignored the inter-service component, whereby they have ignored what this quality assurance was giving to the marketing department. That's what they mean by the inter-service component. It means we are seeing that quality assurance gives 10% to marketing department, and also marketing department gives out 5% the quality assurance. So what they want us to do, or what this method believes, is that we have to first accumulate what these inter-service component, what are they giving themselves. We first allocate them back. When we allocate them back, what in quality assurance contributes to the marketing, we remove it and we put it to the marketing, and what the marketing gives the quality assurance, we remove it, and what we get, we shall just apportion them to the production department without apportioning again to the service departments here. And how do we do that? But it's by forming these equations, and these equations, they are the ones that are going to help us to solve the unknowns so that we can get the costs that is incurred in the department plus what it receives from other department. And when we get that, then we distribute it like the way we did for the direct. But in this time round, we are adding a component that is coming from the other service department. So we can kick off and we see how we can handle this. It's very easy. I hope it will be able for you guys to pick it right. Here we have some analysis that we start with we start with the company name. This is DWL cost sheet using the simultaneous or algebraical methods for the period ended 31st December 2020. You can put it in 3 lines. You start with the name of the company, what you are preparing, and for which period. We have the production departments and the service departments. Here they have already allocated for us these costs, these overheads, and we can try to get a total of these, the whole of these overheads that we sum up from here up to all of those departments. We try to get the cost. So it will be that will be the total cost for the overhead that were incurred in the production, in both the production and the service department. We incurred 200 million and 200 million 400 and 200 million 4 million. It is 204.9 million. So what we are going to be doing is, first we have to form an equation, and we are going to we assume or we let these service departments, because you see here we are looking at the service departments. We can say let X, or we can use any letter. Let's use a normal letter. We can say let Y represent, let Y represent the quality assurance department. Permit me to use that short form. Can make this one broad. Then the other one, we can also let that, let's say we use Z, capital Z, to be equating to represent the marketing department. So having done that, then we can put those ones, can try to put into our formulas. And here we said that we get what each is distributing to the other. And we are seeing from here, let me put quality assurance. This is quality, permit me to use 2L for quality assurance and MD for marketing department. Here we are seeing that this is contributing. Now what confuses students is, one, when you are following these items, you see this quality assurance is giving 10% to the marketing department. Marketing department gives 5% to the quality assurance. So what we want to get is that we are going to get the quality assurance cost. If let's say we are starting with the smallest, we get the quality assurance cost. We add what quality assurance gets from the marketing department. What confuses students is that for them, when they get these costs, they add what it gives out. We are not adding this 10%. We are adding this 5% because this is what quality assurance is receiving from this other department. Here we are talking about the receiving. We get the quality assurance cost, which is 12,400,000 plus 5% of marketing department. Then for the marketing department, it will be the 16 million plus what marketing department is receiving from the quality assurance, which is 10% of quality assurance. I hope you've got that. We say this one, quality assurance is contributing 10, and this one is contributing 5. But remember, we got the totals, we got these totals from here. when we added up the whole of these ones, they gave us 100, 100. It means even if we just say 10%, it is fine. And this one will be 5%. It will be fine. So we shall be saying that it will be, now for quality assurance, for this, let me just proceed from here. We say that we are using this, the cost, which is 12,400,000 plus, we are adding plus what it gets from the service, the other service department. It gets 5% from the marketing department. So it will be plus 5%, you can put like that, of our marketing department. And we said our marketing department, we said let it be Z. So it will be 5% of capital Z. Then for this one, it will be the 16 million plus what it gets from the other service department, which is 10% of the quality assurance. But we said that let Y be equaling to the quality assurance. So this one, it will be capital Y. And that's how we get those values. When you try to analyze them, their Y is equaling to 12,400,000 to 3 plus 5% of Z. And our Z, from here we can say our Z is equaling to 16 million and 10% of Y. So we can try to use any method. We have the substitution method, whereby you just substitute where there is Y, you put the value for Y, because we have Y equaling to this. The whole of this is equaling to Y. So where there is Y, we can put this value. Or we come here where there is Z, we come in this equation and we put in where we see the Z. So we can try to solve them using simultaneous, using substitution method. Then we solve for those values. We said it is Y equaling to this. It will be 124,000 plus 5% of, now this one I'm going to put it in bracket because I have shifted where there is Z. I'm going to put the whole of this. It will be 16, that is 16 million plus 10% of, because here now we can see that we have similar figures of which we can now solve. We find the value of Y. After getting the value of Y, we substitute this one, we substitute where there is Y, we get the value of Z. So we can proceed. We can put this one in Excel. Let me put it in Excel. We get our Y value. Y will be equaling to this. We said it is this 12,400,000 plus, let me put here an equal sign so that we know that we are computing that, is plus 5% of, put the bracket, is 16 million, 123. Sorry, here we shall not get it right. Let's first handle the one in the bracket here. We first open up the bracket, we get 5%. Said we first get the 5% of the 16 million. 123. It will be 800. So what will be the 10%? What will be 5% of 10%? It will be equal sign 5%, which is equal sign 5%. We multiply it by 10%. It will be giving us 0.05. So it means it is 0.05%, but this, remember we have our Y there. It means it will be 0.0, this is percent of Y. Hope you've got that. So when we've got this, then we can add this, or we can transfer this one to the other side. Remember, this is 1y, of which it will be 1 minus this. So what will be 1 equals sign 1 minus this will be giving us this. So if you convert this, what will this be? This one, did you not make mistake? It's 5% here. Put these zeros the way they are. So it is this, then it means, remember here it has the y. So it will be 0.500% y. Remember this one need to go the other side. Since we got the 5% of this and we remained with this, so we transfer this one the other side and we remained with only this. So it means we shall be getting, it will be 124, that is 12,400,000 plus this, the one we have up there. It will be sign plus this. Then what will be the answer? It will be this one. But remember, this one is over y. So now we are dividing. We are dividing to get our final answer. This is y will be equaling to this. We put an equal sign. It will be equaling to this divided by this. And this will be the answer for the y. Hope you got how I got that. If you can't be able to follow, you can just use a calculator from here and you try to get the exact answers. So this is our y. Let's try to submit in this equation and we try to see how we can be able to get the other one. So let's proceed from here. We said z from equation 1, z is equaling to 16 million plus 10% of y. But remember, we've already got y, so z will be equaling to, can put here our values, and we say that it will be equal sign this is 16 million plus, we can open the brackets, we say 10%, we open the brackets, we put in our figure, this, can close the bracket and press enter. Sorry, here we can't get it. We can't get that. So it is 16 million, 1 plus 10%. Let's put this one in bracket. We say it is 10%, multiply it by this. It has allowed that. Yeah, that's our z. So having got these figures, we can just submit them in here. And we said our z is equaling to department. So we shall be here. The marketing department, we said the marketing department is 1732663.1, even if I ignore that. So when we've got that, then we can also put the one for y, which was 13,266,332. We round off. So we've got that. We can now start apportioning, but we are apportioning these ones. Now here, when you are apportioning, there are two ways you can go. There are two methods. First, you can even ignore these service departments because we are not going to be using them. That is the first way you can apportion, and you just apportion this one directly using the percentage they gave. The second alternative is that you bring one of these from here. If let's say I'm going to use this, let me try to remove this and I use only this. When I use this one, it means I'm going to be distributing even to the service departments. But what will happen is that the portion that will come from here and it is provided to the marketing department, it will be equating to this cost. Let me do that. We said this one is distributing 30%. Allow me put this. Sorry. Here we are saying that we are distributing, let's first start with the quality assurance. Quality assurance. Here there is no, you can start with anywhere, but as I said, it's better we start with the one with the smallest, so that will end with the biggest. That quality assurance, the base is going to be quality assurance. Have here, we are seeing we have 30, 20, and 40 plus 10. It is 30, 20, 40. It is 30 to 20 to 40, then to 10. So we start distributing. You can also try to put these things here. We put the quality assurance, because I don't want you guys to be seeing, where I'm getting these figures. Marketing. This one is contributing to this. It is contributing 30, and to this one is 20. This is 40. It doesn't distribute itself. Then here 10. And here we said the marketing department is distributing 20, 25, 50. 20, 25, 50. It is 20, 25, 25, 50. Then it's giving out 5 to the service department of quality assurance, but doesn't give to itself. So when we base on these ones, we can come here and say that we get our totals from here, and it will be cosine this. Sorry, I did not put sum here. We can't get it right. There is no sum. Then we look up here, cosine sum. So if you got those totals as you are seeing them, here we can just say that it will be cosine 30% over 30 over 100. We multiply it by this. Press enter, and this one is going to be cosine this, divide by that, multiply by that. Then for this one, it's going to be cosine this, divide by this, then we multiply by this. Then for this one, it is this, cosine this, divide by this, then we multiply by this. So what happens is that when you add this one plus this one, you must be getting this one. If you don't get this, then you just know what you have done is wrong. So get the sum. You can try to get the sum from here. It is cosine this plus this. As you see, when you try to add up this, you'll be getting exactly this one, because here we are going to ignore this 0.17. You are seeing that this one will be exactly like this one. So when we fill it here and we distribute 17362663, I think I've put much, yeah, this 616, this, that one is not there, so it will be that. So then we distribute using the same. Now we are distributing the marketing department, and marketing department is getting 20 to 25 to 50 to 5, because it can't give to itself. So we come here and we say we are now distributing this one, cosine this, divide by, divide by this, say the cosine this, divide by this, it is this, divide by this, then multiply by this. Remember this one, we distributed it, so this one is supposed to be in the bracket, that one is supposed to be in the bracket. Oh, sorry. What I've been tapping on this one, yet I would have wrote it somewhere down. That's why here this one is changing. I'll explain that, so don't worry. Let me first finish these ones. I will explain to you that even this one, we're not supposed to be touching here. We're supposed to be knocking from this side, so that we put this one in the bracket. When this one is in the bracket, it means it will be cancelling these ones out. It's what I should have done. I hope I can repeat that. Let me repeat it. Let me repeat from the 1, 3, 2, 6, 6, 3, 3, 2. Because when you see here, this one is not in a bracket. When you try to add up, it will be giving us a different answer. So we'll put this one in the bracket, meaning these ones we are going to be removing them. Then that one will remove, then this one will remove it. So we start it again. We said we are distributing this. This one we'll put aside. Let me also put this one aside, but we shall get that total. It's okay. It is equal sign this, divide by this, we multiply by this total we've put this side. So it will be equal sign this, divide by this, multiply by this. It is the same answers, but we had done it when you're using Excel. It's not like the same way when you're just writing on the chalkboard. Times this. Then we divide also this. It is this 10%. It is 10 divided by 100, multiply by this. So we said when you add this one, you can try to get the totals from here. You see it will be the same. It is this plus this, which is giving us exactly what we have here. So it is this we've transferred here, and we said we put this one in a bracket to show that we are distributing this one. Hope you've seen. So it is going to be equal sign this, divide by this, then we multiply by the figure we put outside the box. Press enter, and this one will be equal sign this, divide by this, then we multiply by this, the one we put outside. This one will be equal sign this, divide by this. Sorry, I put this, divide by this, then we multiply by this. I hope on this one I used the same. It is J7, is this one J5. We shall see that it is equal sign this, divide by this, then we multiply by this. So when you add this plus this, you must be getting this one. Then we try to get our proof. As I told you, these are the totals. We said we'll get the proof from here, proof. So we get the equal sign sum. We are summing this. Sorry, equal sign sum. Let's enter. We got that. Then we can scroll or try to double click and try to get the rest up to there. Because we are seeing what we have distributed. This one, when you add the plus this one, we must be getting this one, and it will be cancelling out. Hope we've got it right. Then we can try to confirm from here equal summation of this. Can even exceed there. So we are getting exactly what was given us as the cost. That is one of the ways we could do that. Just put in the borders so that it looks a bit unique, and that's how it is. The other alternative, I said, you just get whatever we've got here. This one, you don't even write it here. You just go to what you've got here. You add what these ones are distributing for the 50, this 30 plus the 20 plus the 20 plus the 40. It means it will be, we are excluding now this one, because including it is just wasting our time. When you're in exam, you just add up this one, because you know this side we shall not need it. Just add the 40 plus the 60 plus the 30, you get the 90. You'll be getting this 30 over 90 times this, then you put it there. The same for this, you'll be getting the same answers. So that will be your exercise. You can do that and you try to find out whether what you are talking about is exactly what happens. Thank you for watching. I hope we could link up for the absorption, but as I told you, this absorption of overhead, it is just converting using the OAR. And the only difference between the OAR from what we've been doing, it's just the language, but when you get to the computation, you find that you are getting the same answers. Because as I told you earlier, that even the person who has used the OAR will be getting the same answers, because when you are getting OAR, it will be our percentages here, the total percentage they gave us, and the total cost we are incurring. So in this time, it will be this, the 64 million divided by the total, if you are distributing for this. But remember, we are distributing on the service department. It will be this service department cost, we distribute it over the total, then we multiply by what each is getting. Because if you get this, divide by this and multiply by 30, it will give you exactly the same answer. You can even try to get it from here. That if, let's say, you get this, because this is what we are distributing, it was 13266,332, and you divide it by 100, then you multiply by 3, you will still be getting the same answer, which this answer is the same as what we've got here. What changes is only these decimal points. You may find that this one has brought in more decimal points than the others. So that's how it is. So hope you guys, you can be able to get this one right, and we'll see how we can be able to push ourselves and we score highly. Thank you and God bless you. Welcome once again, and we are proceeding with our series, and this is the last step within the overhead analysis or costing, and it is called overhead absorption, or absorption of overheads to cost units or products. Here now we have moved from a step of the cost centers, and now we are on the final products. What we are doing is between the production and the output. So when we are doing the absorption of overheads, we expect that those service departments we have already put their cost in the production department, and what that was the secondary apportionment. When that one is done, it means what is remaining is to assign those costs to the outputs we've produced, so that they can form the production cost of those units, or the cost per unit. So after all service department overhead costs have been apportioned to the production department, that was the secondary apportionment, the next step is to assign overheads to different products. And we are saying the other way you can define this absorption of overhead is allotment of overheads to the cost units. We are finding the costs that is constituted in the outputs we've produced. This means that the overheads incurred in the production become part of the cost of product or service through the following. We do these two steps, how we determine the cost that is within the output that has been produced. One, we calculate the overhead absorption rate, and this overhead absorption rate, it is the rate that helps us to allocate the costs that we've incurred in the production to the final products. This overhead absorption rate is the same as overhead recovery rate, because we are recovering what we have put in. The inputs in terms of raw materials, labor, variable overheads, and others we've put in the production process. So here we are recovering whatever we have recovered in terms of the unit of product. It can be in the terms of the units of product, or it can be in terms of machine hours. It can be in terms of direct labor, and others, as we are going to set down there, because I made another slide. These are the methods we use when we are absorbing these overheads. But remember, the other side, we were using cost drivers, or the bases we use to apportion these costs. Now, we are also assigning bases, but within the production department. If it was the mixing department, what was the main? If it is a red twister, how many kilowatts we utilized in that production department, so that we can contribute it to the output. That's what we are trying to do. And in this case, we are seeing that we either use the units we've produced, because when you use the units you've produced, you will get the total cost you've incurred. If, let's say, we've incurred 2 billion in a production of 100,000 units, you divide that and you get the cost per unit. That is in terms of the units. If, let's say, we are computing using these machine hours, then we can be also able to allocate the cost we've incurred, the total cost we've incurred, over the total number of the machine hours we've spent. But don't forget that these overhead absorption rates, we have two types. We have the blanket overhead absorption, and that's where the company sets a single overhead absorption rate that is going to be used in absorbing the costs into the final products. And this blanket overhead absorption rate shouldn't be used, I repeat, it shouldn't be used in the production, because you cannot trace directly. Because if you just assign that, let's say we use one overhead, there are some overheads which you can't even quantify, and for you, you're just using one method to compute everything. So it needs to make sure that you are not overstating or understating the costs we've incurred. You use the appropriate basis. If it is in terms of labor cost we've incurred, make sure you're using the direct labor hours. If you're not using blanket overhead absorption rate, then you may be using the multiple overhead absorption rates. These multiple overhead absorption rates, these are the ones, the unit cost, when each of the item or each of the cost that has been incurred in the production department has been given an appropriate base that can be used to allocate the costs we've incurred in that department. That's what we mean. Remember, in the absorption, we are only dealing with the production department. We left that part of the service department. So we are now contributing, we are looking at the production costs and how they are contributed within the output. And the last step, because the first step was to calculate the overhead absorption rate, and the last one, we charge the overhead to the cost unit or the products. How do we do that? By charging that, we get the OAR we've got, we multiply by the actual unit of the base we've incurred in each department. If, say, in each department we produced, in department A produced 10,000 units, if we are using number of units, and we produced 10,000 units, it means it will be that OAR, that will be the cost per unit multiplied by the number of units that has been produced in that department. And that's how we get those absorption rates. Then what happens when you're absorbing these overheads? There is either under or over absorption of these overheads. And how they come in is that you may find that what you've put in, you have incurred, let's say, a certain amount of cost, and you find out that the output you are getting is more than what you had expected to produce, or it is less than what you expected to produce. That causes under or over absorption of overheads. And we are going to see them in the next video with how we treat them, the accounting treatment, how do they affect the profit of the company in terms of the over and the under absorptions. So we shall see them when we reach to the next video, and we shall be seeing what are some of these causes that may cause those under or over absorption. Hope you can be able to link up. We are going to look at a certain question. We see how we can absorb these costs to the final products. And in When we have done that, I will pick a broad question that will be having most of these steps we've been talking about. But as for now, I'm going to get a question that is specifically on this. But when you're done with this and you have mastered it, you can go ahead and pick a single question that can be having each and everything, so that we get to know what can be done. Thank you for watching. Until we meet again, it's bye for now. Hello viewers, we are now continuing with our series of management decision and control. Today we are going to look at the costing system. In the previous videos we spoke about the resolutions, we discussed the decision-making process, we also looked at the behavioral, organizational and social aspects of management accounting. We looked at those ones in the previous videos. You can check them and see where we are heading. So the next topic, and the previous videos crossed the first topic, which was management information and communication. So we crossed that first topic. It had all that. Sorry, it was the second topic. The topic was nature and the role of management accounting, where we looked at the roles of management accountant and all that, ethical codes of conduct as the resolutions. Now, we are going to start our topic 3, which is costing systems. We first of all discussed, as we said, this MDC paper is a continuation of the cost and management accounting. So we had an introductory part. If at all you want to go through, you can check our cost and management accounting, the costing system, we spoke about them. Then by the time you come to this, you will also have more and more of what it takes, because you will also get the definitions of cost, cost unit, cost center, and all that. But here we are going to make sure we explain everything and we'll be able to understand each and every item that is embarked within the costing system. It's an examinable topic, mostly examinable topic in terms of the ABC system, as we are going to look at them. But what you have to understand with this MDC paper is that most of the things we are going to see, they are representative questions, that they pick these questions from each and every topic that we are going to discuss. So it is just a matter of us to understand what we need to have. So without wasting more time, let's try to look at costing system. These costing systems helps in determining the cost per unit. In other words, whenever we are talking about costing system, we are finding the cost per unit of a given product. What is that item that has been incorporated within the cost per unit? Everything is going to be determined under the costing system. So as a manufacturing company, we look at the products that we are going to produce. What is the cost we have incurred in the production of those items? But specifically, we are looking at one product, meaning what is the cost that we've incurred in the production of that one unit of product or service. But mainly, we are going to be looking at products. There are two types of costs. Have the direct and the indirect costs. However, the direct costs are the costs that can easily be traced to their original source, unlike the indirect costs, which are also called overheads, which cannot be traced from their original source. So, since it is these overheads that can't be traced from their original source, our main focus is going to be on the overheads. Because we need to allocate those overheads, we are going to see how to allocate those overheads we've incurred in the production of those goods and services to each product. So when we are looking at the costing system, there are systems that we use, and we want to first of all talk about the ABC and the traditional costing systems. However, we have other systems that we are going to use whenever we are determining the cost per unit. So we are going to focus on the ABC system, ABC and the traditional systems. So before we go there, we said in costing systems, we are going to be looking at the cost per unit. We are looking for the cost per unit of a good or a service. But we have two main types that we are going to, the main types of costs that we are going to be looking at. That is the direct and the indirect costs. We said that the direct costs, we have no problem with them because for them, they can easily be traced to their original source. For example, if you look at, if you are looking for where the direct labor costs came from, then it will be easy to compute it will be very easy for us to compute it. Just like if let's say maybe during the period we hired 20 workmen and each was paid maybe shillings 500,000. So at the end of the day, we are going to see that it will become very easy for us to know the amount we spent, because we shall be seeing that the 20 people we employed, we multiply by the 500,000 that was paid for each person, which will give us 10 million. And that 10 million shillings will be the cost that we have spent on labor. So since we know how much we are going to be paying for each unit of labor, and we know how much we are going to be paying for each labor, and we know how many we have actually employed, we can just multiply and be able to get the total labor costs that we've incurred. In other words, we can actually trace the direct labor from the number of people we have employed and the cost that we are paying for each employee or for each person. It is always hard for us to compute. For example, if you are paying rent of shillings 1 million per month for the factory, then it will be hard to know how much of the 1 million went to each product or service. If at all the company is producing maybe products, let's say it is Liham Cola, sorry, it is maybe Coca-Cola, it is producing Minute Maid and Coca-Cola. So you find that if at all you have incurred the rent of 1 million for the whole factory, it means it is very hard for you to know how much of the 1 million went to Coca-Cola as a product and how much of the 1 million went to Minute Maid as a product. So it is very hard. That's why we find it very hard for us to compute the indirect costs, or which we call the overheads. So our main focus here is going to be on the overheads, because for the direct costs, we always know how to trace them from where they came from. So since it is very hard to allocate the overheads to different products or services produced, then those are what we call the overheads or the indirect costs, because they are incurred indirectly. So therefore, we are going to put most of our emphasis or our concentration on those overheads, because they are the ones that need attention, since the direct ones can easily be computed. Hence, we put less attention on the direct costs. But what that means, it doesn't mean that these direct costs, we are completely going to ignore them. If you get a question and they have given you direct costs and they have given you indirect costs, what that means for you to get the cost per unit, it means first add up the direct costs themselves alone, then you find a way of apportioning the indirect costs to each product so that you can keep adding to their respective products. You add the direct and the indirect cost to come up with the total cost per unit. So that's basically what we are going to be looking at. So our emphasis, whenever we are using these systems, we are going to be looking at the ABC and the traditional costing system. These are going to be our basis as far as the MDC syllabus is concerned. The rest we are going to look at them, but for the purposes of finding cost per unit, we are going to first concentrate on these ones, because it will be these ones that are going to help us in overhead allocation. The others, they may be there or they are there, but it is these two that are going to help us in the absorption or in the allocation of the overheads. That's why we are putting all our emphasis first on these two, the ABC system and the traditional costing system. We are going to look at each of them independently. So we are seeing the ABC or the traditional, the ABC versus the traditional or the. So let's try to look at the traditional or the absorption costing system. It is going to be our first one that we are going to look at. The traditional or the absorption costing system. This is the system, or this system uses a single overhead absorption rate, a single overhead absorption rate, OAR, to allocate overheads to products or services within an organization. This system was developed at a time when organizations produce a narrow range of products where overheads form a smaller portion or fraction of the total cost, because it was mainly labor-intensive techniques. In our economics, we looked at the labor-intensive techniques and capital-intensive techniques, where in the labor-intensive techniques, we always have more of the human capital or the human resource or the people that are doing all the activities that are done within the organization. And under the capital budgeting, we use more of the machine. We see that machines replace human capital, and that's what happens. But they have told us we are going to be using a single overhead absorption rate, that is OAR. But OAR, to compute that, we get the budgeted overheads or the budgeted costs over the budgeted activity level. It is the total budget, the total overheads over the total activity level, where the budgeted activity level equals to labor hours or machine hours, but mainly labor hours. The reason as why we are saying it is mainly labor hours is because we are going to be using labor-intensive techniques for production. In other words, we are going to be using more labor than machines. But this activity level, they have told us we are going to be using a single overhead absorption rate. In other words, we are going to be using one item to allocate all the overheads that are incurred within the organization. If it is labor hours, we are going to be computing all the indirect costs using the labor hours. If it is machine hours, we are going to use only the machine hours to allocate all the overheads that are incurred within the organization. That's what the single overhead absorption rate means. We are going to use a one rate that is going to help us allocate all the overheads to the different products at once. In other words, if we look at the departments within the organization, if there are two departments, the production and let's say maybe the packaging department, and you have been given that the number of hours that are spent within the production and the number of hours that are spent in the packaging department. So we shall get their total number of hours in both the departments. We divide, it will be that total that we are going to divide by the total cost that has been incurred, the total overhead that has been incurred. Just as we discussed above, we said that our focus is going to be on overheads. But we have a challenge that we can't allocate overheads without the overhead absorption rate. So since we can't allocate these overheads without an overhead absorption rate, which we call the OAR. So it is that OAR that is going to help us, and it will help us to know how we can charge these overheads to different products. For example, we can get maybe an example. If you have maybe rent of 5 million per month for the building where we are doing all our manufacturing activities. If let's say it is a Coca-Cola company, and we are paying rent for that one building that we are using in the production, in the manufacturing activities for all the products that we produce as Coca-Cola. If the company, let's assume maybe Coca-Cola has 3 products in that one building, and we assume maybe product A uses 2 rooms, and product B uses maybe 1 room, and product C uses 2 rooms, and that's the space that we actually use. Product A occupies 2 rooms, product B occupies 1 room, and product C occupies 2 rooms. It means in total those are going to be 5 rooms. So if we have 5 rooms to produce our free products, so it won't be if we just see the total rent of 5 million and we divide it by the 3, so that to get each product so that we can get what each product is contributing. Because what that assumes, it assumes that each product contributes same amount towards the payment of the rent expense. If you just get the 5 million that we are paying in total as rent, you divide by the 3 products, and you assume that each product is going to be contributing equal amount to the rent. Remember, these rooms, they are occupying different rooms. So we are seeing that product A is occupying 2 rooms, but product B is occupying 1 room, and product C is occupying 2 rooms. It means if you just assume that even product A, product B that uses is going to be to pay the same rent as product B, product A and C that are occupying 2 rooms, it will be unfair. So what that means, we need to solve, and we need to find a way of how we can compute the costs, and we charge the appropriate costs to the different products, because not all these products are going to be occupying the same amount of the space. So we need to compute the overhead absorption rate, and that's what we call the OAR, which will be used a fair share to the different products. And we may say that the basis for sharing the rent is going to be maybe floor space or the number of rooms. In other words, if we say that the floor space of rooms is going to be our basis, we are that the product that takes will take more rent than other products that are taking less rooms. Because if product C is only occupying 1 room and these other products are occupying 2 rooms, it means these other products that are taking 2 rooms, they must be paying a rent that is more than that of product B that is occupying 1 room. So when I'm to compute the OAR, we need to get the budgeted overhead of we divide that 5 million by the number of rooms occupied by the different products. And when you do so, it's getting 1 million per room. Since we are dividing amount over the number of rooms, it means what will come out, it will be per room. What that means is that every room to be contributing or is going to be for 1 million. So you get the total overhead, we divide by the total number of rooms, and we are saying that the number of rooms that we have got, that is the basis that is going to help us get a good share or a fair share of the expense. Therefore, each room is going to be allocated to 1 million. So If you are to get the rent expense that each product is contributing to the general rent of 5 million, you keep multiplying that shillings 1 million per room times the number of each product is using. We've said that product A is taking 2 rooms, so it will be 2 times the 1 million per room, which will give us 2 million. Product B is taking only 1, or is using only 1 room, so it will be 1 room times the 1 million per room, which will give us 1 million. Then the product C is occupying 2 rooms, so it will be 2 rooms times the 1 million per room, which will also give us 2 million. And in total, we'll be getting the 5 million. So it is the 5 million that we have spent on the rent. So the implication above, we are seeing that when you say the implication is that sell maybe product A after the production, then you should deduct the 2 million for rent expense incurred in the production rooms used by the product A. So being able to allocate all the 5 million to all the products we are producing, if you can say, if maybe we are selling off the product A or product B or product C, and with fair charge of the rent expense that has been incurred in the production of that product, it means that we are allocating all the 5 million that we incurred as an organization in total for rent for all the products that we are producing. Therefore, the basis is the OAR. And if you had not maybe computed the OAR, it wouldn't be very easy for us to allocate these. We would have taken maybe the 5 million, we divide by the number of products that we are producing, which will be unfair. So what we basically do here is we get the OAR by choosing the appropriate activity level, which we call the OAR. So the cost driver, what brings that cost. So by doing that, it's mainly what we actually do in traditional costing or the absorption costing. But with the introduction of the advanced manufacturing techniques or the manufacturing technology, that's what we call the capital intensive techniques of production. Many resources become non-volume related support activities, whereby more overheads were to be incurred and various products were to be manufactured. So that called for a better system other than the traditional costing system. And that is the one that led to the introduction of the ABC system, or the activity-based costing system. In other words, the development of the ABC system came as a result of the improved technology that happened. Remember, before the technology came in, we are using the traditional approach of where we use a single item or a single overhead. In other words, we are using labor hours or machine hours to allocate all the overheads at once, which was unfair because there is no way you can split rent expense when you are using labor hours. You could get the answer, but it will not give you a fair view of the costs that you have allocated to each product, because they are not related at all. You can't compare maybe electricity with the number of so it was unfair under the costing system. That's why they introduced when the new technology came in and machines were introduced, they had to adopt this ABC system that will help us absorb these overheads using the activity, because we shifted from using the using the labor hours, and we ended up using the activities. So we are seeing that the traditional costing system had to be phased out because of the advanced manufacturing technology that was introduced. Remember, we said the traditional costing system was mainly labor intensive, and the challenges of using labor are always many. You see that, for example, you may find that labor intensive techniques, they are time consuming. In other words, when someone is working, they waste a lot of time by relaxing. Someone comes, when you employ someone who is lazy, at the end of the day, they end up not providing what you expect them to do. Most of the times you find that people to work, you need supervision, and incurring supervision, you need to incur more costs for paying the supervisors. So it was bringing more costs than the new system. So when you have the technology, you can produce a lot in a limited time under minimum supervision, because those are some of the differences that we are seeing. If we are using labor intensive, we are seeing that labor is going to be wasting a lot of time, where they are going to be we can't have machines going for lunch hours. We'll be eliminating that idle time that would have been created if at all we are using machines. Even supervision, machines require less supervision. If let's say you're using robots, they require less supervision, very few people to supervise them. But otherwise, if maybe they are computer-based, let's say accounting systems and all that, these QuickBooks, Tally, Sage, and all that, they help to do the work that was done by these clerks that we normally hire to do the accounts work. So you find that we are saving time and we are using, even the supervision is reducing, which increases even the productivity. So as the competition grows in the manufacturing sector, every company is trying to be innovative to see that they produce better than the competitors. For example, in the traditional periods, companies try to concentrate on one product, but nowadays companies are shifting to producing more products. For example, you can look at maybe Mukwana Industries, where you see that the company is producing oil, is producing cosmetics, is producing plastics, and others. These Coca-Cola companies, they had Coca-Cola, they are putting Minute Maid, they have added now water. So there are so many things that they are doing other than the way it was before, because you find that an organization is only focusing on one product. If it is soda, it produces only one item and it concentrates on that. So we are seeing that all those products, for example, like the way we said from one, we are seeing that all those products are produced at once and they are produced at the same time. Hence, we are seeing a diversification of risks that's under portfolio management. If you are investing in many activities, or you have very many investment products, you find that there is diversification of risks, in that you can't if you make a loss in one product, you can get profit in the other product. So when products are many, like from Mukwana Industries, that are produced at the same time, you find that one of the departments needs to the other department. You may find like maybe where the materials for cooking oil, these jet cans they use for packaging cooking oil, they are produced by the plastic department within the Mukwana industry. So you find that it is a one group of company, but it has different companies that are producing different products, and those products are going to be used as raw materials for the other products. Like we've said, in the Mukwana plastic industry, we produce jerrycans that are going to be used in the packaging of cooking oil. So you find that some of these departments are going to be interconnected. In other words, you find that the other department is basing on the outputs of the other department as its inputs. So we are seeing that even if the company doesn't look for more extra customers, it's already getting these items from its other departments. So that diversification in products or in product portfolio gives a competitive advantage in a sense that people ignore buying. Maybe if let's say people ignore buying cooking oil and they say maybe it is making people fat and all that. If they ignore cooking oil, they can divert maybe to buying plastics or soap, hence making the company continue operating as the demand for cooking oil reduces. Because we are seeing that if at all the company was only by producing cooking oil, and you see that maybe there is a change in demand for the cooking oil, people are no longer buying cooking oil, you will find that the company is going to be collapsing. But if the company has been producing many products, like I've said, one is producing plastics, is producing cooking oil, soap, and others, you find that if the demand for cooking oil goes down, people are going to divert their mind to buying soap because there is no way you can do without soap. And they also buy plastics. At the end of the day, you find that the company is going to compete in the market. Even if the sales for the cooking oils are going down, the company is surviving on the other products that they produce. So it is, you get you see how you can diversify your risks under most of the things are taught under portfolio management, where you do very many products or very many items or investment projects, and you find that if you get a loss in this, you can recover from the other one, because not all of them are going to be making losses at the same time. So even if you just look at maybe the bakery industry, where there are breads, there are cakes, and the other products that are being produced by the bakery industry. But we are seeing that all of that is done using technology, because there is no way you're going to be producing all those almost 4 products or 5 products as one company when you're just using employees only. It means the cost of labor will be very, very, very high if you are using that. So all that came as a result of introduction of the advanced technology or manufacturing technology. So we are seeing that if you are using those machines, you are not going to be wasting time, and we will also eliminate even the supervision costs that would have incurred if at all we were using labor. But we see that in the old days, when competition was minimal, it was labor that was doing all the work. And you could find even people stealing products. You find that people are producing them, but at the end of the day, they come up and they start picking some of the products. So in these recent periods, you find that very few people are running the company or are running the machines. You don't find people packaging the company products, because machines are now programmed and they can do everything until they get the sellable items. So you find that these machines, they are doing now from the time the production takes place to the point where the units are now going to be sold out. That's when maybe you can put in stuff. The other thing, you find that the product are produced, they keep moving from one process to the other, from one department to the other by use of machines. Very, very few people that are going to be there to monitor how those machines are going to be moving, or how they are going to be seen. But because the traditional costing system was using labor intensive, the companies had to introduce the new technology that chased all the labor intensive techniques, and that led to the phasing out of the traditional or the absorption costing system, where we're using only single overhead. But what we have to take note, as for the examination purposes, you may find that in an exam you may be required to state the shortcomings of the traditional costing system. So as we have seen, we said that it was only technology that led to the phasing out of the traditional costing system, and also maybe the production of a wide range of products by the ABC system, which also contributed to the phasing out of the traditional costing system. There are two things that led to phasing out. One, we had diversification of the risks, whereby companies were producing more products than it was before. Two, even the technology that we're using, the introduction of the new technology, which chased away the use of employees. So some of the things that you may find in an exam, you may find that you are required maybe to differentiate between ABC system, or give the differences between ABC system and the traditional costing system. These are the things that we've been talking about. That in ABC system, you find that you can be able to produce more units. That was the introductory part that I'm trying to build. We started from a point where in the traditional costing, we only produce one product because we are using labor. It is very hard for a labor-intensive technique of production to diversify its risks by producing very many items, because you need more workers which cannot be able, because if you diversify, it means you are going to get specialists in that very department. Let's say it is a plastic industry, you get someone who is a specialist there. You get someone in soap industry, cooking oil. So it is really very hard. It's only in the ABC system where technology is, in other words, where we are using machines to produce most of these items. You look at maybe we have a single overhead absorption rate under the under the traditional costing system. But the other side will be based on cost drivers and all that, as we are going to look at them. But I was giving an introduction. That's why the topic is ABC system versus traditional costing system. In other words, we are trying to look at making a comparison. We are converting from the traditional to the new system. And the new system is the ABC. How it came about, it was as a result of introduction of technology and the need to produce more than one unit of product. Sorry, more than one product. That's why we got the ABC system. Hope you can be able to understand that. Don't take it for granted. Be able to analyze and be able to understand. You pick those differences that you may find, because they may give you that and you find that you are stuck. It may be a 6-mark question, but it will be worth it, because all that you do there is actually just giving the theoretical aspect, and that's all. So let's try to look at the ABC system. We've seen how the ABC system came about. Said it came as a result of introduction of technology and the need to diversify or production of more products and services. So let's try to look at what ABC system is, and we see what we can do. We said, just like what we discussed, that with the introduction of the advanced manufacturing technology, many resources become non-volume related activities where more overheads were to be incurred and various products were to be manufactured. This called for a better system other than the traditional costing system, thus leading to the emergence of ABC system. So that's the two reasons that brought the ABC system. So ABC system is an alternative to the absorption or the traditional costing system. It involves identification of the factors which cause the organization's major activities other than just labor or machine hours. Here, the overheads are charged to the products on a basis of their usage of the factor causing the overhead or the cost using a cost driver. In other words, this cost driver is the factor or is the reason for why we are incurring the cost that we are seeing. A cost driver is the factor which causes the costs of an activity. For ABC system, we need to always identify the cost drivers for the activities of the entity, unlike for the traditional costing system, where we base on only the labor hours and machine hours. In other words, for the ABC system, we have to look at the activities that are bringing the cost. What made you to incur the cost is what we call the cost driver. What has brought the cost is the cost driver. So that cost driver is going to be the appropriate way we can use to allocate the cost we are incurring, but not using the labor hours, because what was happening in the traditional costing system was just like, you just use, if it is rent, you apportion that rent in terms of the number of labor hours, which means these things are not actually relating. But when you base on what brings the cost, it means there is a direct relationship between the two. If there is no direct relationship, it means you are just not, you are treating or you are charging that costs unfairly to the product, because you are going to be incurring either more or you are going to be putting less. That's how we use the ABC system. It involves identifying the organization's major activities and then identifying the factors that cause the costs for these activities. For example, if maybe we incur traveling costs in an organization, therefore then we need to find the factor that is causing the traveling expense or the traveling cost that we've incurred. For example, you may say that the traveling costs as an activity, because the traveling is an activity, we incur the transport costs, because as you travel, you incur the transport costs. We are looking at what causes the travel or the transport costs to decrease or increase. It's what we are trying to look at. This something that is going to relate. In other words, if ABC is if source A is going to be increasing, then we are supposed to have another alternative that is going to be either to reduce or is also going to increase. So we are looking at what causes the transport costs. The activity is traveling. If at all in an organization we make maybe travels and we have a travel activity as something we do maybe on a monthly basis or yearly basis. But the cost we are incurring under the traveling activity is the transport costs. So we want to know what causes the transport cost to increase or to decrease. So, and that factor that causes the transport cost to increase or to decrease is what we call the cost driver. It is the one that is bringing the cost. Because if it increases, it means even the costs are going to increase. For example, for that transport cost, we may say that it will be the kilometers covered, whereby that when you cover more kilometers, then the transport costs are going to be also high. And the lesser kilometers you cover, the lesser the transport cost you will incur. In other words, if you incur 100 kilometers, you will not spend the same amount like someone who has traveled for 50 kilometers. So it means the other person is going to be having a higher cost than the person who has moved for a shorter distance. That means the cost that is driving the factor that is driving the cost is the kilometers. So it will be a fair treatment if we base on the kilometers to allocate the costs that we've incurred to each department. So that's what a cost driver works. So that kilometer covered will be our cost driver, and it will be the factor that will cause the transport cost to be incurred in an organization. Because if there is no kilometer, or if there is no distance in terms of the kilometers that are being traveled, then we don't expect to incur any traveling costs or the transporting costs. So let's say it is rent, as we have seen above. Then it will be the floor space or the number of rooms occupied, where the more rooms you rent, the more rent expense you are going to incur. Just like the way we saw with the products that we demonstrated earlier. So for ABC system, we need to always identify the cost driver, unlike in the traditional costing system, where you only base on labor hours and machine hours. So let's try to look at the steps that we follow when we are using ABC system. So let's try to look at the steps that we follow when using the ABC system. So these are the steps that we are going to be following. There are 4 steps that we follow whenever we are doing any number on ABC system. Make sure you understand this, because these are the things that we are going to be following whenever we are doing computations. The step number 1 is we identify the organization's major activity. And a note is here that whenever we are identifying the organization's major activities, they should be value-adding activities. In other words, if it is a product, we are consuming the raw materials, we are transferring the raw materials until the process will get the finished product. Meaning, at any stage, we are adding value. So if these activities, they are not adding value to the product, we don't include them. For example, if it is a school and the procurement, maybe the procurement of furniture is done, then it's the major activity, because it is very important to have furniture in the organization, like that school. Because if let's say you are procuring furniture and you are procuring the furniture for the organization, for the school, maybe you are buying chairs, you're buying desks, you're buying tables, we can say that it's important to the school to have those desks, because it's where students are going to sit. But if it is a school and we see that you're buying things that are not that are relevant in the setting or in the normal setting of the school, then we can't say that that one is adding value to the school. Because just like we are saying that maybe the procurement of furniture, you may find procurement of furniture is not important in an organization, in another organization. Let's say an organization like an organization, you find that in those ones, for them, they are buying guns. So if you buy chairs, you buy desks, it won't be of help to the organization. So that major activity be able to add value, or should be value adding activity to the entity. Therefore, depending on the nature of the entity, we need to look at the major activity. The major activities, we look at what the organization is doing, and we see what is supposed to be there in that same organization, depending on whatever activity it's doing. So the second step is to collect the costs of each activity into the cost pool. And the cost pool, we said, the cost pool is a collection point of costs within an organization. It's where we put all the costs that we are going to incur in an organization. We collect the cost of each activity incurred in a cost pool. Then the third one is we identify the factors that determine the size of the cost of an activity, or the factor that causes an activity. In other words, we identify the cost drivers. What we are meaning here is that after putting all our costs together in one place, what we call the cost pool, then you start looking for the factors that cause those different costs. That's what we call the cost driver. So the fourth step, which is the last one, is to charge support overhead to products on the basis of their usage of the activity using the appropriate cost driver. We are using the appropriate cost driver to make sure that we are apportioning, or we are allocating the overhead to the different products depending on their usage of the activity. So that's what we follow. That's what we follow when we are doing the ABC system. But before we go to anywhere, let's try to look at maybe some of the examples of the costs or the overheads and their cost drivers. So one, we may try to look at maybe the setup costs. We find that they are going to be either number of setups or they are going to be number of production run. It depends on the nature of the organization. And we are going to look at some of the cost of the factors that we consider when selecting the cost driver. They are below here. So we have the production scheduling costs, which are number of production runs. We have the material handling costs, which are number of production runs. The ordering cost, we look at the number of orders. Quality control costs, number of inspection. Then material purchase costs, number of purchase orders, and others. But you have a note that we have various overheads and cost drivers. However, we use judgments since some of the overheads use the same cost drivers like we have seen above. Because here we are seeing that the cost, setup costs, production scheduling, material handling costs, all of them they are using number of production runs. So we use a judgment. In other words, we try to look at the cost, we look at the factor, what is bringing that activity or what is bringing the cost that has been incurred in that activity. Just judge by the way we are seeing things are related between the two items. So for examination purposes, sometimes the examiner may tell you to, sometimes, for example, maybe the setup costs and the cost driver is the number of production runs. So we find that when the examiner tells you maybe the cost driver and the overheads, then you don't need maybe to state it. If at all you find in the question they have actually given you the overhead and they have given you its cost driver, let's say number of setups or the number of production run, you don't need to repeat by looking at the same. If the examiner has actually stated for you, you just go ahead and compute the OAR. However, if the examiner doesn't tell you the additional information, sorry, if the examiner doesn't actually tell you the cost driver for a given cost, but you have the additional information, you look at the additional information and you see that the examiner given you has not specified that maybe for this item is belonging to the other one, then you can be able to use the judgment and determine which cost driver to use in order to allocate that overhead. A big example can look at, you may find that if the examiner talks about maybe the setup costs, and then among the costs he talks about maybe the number of setups, number of the production runs. So you find that the two cost drivers, the number of setups and the number of production runs, you find both of them, they have been given the question. But you have the setup costs, and we have given here that number of setups or number of production run. You use judgment and you make sure you select the best. In other words, it's not all that we choose the best, but we choose the one that is more relevant. In other words, if you are given the number of production runs at the same time you have given number of setups, and the cost, the overhead you have is setup cost, I will go with the number of setups, but not the production runs. Even though they look all of them to be correct, but you look for the one that is more relevant or more appropriate. So, because at the end of the day, you are not going to give each overhead two cost drivers. We pick one, but we always pick the one that is going to be more relevant, more suitable for that different overhead. So therefore, we have to always ask ourselves what could have caused the cost or the overhead in order to be able to pick the most relevant cost driver. And it's the only hard thing we are going to be doing in the ABC system. And it's the only thing that is actually making the students fail that number, because it's all about finding the appropriate or the suitable or the relevant cost driver for each item. Probably let's look at these factors, what we can maybe basically look at and see when you are selecting the cost driver, the factors to consider when selecting a cost driver. One, we are saying that there must be a cause and effect relationship. That's what I talked about. The other one must be as a result of this. And the cost is must be caused by that same item. Just like the way we say the transport cost and the kilometers. In other words, when you increase the kilometers, then transport costs are also going to increase. When you decrease the kilometers, then the transport costs are also going to reduce. If at all you don't actually move any kilometer, it means you are not going to pay that cost. So there must be a cost to effect relationship, that the other one, the existence of the other one is as a result of this one happening. Then the other item is it must be measured, or it must be measurable or quantified. In other words, it must be quantified. Once you can't quantify a cost driver, then you can't use it. In other words, if you can't determine their monetary values, remember here we are trying to compute the cost per unit. So if you can't put that cost driver into a figure or a quantity or in a given number, then it means we can't use it, because there is no way we are going to use that and we add up to get the total cost per unit. We say measure, or it must be measured. Then the last factor we may look at, it must be realistic. In other words, we are saying that suitability must exist. In other words, it should be appropriate, not something that doesn't actually happen. You just things that are going to be maybe assumptions, they are not going to happen. So we want to pick the cost driver that is going to be the appropriate one. And those are the things that we look at and we determine what we can do. The same formula for computation of the OAR, or the absorption overhead, looks to be the same like the one in the absorption costing. But what you have to understand here is that here we mainly use the activity levels. But these activity levels, they are going to be considering the cost driver of each overhead. And we are going to be computing different overheads because we are going to be using different cost drivers. The other side, the cost driver was uniform to only machine hours or labor hours alone. So we either divide by labor hours, total number of labor hours, or we divide by the total number of machine hours, because it was mainly labor intensive. So we have an example that we are going to look at in our next video. If at all you have not understood, make sure you try to rewatch and be able to pick some of the basics that we need. Because if you haven't understood mainly the steps and how we'll be able to select the appropriate cost driver, it will be very hard for you to do any number under ABC system. But this ABC system, if at all you haven't understood, it's what we are going to be using in most of the numbers, because we said that the traditional costing system was phased out. It means going ahead it will only be the ABC system that we are going to be using. For the traditional costing system, we may find that we did more of it under the cost and management accounting, that paper on level 1. So for those who need to have maybe practical numbers on that, you may try to go back to that cost and management playlist. You check for what you want and be able to enlighten more as you come to this, because the other one is just giving us the background that we use under the MDC paper. So with that, I just encourage you guys to subscribe to the channel, because very sure there are so many things that we are going to be handling here, and we are going to be uploading more videos on each and every course unit that we do, and we'll be able to improve on our understandings and be able to pass these papers at our first attempt. So thank you for watching. Until we meet again. Hello viewers, today we are going to continue with our series of management decision and control, and today we are going to look at the different simulations that we have. And as we had said from the previous videos, that we are going to look at how we are going to be determining the cost per unit of a product or a service using either ABC system or the traditional. But we said that as far as MDC is concerned, or performance management is concerned, we are going to focus more on the ABC system, since the traditional approach was phased out due to the introduction of advanced technology. So for those who want to see more of the computation, maybe to improve their understanding on the traditional approach, you can check on our cost and management accounting playlist, where we did more numbers on that. But basically for MDC, we are going to put more emphasis on the ABC system. So we are going to first use this simulation before we go to the question papers or the past papers. So without wasting more time, let's try to analyze the question and see what we can do. The question says, suppose BK Limited manufactures 4 products, X, Y, and Z. Then they are saying that output and cost data for the period is as below. They have given us the output and the cost data. They have given us the products. We have a table there which has products W, X, Y, and Z. We have the output in units. We have the number of production runs. We have the material cost per unit. We have the direct labor hours per unit. And down here they are saying, we have a note that the direct labor cost per hour is shillings 5. Overhead costs are as follows. They have provided with us a table showing the details of costs and the amount. We have short run variable costs. That's the amount, 3080. Then we have setup costs. We have expediting and scheduling. We have material handling. We have the total. Then the required says allocate overheads to the products on the basis of traditional costing system. And the other one is we are going to allocate overheads to products on the basis of ABC system. So here we are going to look at both two systems, and we see how we can be able to differentiate the two when we are using the computations. But we have other simulations as we are going to see them. Simulation number 2 is coming from March 2021, question 2A, and simulation 3, which comes from June 2016, question 1, part A. Have also trial numbers, but as we said, that we are going to start with class examples, or the example that will help us get the basics before we dive in the past paper numbers. So without wasting more time, let's try to see how we can be able to compute this question. Let's go to the Excel and see what we can do. So it was BK Limited. They had given us the cost information. For those who need to be seeing the question, you can first pause the video and copy down the question as you go through what we are going to be discussing. So the first was to allocate the overheads, the products on the basis of the traditional costing system. We say the traditional costing system is the same as the absorption costing system. That was part A. So we start with our part A. This is part A. We start with the part A when you are going to be using, we are allocating overheads on the basis of the traditional costing system. So that's going to be our first number that we are going to handle, and that's part A of the question. So when you are given such a question, which has basically two parts, what we normally encourage is that we start with what they have asked us, then we do the working aside or on the fresh. We put a fresh page for the answers that they want us to compute. Then we make sure that we do the workings from a different page. We don't mix, or we don't do the computations within the question that had been asked for us. So we can try maybe to put a layout. We can also put it in a table-like format. We have the products. We start with the products, and the products are W, X, Y, and Z. So those are the products that we have. Then we can try to go to the number of units that they have given us. The units, we have 10. We have also 10. Then for Y we have 100. Then for Z we have also 100. We can try to realign these things so that we can have some of the things centered. Let's proceed. Now we have the amounts in shillings. Whichever currency they have given you is what we use. We have the shillings. Maybe I can try to zoom in a little bit so that we can be able to see what we are doing. So we start with the costs. We said if we have the direct costs, we first of all have to start with those direct costs, because for them, we have already a basis for allocating them. We can easily trace them from the product. So when you look at the question, they have given us material cost per unit, meaning these are the raw materials that were used in the production of the goods. They have also given us the direct labor hours. But remember, direct labor hours is not a cost. For us, we want the direct labor cost, not the direct labor hours. That's why below we have a note that says direct labor cost per hour is 5 shillings. That's why we start with our material cost, the direct costs that we have. If these costs were already allocated, we can just take them the way they are. If at all they had given us, because remember, these products, we are computing the number of units in 10, and 100 and 100 for each product. But the cost they have given us, the material cost, they have given us material cost per unit. It means we have to get since we are computing, we are not computing for only 1 unit. We are computing for the 10. Then you have to compute each product, multiply by the number of units to get the total material cost that was spent on each product. That's why here we are going to be using this number of units. Then at the end of the day, we can first compute the total cost. When we get the total cost, then we shall divide by the number of units to make sure that we be able to get our cost per unit. Because what we are looking at here is a cost per unit for each item, the total cost per unit. But the costs they have given us that to produce 1 unit of W, we incur materials, we incur direct labor. So we want to add all that so that we'll be able to get what we call the total cost per unit of each item. And we shall get that by dividing the total cost, we divide by the number of units. But what we have to do to get the total cost is to sum up all the costs that have been given, whether they are direct or they are indirect. So we start with the direct costs. Direct costs, we have materials, but as I said, the materials they have given us is per unit. But for us, we want for all the units that we are producing, the different products. So we have to need to get a working for that. Create a working, we say it is maybe working 1. We can first of all first list everything that we have. We have also the labor. They have given us labor cost. We want the labor cost. Even the labor cost, since we are not given the labor cost per unit, and they have given us the number of labor hours that we incurred. So we need the working for that. Meaning this one is going to be working 2. Since they have given us the direct labor hours per unit. But remember, for product, maybe product W, we are having 10 units. It means each unit is requiring 1 hour, but we have the labor cost per hour. So we have to compute the direct labor cost. And the last one will be now the overhead. They have given us the different overheads. The overheads are also going to be now working. Let's call it working 3. Because they have told us that the details of the cost, we have those different overheads that were incurred. But the good thing with these overheads, they have given us the total overheads that were incurred. Meaning, if they are all the total, we need to be able to apportion them, use a basis that is going to help us apportion for each product. So that's why we need a working for that also. So we first complete with our direct cost. We said it materials. Maybe you can put a workings here. You can have our working. I'm just putting it besides, but what I said is that you put on a fresh page. Have the workings, and working 1, we have our material costs. And our material cost, now we are going to be computing the material cost for each product. We have product W, we have product X, Y, and Z. Those are the products that we have. So we are going to compute each of them. So they have told us these material costs, we are going to get it by getting the material cost per unit, which is the material cost per unit. We multiply by the number of units. So for W, it's going to be the number of units, they are 10. So we will be multiplying that by the cost per unit. The cost per unit for product W is 20 shillings. It is shillings 20. This will give us 200. Then we go to product X, and product X is having also 10 units. Multiply that by the shillings per unit, which is 80, and this will give us 800 shillings. Then we go to product Y, which has 100 units. We multiply that by shillings 20, which is the cost per unit. This will give us 2,000 shillings. Then we get the 100 units, multiply by shillings, which is the cost per unit for product Z, and this will give us 8,000. So it is this 8,000. These are the figures, the final figures that we are going to be transferring to. These are the figures that we are going to be transferring to our costs here. How we said this product W, we put in the grid lines, we'll be able to see how we can be able to handle some of the things. So we have computed our cost. The material cost for product W was 2,000, and the one for X is 800, and this one is 2,000. Then the last one is 8,000. So we compute our total cost. Now this one is going to be our working 2, which is going to be our labor cost. And our labor cost is also going to be the labor cost per unit, labor cost per hour. since they have given us the number of hours, so it will be labor cost per hour we multiply by the number of hours used for each product. So when we do that, we are going to be able to compute for the different products. We have Y, we have X, so we have WX. This is our product X, have our product Y, and our product Z. So what we have first of all to compute is that they have given us the direct labor hours per unit, but they have not given us the number of hours, or in fact, they have not given us the total number of hours that were used by different products. So since they have given us that to produce 1 unit, let's say for product W, we need 1 hour for only 1 unit. But remember, we are computing for the output of 10 units, because output for product W we have 10 units. It means it will be the 1 times the 10 units. In other words, to compute our total number of hours that were used for all the products, it will be the 1 hour per unit times the number of units to get the total number of hours that were spent on the 10 units. So this will be, can just combine it here, we get the 1, which is the direct labor hour per unit, we multiply by the number of units, which are 10 units. And this will give us 10, but these are going to be 10 hours that were spent. Then we go to product X, which will be, to produce 1 unit of product X, we need 3 hours per each unit. It means it will be that 3 hours times the number of units, which are 10. And this will give us 30 hours. This will give us 30 hours. Then we also compute for the product Y, where we say this is going to be 1 hour that is needed to produce product Y. Then we multiply by the number of units, which are 1,000. And this will give us 100 hours. These are the 100 hours that we need in total that will help us produce the product Y. So this will be the product Z, it will be the 3 hours multiplied by the number of units. And this will give us 100 hours. So since we have got the total hours that we need, we can also maybe get the totals. The totals will get the 300 hours plus the 100 hours plus the 10 hours and the 30 hours. That will give us 440 hours. Now, to produce all the units, we spent 440 hours. So what we need here is that we need to get the cost or the labor cost we've incurred, since they have given us the direct labor cost per hour, meaning hour, they are paying us 5 shillings. It means for us to get the cost that we spent on product W, we shall get the 10 hours, we multiply by 5. And that's the unit cost, or the cost per labor hour. So this will be multiplied by 5 to be able to get our labor cost. Now it will be this labor cost that we are going to transfer to our sheet. And this is going to give us 50 shillings. Now this one is going to be in shillings because we are multiplying hours by the cost per unit. Even this one will multiply by 5. This will give us 150 shillings. Then we go to product Y, also multiply that by 5. And that will give us 500 shillings. So we go to product Y and we also multiply by 5 to be able to get the 1,000 500 shillings, meaning that's the cost that we spent. Remember here, we don't need the total. We only need this cost that we are spent on each product. So for labor hours, this one will have 50, this will have 150, and this one will have 500, then this one will have 1,500 shillings. So we go to the overheads. So this is where we need to be very attentive, because it's what we actually need to know. It's one of the things that is going to differentiate between the traditional and the costing system. The way we treat the overheads is what makes a difference. But the direct labor hours, sometimes they may just give you these figures, and they have already computed for those figures, but for you to just put, the only thing will be how to handle the overheads, because we said we are going to put more emphasis on the overheads than the direct costs. So these overheads, we said with the traditional costing system, we use a single OAR, the overhead absorption rate. We use a single code. In other words, we just use one item, and it is either direct labor hours, it is either labor hours or it's going to be machine hours. That's what we said in our theoretical video that we analyzed. So this is what we are going to be following. We use the direct labor hours or the machine hours, whatever has been given the question. But if you look at the question, they have given us the direct labor hours. We are not going to use the direct labor hours per unit, but we are going to use the total direct labor hours that were spent for each product. It's the ones we've computed here. So for us to be able to get these overheads, go to the working three. Working three is going to be about the overheads. And we said these overheads, we use an overhead, we use OAR, overhead absorption rate. And the overhead absorption rate is always equal to the total costs, or the total overheads, total overhead costs. We divide by the budgeted, actually it is budgeted overhead cost, total budgeted overhead cost. We divide the whole of this by, we divide the whole of that by the budgeted, or it is total budgeted activity level. And in this case, we are going to use labor hours. So we first of all first compute the total budgeted overhead cost. Actually, they have given us the total budgeted overhead cost is 3,800. That is the total. They have given us the question. And what we have to compute is the total budgeted activity level. Remember, here is what makes the difference. The total budgeted activity level we are using is for the direct labor hours. We are not using the direct labor hours per unit. We are using for the whole direct labor hour, the hours that were spent for all the products within it, for each product. So the total is this 440 that we computed. So of the total budgeted overhead, they are budgeted to spend 3,800. And that 3,800 inclusive, it is including all those setup costs and expediting and scheduling cost plus the material handling. All that is inclusive. So it will be that, which is 3,800,000. We divide that by the total budgeted hours, and this will give us 70 shillings. This is going to give us 70 shillings, or we may say shillings 70 per, this is per labor hour. What this means is that whatever figure we divide, or whatever item we divide by the cost, what we divide here, the activity level becomes it's more of dividing the total cost. We divide by the number of units. By doing so, we get the cost per unit. So in this case here, we are getting, since we are dividing by the total number of hours, we are getting the shillings per labor hour or per hour that has been spent. So our emphasis here, or what we need to know after getting the OAR, is by getting how much have we spent on each product. Because remember, product W is requiring us, for the 10 units of product W, we need 10 hours. So the question will be, how much of the overheads are we going to spend on those 10 units? It will be these 70 shillings per hour, then we multiply by the number of hours, which are 10, to be able to get the cost that we spent on that product. So for product W, it's going to be the 70 shillings. Where are we getting the, actually, it's going to be the OAR, let me put it there, OAR times the number of hours used. It's going to be the number of hours used. And this number of hours we used, we said we are getting 70, that is shillings. We get shillings 70, we multiply by the number of hours that were used by product A, which are 10. We are getting this 10 from here, which is the 10. And when we do so, 700. So it is this 700 shillings that we are going to transfer here for the overhead. And that's what we call absorbing the overheads to each product, or that's what we call the allocation. So we do the same for all the products. X, for the X, I'm not repeating that, but it's going to be 70, that is shillings 70, we multiply by the hours, we are 30. So since they are 30, they are going to give us 2,100 shillings. So we go to product Y, which is going to give us shillings 700, we multiply by the number of hours, which were 100 hours, and this will give us 7,000 shillings. So we go to product Z, and product Z will be shillings 70, we multiply by the number of hours, which were 300 hours. So those 300 hours are going to give us a cost of 21,000. So that's what we are going, these are the figures that we are going to be taking to our cost sheet. This is also called a cost sheet because it shows all the costs that are incurred. It is 2100 and 7 zeros, 21 zeros. Sorry, this one was 700. Sorry. This one was 700. This one was 2100, and this one was 7,000, and the last one is 21,000. So that's what we were required to do. So what we do here, we get the total costs. These are the whole total costs that we incurred in the production of each item. So we add all these costs up. We add from here, from materials, we add from the direct to the overheads that we incurred. This is going to give us 95,000. When you add it, this is 900 plus the 50. Then this one will give us 3050. This one will give us 9500. Then this one will give us 3500. But the question wanted us they wanted us to allocate. They wanted us to allocate the overheads on the basis of the traditional costing. In other words, whatever we do with ABC or the traditional approach, what we are trying to look at is the cost per unit. We are not interested in defining the total cost that has been spent for each product. But what we want to know is that we want to know the total cost per unit for only 1 unit. And the reason for that allocation is that we want to determine the selling price. Because when you know how much you have incurred in the production of one product, you can be able to determine, to add the markup and be able to determine the selling price. Some other questions may require you to get the profit. Of course, by getting the profit it means that they have given you the selling price. Or they may not even give you the selling price and they tell you the markup or the margin, whatever they have given you. So we get here the cost per unit. That's what we are interested in, cost per unit. And to get our cost per unit, maybe we can also show a working for it, which is going to be our working. So this one, I'm just going to show the formula, how we do it, but we are not going to waste time computing that. Cost per unit, we said cost per unit is going to be the total costs we divide by the number of units. Total costs divided by the number of units. Total costs divided by the number of units for each product. These are total costs. So we are getting this one from here. We have already our costs that we've used. These are our number of units that we are produced for each product. Maybe I can broaden this one. And this is the total costs that we've incurred in the production of all those costs. So what we need to do is, by getting this, we divide by this. So when you do that, we are getting 95 shillings. And that will be what they wanted us to do. We can maybe double underline this to show that that's where we are ending. So that's what they wanted us to compute in a part A. Part 2 is just like the same way we've been doing. Since we are going to be continuing with the question, it is the same question. All of these, we are going to bring them the way we've brought them, like the way we computed here. They are going to be the same. So the only thing that is going to change is this overhead, because with the ABC system, we believe that we go by each activity level by looking at the absorption of those overheads using a suitable cost driver. So for this case, we are going to be using a cost driver. So that's where I want you to put a focus, or to put more emphasis, because that's what the basics that are needed for ABC, or that's what differentiates ABC from the traditional costing system. And we said the traditional costing system is not going to be all that examined. What they are going to be asking all the time is going to be the ABC system. But as we said, they may give you maybe the profit. They may say that you want you to advise the company. We have given you maybe the profits that we are computed using traditional costing, but they want you to advise the company on which system to use by you applying by you adjusting the profit they got using the traditional costing when you are using the ABC system. So that's very important, because most of the questions, they are not going to be all that. They are just going to be, remember we said we are management accountants, we are offering advice. We are like advisors of the company. Most of the things they are going to be asking you to help the company to understand which one is better, or which one will help the company to achieve. So let's try to look at the part B, because part B was all about they said they wanted us to allocate overheads using the ABC system. So we are going to bring the same way we've done this. It's the only thing which is going to change, we said it is going to be the overhead. We can copy this and paste it there, and we only change few items. Can copy all of that and paste them here, just like that. Then we remove these ones, because all of these are going to be changing. Clear that. the whole of that is going to be changing. This one is going to be remaining the same. This one we are going to change the working because we need to compute it different. We stopped on working 4, so this one will be working 5. So this one is going to be coming from this working. So when you are given a question, you don't repeat again, you repeat computing this because it is a continuation. The other one is part A, this one is part B. It is the same question. What you only do, you refer these workings. You make sure that the working, these answers, you show where you got them from. You got them from the working 2. So we go to our, what we need is the overheads. Now what we are going to compute is the overheads, but when we are using ABC system. Overheads using ABC system. And we said it is also the same, we get the OAR, but this time it's going to be the budgeted overheads still, but this time it's not going to be, we are going to use for each item. So we can copy this one, just the same way we had it there. It's also going to be the same. We may leave that one, but what you have to know, it is going to be the same formula. So we need to see how we can be able to do this. What we need to know here is that this is going to be our working 5. Forget to label that. This is working 5. So this working 5 is the one that we are going to, that is going to help us see what we actually do under the ABC system. These overheads that we are seeing here, we are going to get working for each of them. Remember, they were 1, 2, 3, 4, 5. They were 5. Short run variable costs, setup costs, expediting and scheduling, material handling. Those are the ones. The difference here is that we are not taking the total cost as a whole, but we are splitting each overhead to be allocated using an appropriate cost driver. So this working 5 is going to bring for us all the costs, where we are going to be looking at the short run variable costs. Let me write them in capital letters so that we see the difference. Variable costs, this one is going to create its own working. We can say it's going to be working 6. You can just put maybe 6. Then we have the setup costs. It's going to be working 7. Then we also go to expediting and scheduling. This is going to be our working 8. Then we go to the material handling, and this material handling is going to be our working 9. And there we shall get the total costs. Then we also get the cost per unit. And this cost per unit is going to be coming using the same formula like the way we did in working 4. So when we compute all of this, that's what we will see that will be the difference. So we start by looking at working 6. Working 6 is going to be our short run variable costs. These variable costs, we are going to be using the total budgeted overheads. But for short run variable costs, we are going to be using the activity level that's going to be suitable for that. When you check the question, we were given the number of production runs. We have material cost per unit. Those ones we call them the direct costs. So the only cost driver they gave us was the number of production runs, and we had the number of units. What you have to know with these short run variable costs, the cost driver, what we need to first identify is the cost driver before we do anything. The cost driver, and the cost driver is going to be the labor hours, because when this short run variable cost, it means when you have just started working. These are variable costs. The only variable cost that we have material and the direct labor. But when you have just started working, the only thing you are going to be using is going to be labor. Because these are short term, you have just started working. The only thing you need is going to be the labor or the workers or the employees. If you had given the number of employees, you would have been on that. But the short-term variable costs are going to be as per the labor hours. So our cost driver is going to be labor hours. So after identifying the labor hours, the next step we'll do is to get the OAR. And to get the OAR, it is going to be the budgeted or the total budgeted overhead costs for the short-run variable costs. Then we divide this by the total budgeted. We divide this by the total budgeted labor hours. And the total budgeted labor hours, we computed them. So the budgeted overheads or budgeted total overheads or the total budgeted overhead for the short run is going to be, or they are given us as 30, 80. It is 30, 80. So we get that 30, 80, we divide that by the total number of labor hours, which we are 440. And this will give us 7 shillings. It will be 7 shillings per labor hour. This is going to be 7 shillings per labor hour. So for us to get what we've spent for all the products, we are going to get the 7 shillings and we multiply that by the number of hours. Remember the number of hours, we computed them from up here. They are here for product W, they are 10. So, sorry, this one is supposed to be product W, which will be, first of all, push that one, which are 10 labor hours. This will give us 70 shillings. So for the product X, it's going to be shillings 7,000, 7 shillings multiplied by the number of hours. Number of hours are 30. So we will get 210. So let me also add here shillings so that for those watching can be able to recall what we are doing. Then for product Y is going to be 7 shilling, which is this one, the labor hour, multiplied by the number of hours, which is going to give us 700 shillings. So for product Z, it is going to be our shillings 7 hour multiplied by the number of hours, which are 300 hours, and this will give us 1,100. So it is these are the figures that we are going to be taking up. So you are seeing the difference. The other side, we took all the overheads and we divided by one cost driver, which was the number of labor hours. But this one we get individual cost, we divide by its corresponding cost driver. So this one is going to be 70. This one is 1 to 10. This is 700. And this is 2,100. Then we go to number 7, which is going to be number 7, which is the setup costs. What we first of all do is the cost driver. We said the cost driver for this is going to be the number of production. If you have the number of setups, it would have been the number of setups. But this one, the cost driver is going to be number. So having gotten the number of production runs, then what the second item is to get the total cost driver. Just like the way we got the total number of overheads, the total number of labor hours that were used, it is the same way we are getting them here. We get the total, which is going to be, if you check the question, they have given us the number of production runs. These number of production runs, they are not per unit. If I thought they were per unit, we could have multiplied. We first multiply the number of production runs by the number of units. But since what we are given is not per unit, we take it the way it is. So it would have been 2 plus the 5 and plus the 5. And this will give us, that's 14. And this 14, that's the total number of production runs. There were 14. So it will be the budgeted cost. Now the third step is to get the OAR. We said the OAR, I'm not going to repeat for the formula. We said the OAR, and the individual cost for the setup cost was 10,920. 920. We divided that by 14. And this will give us 780 shillings. Sorry, this is 780. This is shillings 780 per production run, because we divided by the number of production run per production. Permit me to use PDN to mean production run. In other words, if we want to now, when you have got the OAR, the next step is to allocate each product with the required or with the related cost of that setup. So it will be the OAR times the number of units. So to get the one for product W, it is going to be the OAR, which is the 780 times the number of units. This is going to be multiply by the number of units. No, sorry, number of production run, not units. It's supposed to be production run, because the cost is this one, the 780 is per production run. It means for product W we spent only two production, we had 2 production runs. So it means it will be 2 times the cost per production run. And this will give us 2. Those are the number of production runs that we had for product W, multiplied by 780, and this will give us 1560. And it will be that 1560 that we shall take to our table. So we go to product X. I'm not going to repeat what I did, but it will be the same. It will be the OAR, which is 780. We multiply this by the number of production run, which were 2. So it will give us the same answer, which is 1560. Then we go to product Y, which is going to be the OAR, which is 780. We multiply by the number of production run, which are 5. This will give us 3900. 3900. Even for product Z, it's going to be the 780 multiply by 5, which will give us same answer, which is 3900. So it is these figures that we are taking for the setup costs. So we come to our setup costs here, and we pick the value, which is 1560. The next one is also 1560. The next one is 3900. Then the last one is 3900. Then we go to the production to working number 8, and our working number 8 is all about the expediting and scheduling. We said the first step is to get the cost driver. These are the steps that we spoke about, and the cost driver here is also going to be number of production runs, because that's the only thing that we have for scheduling. But we said to determine this, you will always use judgment. You see the best or the appropriate cost driver, it's the one that we use. Number of production run, we had already gotten. The second step would be to get the total cost driver. But since we had got it, since it is the same number of production runs, we had got it. What will only go to compute the OAR as our third step. And the OAR will be that cost for the expediting and scheduling, which is 9100 divide by the 14, which are the total number of production runs. And what we get there is going to be our cost per production run. And that will give us 650, that is shillings. I use that symbol to mean shillings per production run. So we repeat the same thing to get for each product. We said it is going to be the OAR. OAR we multiply by the number of production run. Number of production run that we are used in that product. Number of production run. Permit me to use PDN to mean production run. So this will give us 650 multiplied by the 650 will multiply by 2, which are the number of production run that were used in product W, and that will give us 1,300. We go to product X, it will be the same OAR, which is 650. We multiply by 2, which is the number of production run, and this will give us 1,300. We go to product Y, and this will give us, this product Y will be the OAR, which is 650, we multiply by the number of production run, which are 5. So we get the total, get the outcome as 3250. So we go to the last product, which is product Z, which will be equaling to the OAR, which is 650, we multiply by the number of production run, which are 5, and this will give us 3250. So it is these figures that we are going to be carrying to our cost sheet for expediting and scheduling, which is 1,300. Even this one is 1,300. This one is 3250, and this one is 3250. We do the same for 9, and we finalize. Maybe we can do the number 9 from here. We can do the number 9, so that we minimize the space. Number 9 is going to be the material handling. We said the first thing you look at is the cost driver. What brings that cost is what we call the cost driver. For those who don't understand what a cost driver is, we explained that in the previous video. Make sure you go and watch. The video is named Traditional Costing versus ABC. That's where we explained everything. You will be able to understand. By the time you do this number, you will be able to pick all the concept, because this is more like an introductory part, what we do in cost accounting, cost and management accounting. So we said the cost driver, the only cost driver that they had given us is the number of production runs. It's also going to be our cost driver here. Number of production. The second thing we said we do, or the second step, is to get the cost driver. But since we had got it, the thing we are going to do, we are going to look at is getting the OAR as the next step. The OAR will be the budgeted cost. For material handling, we are budgeted for 7700, which is 7,700 shillings. We divide that by 14, which is our total number of production run, and this will give us 550. This is shillings per production run. So what we do next from here is we allocate the cost to the different products. For product W, it will be the OAR. We multiply that by the number production run used, and for that product W, it will be the OAR, which is 550. Multiply that by 2, which are the number of production runs. And this will give us 11,100. So it is 1100. So we go to product X. Still, it will be the OAR, which is 550. We multiply that multiply that by the number of production run, which is 2. This will give us 1, 1, 0. Then we go to product Y, which is going to be the OAR, which is 550. We multiply by the number of production run, which are 5, and this will give us 2750. We do the product Z, which is the OAR, multiply by the number of production run, and this will give us 2750. So it is these figures that we are transferring to our cost sheet, which is 1100. Even this one is 1100. This one is going to be 2750, and this one is also 2750. So we add all that and we get the total cost. So we add all that and we get 4280. You can say equal sign. Equal sign, you put a sum. We are summing from this. So those are the costs that we've got. This one we have to add even these ones. So that's it that we wanted to know from that. That's it that we wanted to know. After getting the total cost, we can divide this total cost, we divide by this one, we divide by the number of units, which are 10, to get the cost per unit. So we can get even the costs per unit here, and that's going to be the thing they wanted us to compute. So that's all about the ABC system and the traditional costing. But just like the Y said, some of the things they are going to ask for advice. Most of the times they're asking for advice. So maybe I can remove the grid lines and you'll be able to see everything clearly. So most of the times they are going to be asking for advice. And what we need to do here is that we need to look at a question that is going to help us appreciate the advisory part that we may look at. And that's going to be from March 2021, question 2A. That's the question we are going to look at in the next video. That is going to help us understand how we can be able to advise when you have been given the profit from the traditional cost, and they want us to use the ABC system to make sure that we compute and advise on which one the company can undertake. But most of the times we already use the ABC system because it's what mainly the examiner is going to be asking. So that's all for today. Until we meet again, maybe for those who haven't subscribed, please make sure you do, because what we are going to be discussing is we're starting from the starting point until we finish the syllabus. This is a foundation that is going to help us pass some of these hard concepts with ease. So thank you for watching. Until we meet again. It's bye for now. Good afternoon, viewers. This is Charles Cafe, and today we are going to continue our series on overheads, and we are going to be looking at how we absorb these costs. And today I've decided to first take you through the ABC system, that is the activity-based costing system, and we try to look at it and we'll see how is activity-based costing different from the conversion costing system. We are going to be handling question 6, part C, December 2020, and it says Quality Chemical Cosmetics Limited is one of the leading manufacturers of cosmetic products in Uganda. QCL's management resolved to change from traditional costing system to activity-based system. The following information relate to the month of January 2020. And we have the categories of lotions. We have the item. We have now under the categories, we have the baby lotion, because these are categories of cosmetic products. And you have baby smooth and pure lotions. We have the production and the sales units in tins. For baby, we have 150,000 tins, and for smooth, 120,000 tins of smooth. Then production and sales is 150. What this statement means is that what they produced, they sold it all. Because they are saying production and sales unit, it means what they produced, they sold it all. We have the material. This one, material cost per tin. For this one, it is 1,600. This one is 3,000. This one is 2,000. Then you have the direct labor cost per hour, and we have, for baby, we incurred 1,200. For smooth, we have 2,500, and pure, we have 1,600. We have this is the direct labor cost per hour, but for us, what we per tin. So how many hours did we use in the production of each item here? Now they are saying that the direct labor hours per tin, we have 0.25. Those are hours per tin. It means to produce this unit of baby, we need 0.25 hours, and we shall be using this information up to get the direct labor cost. We have the direct labor hours. For smooth, they are 0.4 hours. Then for pure, we have 0.3 hours per tin. So we have the number of production runs. Baby, we have 5. Smooth, we have 11. And pure, we have 4. Then the number of inspections, we have 4 for baby and 7 for smooth and 4 for pure. Then number of purchase orders, we have for baby, there are 20 purchase orders and 18 for smooth, then 26 for pure. Then the following are the total overheads. Now these are total overheads. They relate to the whole production. If you produced 150 units, we incurred these total overhead costs for the above period. It means we've incurred the whole of this on the production of these whole units. We have the overhead items and the amounts in thousands. We have the setup costs. It is 18,250, but remember there is triple zeros up. We have procurement costs, 22,400. Then inspection costs, we have 12,200, and the total being 52,950. Then the required, determine the unit cost of each product using ABC system. Now what they want per unit. So we have to be computing per unit. So I want to give you some brief idea about the ABC system, because here they are saying that the QC errors management resolved to change from the traditional costing system to activity-based costing system. When they are talking about the traditional costing system, it is also the same as the conventional costing system, whereby here we are talking about costs being influenced or being incurred as a result of the products we are producing. Because when you are talking about the traditional costing system, we are talking about, if let's say we purchased 10,000 units of raw materials, we want to find out how much are we going to incur to convert those units we've purchased into finished goods. That is the conventional cost in brief. But what happens with the activity-based system? For it has the assumption that when these costs are incurred, they are not necessarily as a result of the output or the products we want to produce. For them, they are saying that to produce those items, we are incurring certain activities. And these activities, they are the ones that leads us to the units or the final products we are producing. So for them, what they do or what they assume is that these costs are not caused by the products themselves, but these costs, they come as a result of the activities that we do that lead us to the production of the units we are getting from the production process. And so for them, they assume that we first assign the costs we are incurring to the activities that are leading us to the costs. These are the activities we perform, and they are the one who's consuming the money so that we can produce the units, which is a bit different from the traditional. You can get an example. If, let's say, someone is purchasing, we are making raw materials, we are purchasing raw materials from a certain supplier. And what we go through is that we have to make purchase orders to that supplier who is going to be supplying us the raw materials. Now, for the ABC system, it says that the only activity that is consuming our resources or our money is the number of orders we are making in order to receive the goods we want, but not necessarily the items we are buying. If, let's say, for the traditional costing system, for it assumes that what these costs we are spending them on the units we are going to buy from the supplier. But for the activity-based costing says we are not incurring that cost as a result of the goods we are buying, but we are incurring that cost as in the number of orders or the ordering expense or the ordering process we go through. It is the one consuming our resources. So when we are to determine the cost we've incurred, we must accumulate first the activities that we are going to be going through. They are the one who's consuming our resources so that we get the raw materials. But for the activity-based concept, for it looks at the final product or the final raw materials we are purchasing, not the process we go through to acquire those raw materials. That's the difference. This one, as you hear the word suggesting, it is activity-based, meaning we are looking at each activity that consumes the resources so that we get what we want. So the cost objective is not the one directly leading to the cost to the costs we are incurring. It's these that we do that we want us to get to the final cost object. And that's how briefly I can give you an idea about the activity-based costing. And we shall get time and we for you a video that is all about the theory behind the activity-based concept, and we see the differences between the traditional or the conversion costing system and the activity-based costing system. So you can also go and read about that, so that by the time I drop this video, you'll be able to catch up and you have something to start with. So that's not my aim for today, because today what I want is to find out how we can calculate this and we get the unit cost for each of these lotions they have given us. So we got the solutions and we see how we can handle this. This is solution. We said it is December 2020. This is December 2020. We can change here, we put solution because it's already existing, solution 2020, December. Put it like that. Here we are starting with our company. Sorry for that. Our company is Choosy. Copy this one, paste it here. That's our company, and we are using ABC method. Then for the period, first we are going for the period for the month of January 2020. For the month of January 2020. This is a cost sheet or cost statement using ABC system. So you can proceed with, we are saying that that's our company and we are going to be proceeding. Here we can say particulars. Then our next one, we can put the bases, because here we are going to be absorbing. Then we put our categories of lotions. Here we can put the totals if you want. Then we put our baby. We have baby lotion, we have smooth and pure. Smooth, then the last one is pure. All of this is going to be in shillings, then this one in shillings. Then we have the production. Let's put the production and sales. These are in units. They say they are in tins. So we can put the number of units. Here we have, these are in units. You'll be seeing them here. And this is 150. This is 120,000. Those are tins. This is 1,500. 1,000 is 150,000. Those are tins. So now I put much, moving 10 like this. 120. Then we start with our, of course, we start with our direct materials that are used in the process. Then we put other conventional costs. We have the material that is used. This is, we have the material here. We used material per tin. This is material cost. Material cost. Here we have 1,600, then 3,000 and 2,000. This one is 3,000. The last one is 2,000. So then we get our direct. We can get our direct labor. Get our direct labor cost. This is direct labor cost. But for this one, what you want it in per tin. So they have told us that the labor cost per hour is 1,000. But remember, for us we need only the, this is direct labor hours per tin. These are the number of tins that we used in the production. So we are supposed to get, if 1 hour is equivalent to this, then what about these 0.2 hours? They will be equaling to what? That's what we are going to be looking at. Because what we want, a cost, we can put here as our working one. Working one, we have our direct labor cost, and we said 1 hour, we need to use that, is equivalent to, told us 1 hour is equivalent to 1,200. Sorry, said 1 hour is equaling to 1,200. Then what will be the 0.25 hours? This one, they will be equaling, we cross multiply, they will be equaling to 1,200. We multiply it by 0.25. Then this, the all of this one is over 1. I'm going to do 1, then the rest will be, all of this is over 1. When you've seen that, then it means we can now proceed with, and get here our direct labor cost, and we say equal sign, it is 1,200, multiply it by 0.25. We shall be getting 300. So for the other one, we shall be doing the same. It is 0.4 hours, which it will be 0.4 times the 2,500. This one will be equaling to 0.4. Those are the hours times the hourly rate, which is 2,500, which will give us 1,000. Then this one for pure, we have 0.3 hours, and each hour is costing 1,600. So it will be cosine 0.3 multiplied by 1,600. I'll be getting 480. Then we go to now these direct expenses, the direct or the prime cost. Now they are done. When you reach there, that's when we go to the ABC. This is where ABC starts. ABC starts from here. When you have got this direct or the prime costs. Prime cost includes the direct material, direct labor cost, and the direct expenses. So from here, that's where we see the overheads. When we see the overheads, it means that's where we are using our ABC, where we are going to be allocating. And when we are using ABC, there are some steps we follow. So steps to be followed. One, there are steps we follow when we are using ABC. And these steps, they ask them theoretically and when you're using computation. One, the first one, we have to identify. Let me put them in blood so that you'll be able to see them. One, we identify the activities that are consuming the resources, the available resources. That's what we first look at. We first determine the activities that are consuming our resources. Secondly, we choose or we identify the appropriate cost drivers or the bases that are used to. Then third, we compute the overhead absorption rate. In bracket you can call it the OAR. And the fourth one, we absorb or we assign the overheads to different cost centers or departments by using the OAR. Permit me to use the short form. Then the last one, we sum up, we get the total. We compute the totals for each department or cost center. And that's all. That's what we need. That's all we need. These are the steps we follow using activity-based costing. These are the ones we are following. So first of all, we identify the activities that are consuming our available resources. And when you look at this, these are the activities, these are the costs. So these activities, we have them, we have the number of production runs, we have the number of purchase orders, we have the number of inspections. Now we are going to assign or to choose the appropriate one. If we are incurring setup costs, you just know that the setup costs, when you're setting up an organization, if you are engaging into production, you first arrange what you are going to be using. You know that, and this one is supposed to go in this department. Those are the setup costs we incur. When you are incurring those setup costs, we are incurring them because we are trying to look for how we can produce. So the appropriate cost driver is going to be the number of production runs. Then the procurement costs. The reason why we are incurring this procurement cost is because we want to purchase goods. So these procurement costs, they are incurred the number of purchase orders we are making. Then inspection costs, of course, they are incurred on the number of inspections. When the inspection is high, we expect that these ones are also going to be high. So we've got the cost drivers, we've got here, we have the overheads, we have the first overhead, we have the setup costs, and we say the appropriate base is number of production runs. It means that this step is done. We identify the activities that are consuming identify the activities that, sorry, I did not complete this one, that are the variable resource. And we have identified that it's number of production runs that are consuming the setup costs. So having known that, we've got the appropriate cost driver, that these costs are incurred as a result of the production runs. When they are increasing, then the setup costs are going to be increasing also. So we compute, here is to compute, we compute our OAR, that is the overhead absorption rate. And I'm going to show you how to do that. And this will permit me to use a short form so that it's not wide like the way it was, because I don't want this one to disappear the other side before you get to see it clearly, because I want to be doing whatever I'm doing when you can be able to view everything. Then the other one is the procurement costs, and we said this procurement costs. Procurement costs are incurred on the number of purchase orders. Then we have the last one, which is the inspection cost, and the inspection cost is incurred as a result of the number of, this is inspection costs, and they're incurred as a result of the number of inspections. So we've got that. What is remaining is this will be our second working, where we are going to be getting these overhead absorption rates. Working 2, we are looking at OAR. So we have the cost, let's use costs, and we have the cost driver. Then we have, let's get our OAR from here. We start with this. Let's first fill in these. Of course, we need our departments. Remember, these OAR, they are in different department. You can say baby as it is, smooth, then pure. I remove that one from there. We have these are setup, then we have procurement, then we have our inspection. So the cost driver is production. Permit me to use PDN, production runs. Then this is purchase orders. Permit me to use orders. Then here I use inspection. Here we can put our totals. We check out the cost is, cost, we need a column for cost. Let me put this one cost, total cost. Then I think that one is enough. We can start this. We have the setup cost. It is 18,250,000. This is 18,250,000. 1, 2, 3. Then for this one, it is 22,400,000. 22,400,000. Then the last one is 12,300,000. This can put our totals here. Totals. Now you may be confused. What are we looking at? But finalizing, we are going to look at. Then we have this one, the production runs. We have 5, 11, and 4. This is 5, 11, and 4. 5, 11, and 4. Then for this one, we have inspection. We have 4, 7, and 4. Inspection, we have 4, 7, and 4. Then for the last one, we have 20, 18, and 26. It is 20, 18, and 26. So we get our totals here. We get them from here. The totals we are looking at this number of production runs. Get the sum, the production runs, sign sum, go to the totals. So these are our totals. So we want to get the OAR and put our OAR here, OAR, and it is going to be this, because we said when we are getting our OAR, we said to get the OAR is equaling to the total overhead, overheads. The whole of this is over, it is over the total activity level. That's how we get the OAR. So when we are trying to absorb, when we are getting the absorbed overhead, we multiply this by the activity level share, activity share per each department or per each product. Here now we are going to get for this setup cost, it will be this, we divide by this total. It is equal sign this, which is the total cost, we divide it by the total activity level, which will give us thus. And this one, the overhead here, we are getting the unities per production run. Let me put it a bit so that you can be able to see. Here what we are getting, it's like a unity cost per each production run. That's what we are getting here. It is per each production run. So when we get this one, it will be equal sign this, or we can just click here and we get that. The whole of this, sorry, this one is supposed to be here, cut it from there, it's supposed to be here. That's per production run. This is per purchase order. Then this one is per inspection. Hope you can be able to identify this. That's how we get. So when you want to get the absorbed overhead, we said if you want to get the absorbed overhead, we said it will be equaling to the OAR multiply by each share, each department share or each product. And this time we are talking about, we are not talking about department, we are talking about products. So we are going to get per product share. And for this one, so this is what we want. But remember, this the whole of this cost is for the whole of this production. But for us, what we want, what we are putting in here, we are putting for only one item. It means that when we get, let's first get the absorbed overheads. Can highlight this one and we put it here. We can copy that and we paste it here. So if we are getting the absorbed overhead, let's put here absorbed overheads. This absorbed overhead will be our OAR. We multiply by the departmental or product share. And then this time we have our products, they are here. We can also copy these ones, we paste them here. These are products, these are the product shares. So we have to get the production units, production or sales units, production and sales units. Production and sales units can permit me to use PDN, then this one I can use that, and sales. Then we get our unit cost, because what we are going to get here, the whole of these costs were incurred for the whole production, but this production unit, they are supposed to be here, so that we just divide, but I can pick it from here, but I hope you get to know that. I'll pick them from up. So we've got our OAR, and these are our OAR. Can try to copy them, paste them here, sorry, pasting figures. So we get these departmental shares you are seeing here. They are the ones we are going to get. For baby, it means we are going to get this. It will be this. We multiply it by this, which is the number of setups. Press enter. The whole of this we are seeing. Then for this one, it will be equal sign this. We multiply by this. Then for this, it will be equal sign this. We multiply it by this. So we have here, we have this one will be this. We multiply it by this. Then for this one, it will be equal sign this. We multiply it by this. It will be equal sign this. We multiply by this. Shall be getting that. Then for this one, it is this. Multiply it by this. Then it's also this. Multiply by this. It will be equal sign this. We multiply it by the last one. And whatever we've got here, this one we can move them and we put them and put them this side. The production, this is production and sales, then the unit cost. But our unit cost, we may even leave it, but let's put it there because we are supposed to transfer this figure from here up to this side. That's where we are going to use it. This one we have, they are 1,500, sorry, they are 150. This is 120,000, and this is 150,000. So when you get that, then to get, because we've got this, then we are supposed to get per unit of each. And to get the unit cost, it means we are going to get each contribution from here. We divide by the number of units, so that we get the numbers that we are going to be putting here. I hope you've got that. This is our total cost we've incurred, this one. But this cost was incurred to produce the whole of these units. But in the question wants us to determine each unit cost of a product. It means they don't want the total cost, they want per unit. And you cannot shift this 4.5 to this side because you'll be seeing that it is small. This one is just 1,600 and 300, and you just post in there 4 million. You just see that it is not qualifying to be there. So for this one, we just say that it is equal sign this, then we divide by the production units, which will give us that. And it is 30 something, 30.416. Then it will be this figure that we are going to be transferring to the other side. Hope you've got how we do that. Then we come and paste that figure here. These points, let's leave these points. We may round it off and we just take the 30. Then we do the rest. We can even leave this and we just get, since we have this, we just remove these figures and we'll be getting them from here. We say equal sign this, then we divide it by the number of units, which are these ones. Press enter, we get that. Then for this one, it will be this divided by the total production. We get that. Then we go to this one, it will be equal sign this, because the total cost we've got already, divided by the production, and we press enter. Then this one will be equal sign this, divided by this number of units. Press enter. Then this will be equal sign this, divided by the production. Then for the number of inspection, so I put it in a wrong order, I think. No, it's the same order. The production, the inspection there, the one is coming last. So it is this divided by this. Press enter. I've made a mistake here. This figure is much. This figure is 1.5, yet they are 150. Let me see, they have changed. That's the good thing of using Excel. You change one thing and the rest adjust themselves. Then for this one, we are saying this equal sign this divide by this. Then for this, it will be equal sign this. Then we divide by this. And that's how we get that. Then what's remaining, because we've computed the OAR and our OAR as this one, the next step was to assign this OAR to the department or the product contribution. That's what we did. We got this and we multiplied by these department contributions. And the last step is to get the totals for each department. We get the totals. And to get the totals, we add from up. It is sum from here. Remember, we are not including in the units. We are taking the amounts only. Then you can also drag like this to get the total costs for that. If you want, you can reduce the decimal places, put in the borders, and put in, when you put in that, it will remove the decimal places, but you can even put them back if you want, like that. You can increase as many as you want, but let's make it that we don't have decimal places, and we just leave it like that. We save it. So that's how we can do that. And try to center this one, or we merge. Sorry, can try to save. And that's how we do that. There is an alternative. The other alternative we used the last time when we are doing reapportionment, and we are just using proportions. I told you these proportions, they give you exactly the same answers. If you use OAR, it will give you the same answers like someone has used the proportions. But my emphasis here is one, that when we are using ABC, we make sure we use OAR, because OAR is the one that helping us to absorb. So if they are telling us to absorb, then we are supposed to use OAR. If we are just allocating and apportionment, and when we're just apportioning, we make sure we use the proportions, because when you're absorbing it, you are directly on the final products. So when you're doing so, you make sure that you use the OAR. But when you're apportioning or allocating, you use the proportions, the formula we got when you are using the simultaneous and the others, direct method and others. So I hope you get the difference. There is a very big difference between absorption and, because when you're absorbing, you are absorbing from the production department. You have already converted all the costs. But when you're using the other sharing or the proportion method, you are just attaching, giving proportion to where they are supposed to be belonging. But all I can tell you is that they give you the same answers. Whichever way you go, but it's better when you're absorbing, you go by this. And when you're using the apportionment, you go by the other proportions. Thank you for watching. Hope you guys you can subscribe and something to learn from ourselves, and you can push and learn more as the time goes on. Thank you. Welcome back, viewers. Today we are starting our series on process costing. Before we look at it, allow me to take you through some of the costing methods. Of course, when you're looking at costing methods, we have, first of all, these are the methods that are helping us to accumulate the costs that we are going to be incurring in the production of whatever we shall be producing, whether manufacturing or whether we are just purchasing them. So there are some of the common costing methods that we use in cost and management accounting, but with the respect to this level, I'm going to be talking about only two. We have the specific order costing, that includes both the job costing, contract costing, and batch costing. All of those ones, they are just within the specific order costing, which is as per the customer's specifications or customer's requirements. But this process costing, for it, it's a bit different. It's one of the costing methods where we accumulate costs on the products that are produced using different processes or departments, but each process is having a different operation, and the costs incurred there are different in each department, but we produce commodities that are identical or standard, and they are not as a requirement of the customer's demands. We produce whatever we are producing so long as it is identical, homogeneous commodities. We produce, if it is cement, we produce cement. If it is soda, we produce soda. So that's what we are going to be talking about. The other costing method, which we have the backflash method and the hybrid method. Of course, those ones, they are not part of our syllabus, but we can talk about them. Maybe we can talk about them later, because what I want to first concentrate on is the process costing, because for it has a bit of complicated computation, especially when they are work in progresses and their degree of completion there. That's why I chose to first begin with this. But the other ones, they are a bit okay. If you know how to absorb overheads, then you can be able to handle the job costing and the badge costing. The one which is a bit unique is the contract costing. That one we shall look at it. But without wasting time, allow me kick off with what we have for now, since we've known that this is a costing method that is part of the other two, that the other three we are not going, we've mentioned, and we are saying process costing refers to or represents cost accumulation method that establish the cost of a product or the cost of products, services, activities, or a job that passes through a series of sequential stages before they become complete products. Here, what we are saying is that we make sure that the products we are producing, they are going through a different stages. And in each stage, we use the different raw materials and we incur different costs in the production. Because if this process were similar, then we would be having only one process that could help us to produce those items until they are done. So we have different stages, and at different stages or at different department or process, we have different activities and we incur different costs. But what we are producing or what we are looking at is a final product that is standard and homogeneous. You can also define it as the form of operation which is used where standardized goods are produced in large volumes or large numbers with a continuous production flow or departments. And the other person can call them cost centers. These are different departments, but they are within the production. So we are saying that the products are not manufactured to meet customers' specific requirements, because in the other methods like job costing, you find that the person is producing only according to what the customer wants. If let's say someone is manufacturing, let's say a chair, if it is in a carpentry workshop, you find that someone does exactly what the client wants. But this one, since we produce in large numbers, we don't have customers' specifications. We just produce, whoever finds them, they will buy. That's how it is. So we are saying that process costing, it is just a process by process, meaning what comes from process A goes to process B, and the other one goes to process C until the finished goods are produced. So what we are expecting is that we can talk about some of the industries where we use some of these process costing, so that we can know how this is done. Some of the industries, we have the breweries, we have those who are manufacturing sodas, beers, and others. Of course, you find that the company is delivering exactly the same product. They may be just different by name, but all of them, they're using almost similar resources. So we have the textile industries, these were making clothes and others. We have the cement industries, the paper making, and finally we can talk about the oil or oil refinery. You find that for the oil to be complete, you find that they are extracting the crude oil from somewhere, they are putting it to a different place, and different activities are done in where they have taken the first one, all the inputs from another process. We can talk about it in terms of the non-manufacturing industries, because there are other scenarios when we can use them and they are not in the production. One, we have the check clearings in the bank. When you are clearing, when banks, they are clearing those checks, one submits a check and supposed to be paid to another bank, you find that what the process they go through, they follow certain stages, that if you start with this one, you end with this until the money is deposited to the other person's account. We have the mail sorting in the post offices and others. Of course, these post offices, most of the times you find that they are because of the technologies and these social media platforms, they make the use of post offices to be at least of less use these days because of the technology. But we used to have that, and having known what process costing is all about, we can try to look at the flow. How do materials flow from stages to different stages until the output or the final products are produced? Now we are looking at how these costs are flowing within the process costing, the flow of costs in the process costing system. We are saying that production moves from one process to the next until final completion occurs. What we are saying that if you put in raw materials, let's say in process A, it moves from process A until we reach to the final process that gives out the final products, and we take those products to the store. We are saying when that process is occurring, there are some things we have to note. The first one, we talk about the cost that we are incurring in the processes. The costs we are incurring in the process, let's say process A, when you use the diagram below, the costs we are incurring in process A, we transfer them to process B, Remember, in process B, you may find that there are other costs which are existing there, but they are not existing in process A. So we bring the costs we've got from process A, we add to those ones we found in the process B, and the process goes on until we get the finished goods out of the last process. We are saying that each production department performs some part of the total operation and transfers its completed production to the next process. When it transfers that, then we expect that what it has transferred becomes the input for the other process. The input of this process A becomes the output of process A becomes the input of process B, and the output of process B becomes the input of process C until we get the finished goods. Hope you can get that. And the main aim as to why we are going through this process or these operations, we want to change the raw materials into finished goods. And how are we converting these raw materials into finished goods? By adding other conversion costs. We say that conversion costs, those are the costs that are helping in the conversion of raw materials into finished products. And when we get these units, then we can take them to store. Either we sell them or we take them for other stock taking and other computation that may happen, and we know how much we've incurred and what output have we got. We try to compare it with the input, and we try to see whether we've made a profit or we've made a loss, depending on the number of units we produced. Then we are still on the flow, and we say that this just explains what I've been telling you, that products which are coming from process A goes to process B, and they become the input for process C. And say that the costs of process A are transferred to process B. The process B costs are then added to this cost, and the resulting total cost is transferred to the process C, where the process C costs are then added to this cost, the cost we've got from B, and therefore the costs becoming cumulative as production proceeds, and the addition of the cost from the last department is cost represent the total cost of production. What we get out of this production, this process C, becomes our final output, and the total cost we've incurred in that, the accumulation of the costs we've got from A, B up to C, we sum up and we say that these are the costs we've used in the production. So having known that we've got the units, and we've already estimated or we've already calculated the costs we've incurred in the production of those units that have moved out, we witness effects. One, when you're doing production, we expect that the items, if let's say you enter 10,000 units in the production process A, we expect that when you put in 10,000, we don't expect that we are going to be getting exactly 10,000 as in output, because we expect that there are some normal losses that may occur within, and those normal losses, they may come as a result. You might find that the nature of some raw materials, you may find that some raw materials can even evaporate. Let's say they are just in liquid form, they can evaporate, which will cause a mismatch between what we've put in and what comes out. So we expect two things. We expect that what we have put in is not exactly what we are going to be getting out of the process. So if it is true, then we expect that we are going to be having normal losses. And we are saying normal losses, those are losses we expect to incur, and the management has no control about them. They become they may come as a result of natural factors, machine. You find that there are natural factors that may occur and cause the production to incur losses. We expect that the nature of the material themselves, they may be of a poor quality, which will make the production or the output to be low, and when we have consumed a lot of the raw materials. So those are the things we expect. So when you come here, if we've got the total cost we've incurred in the process, and we said we expected to incur normal losses, and even the losses, the other losses may come as a result. The products comes out, but they are not of good quality, especially these. If you are just starting the process, those first items that come out, you may test and we find that they are not at the required standard. And what happens is that when, let's say, we've produced some items and we find that those items, they are not of the quality we wanted, we are not going to throw those items. We may find that those items can be used by different companies that can use them as their raw materials. So what we do, we can even sell them off, but we sell them at a less cost because they are not of a good quality. We reduce the price. So when we have that, realize them, when those normal losses have occurred, and we can realize we can get some money out of the sale of those normal losses, we call that scrap value. That scrap value means it comes as a result of the normal loss in units. We multiply by what they are paying us, and we get the scrap value. So what happens is that when you're trying to determine the total cost of the output of the units we've got, or we are expecting to get from the production, we get what we have incurred in the process as the total process cost. We less those scrap value or the normal loss value, and we divide by the expected output. And to get our expected output, since we said that what we are putting in the system is not exactly what we are supposed to get out as an output, then we expect that we are going to be having a normal loss. So what will happen is that we shall get the input, what we are putting it in the system. If, let's say, there are 10,000 units, we less the normal loss. If, let's say, the normal loss is estimated at to be 10% or 5%, we deduct that, what we get will be the expected units. But there is a scenario which happens that even what you have expected is not exactly what you've got. We may say that we are inputting 10,000 units in the system, and you find that the normal loss we assumed to be 10%. And if we are putting in 10,000 units in the system, we expect that if the normal loss is 10,000, sorry, it is 10%, it will be 1,000. So it will be the 10,000 minus the 1,000, which will give us the 9,000. So what happens is that when you're expecting to receive 9,000 as in terms of the expected output, but what comes out of the process, we find that we've produced, or we've got only 8,000 instead of the 9,000. We just know that we've incurred an abnormal loss. So an abnormal loss means that is a loss that, if we had taken a good precaution, we could avoid that loss, so that we get the expected output. But since we have not got that, it means we've incurred an abnormal loss of 1,000 units. And to a surprise, you may find that your expected output was supposed to be 9,000. If you had put in 10,000 units and the normal loss was 10%, which was 1,000. And you may find that when the actual production occurs, we've incurred, or we've produced we've got, let's say, 10,500 from the production. We shall say that since we expected to produce 9,000 and we've incurred 10,500, that 1,500, which is in excess of our expected unit, will be our abnormal gain. So it means at least we've got, it's like a profit. So you've got that. So I hope you can get now the difference between the expected output and the actual output themselves. What comes out, the difference between the expected output and the actual output becomes either an abnormal gain or abnormal loss. That's how we compute that, but don't worry, we shall see all of those ones when you go to the computations, but you just keep in mind the formula for defining the cost, for determining the cost per unit of the production process. We get what we've incurred or what we've put in as in the process cost. Total process cost will less the scrap value, and we said to get the scrap value, it's our normal loss in units. We multiply by the selling price of the normal losses. Don't worry, this normal loss figure they will give you in the question, and the selling price of the normal loss they will give you in the question. We divide by our expected output. We are dividing by the expected output, not the actual output. And to get our expected output, we said it is the input minus the normal loss. We are saying that at every stage or at every process account and other accounts are opened and debited with all the costs incurred in the production. You should remember this. It is debited with all the costs that are incurred in the production and the gain, if any. These are the two things we debit on the normal, we debit on the process account. The reason why we are debiting them, because they are expenses, we have incurred them. If they are expenses from accounting, that expenses we debit because we have given out money. It means we've incurred some money, we have lost cash, we credit our cash, then we debit the process account. And here, what happens is that when we get the output, then this output is supposed to be credited. The reason why it is credited, because what it is coming out as what we've got in terms of what we've put in. And all of those gains and losses, you now know where to put them. So I can just give you an illustration of how, or a format, you have a look at how this process account looks like, and we shall continue to learn more as we go to the computations, but you have to get this theory in your memories, because it's this theory that helps us to get the computation when we know where we are heading. So that's the format of a process account. And we have this column is for, you can call them items or particulars or details. We have the units. It's a T account. It's a ledger account, actually. It's a ledger account which has both, this is the debit side and this is the credit side from your accounting. We said we debit this process account with all the costs we've incurred. These are the cost, material costs, labor cost, overhead cost. If we had even the direct expenses, we also put them, so long as they are expenses and we've incurred them in the production, you debit them, and we also put the abnormal gain. The reason as why we are putting the abnormal gain, it's like a profit, we've earned it. But if it is a loss is reducing on our costs. That's why it is credited. All the losses are put on the credit side, because we are reducing. If you put this loss this side, it means we are reducing on what we've put in as the cost. So that's how this looks like. And the reason why we are putting closing stock and output is one, that you may find that we have some closing stock that was at a certain degree of completion. Those ones we shall see them. The likes of equivalent production, those ones we shall see them when we go ahead with this. So what I want you to do is to make sure you subscribe so that you be able to have this information and you'll be able to learn more. Thank you for watching. Welcome back, viewers. This is Charles Coffee, and today we are going to start our computations on process costing, and we are going to start with a very simple question so that you could be able to master whatever we are going to be doing, and we shall be progressing from different items as we handle them in the processing accounting. The question we are going to be saying is, in a manufacture of a product, there are 4 processes, namely, that's 1 up to 4. And we are continuing that during a certain period, the following cost data was obtained, and we have the items, we have the process, this is process 1, process 2, up to process 3. But we have all of this information in terms of shillings. We have the direct materials that we used in the process 1, and they are saying they are 2,000 units valued at 5 million, and the rest of the processes we have 0. It means that what comes from process A, the output of process process 1 becomes the input of process 2, and we continue until we reach to the final stage where we are going to be having our output. We have the additional material. So these materials are added and they are called purificants. They are used as a supplement to the main products, and you are seeing in process 1 there is nothing we add on. It is 0 because we already have the materials. Because these ones are acting as supplementaries or they're supporting the other main material, then we expect that in the process 1 we don't have anything, so that the only way we can add on is until it reaches the second process, because we said that in these processes we expect that what takes place in a certain department may be different from what is taking place in the other. So we have the direct wages. Now we are paying the workers who are using or who are involved in the production, and we have the direct expenses we are incurring. Then the question says the production overheads for the factory for the period was 2.5. It was shillings 2.5, 2,500,000, to be absorbed by processes on the basis of 25% of the direct wages. It means that 2.5 is the total, but we are absorbing it using the wages as our basis. And they are saying during the period there was no stock of raw materials and work in progress, either at the beginning or at the end. It means we never had work in progress, and we don't get work in progress as at the end of the process. Then they are saying prepare the process cost accounts. You are expected to process the process accounts for process 1, process 2, process 3 until we reach process 4, where we are supposed to be getting our output. We can create here, or we can do it from here. I hope it can fit, but I know it can fit here. What will be better, we use, then we put here a solution, we use a different sheet, and we are starting with the process 1. That is process 1 account. So whenever you are doing this question, whenever you are doing these questions of process, you have to first make an analysis of the information they have given you up, especially when they are work in progress, when they are opening stock of raw materials, where there are normal losses and whatever. You have to first make analysis. But since we don't have that, all of those ones, we can just proceed and we start with our accounts. We said here we put it's a T account. We're going to be particulars. Then we have the unit. We go to the unity cost. Then we get the amount. Then here we have the particulars. we have units, we have unit cost or cost per unit, then we have the amounts. I'll try to make these ones a bit bigger. Then we can start with our, we said all the expenses we've incurred in the processes, they are supposed to be debited. Then the output we get out of the processes is supposed to be credited. So we have our direct material, have direct material of, they have given us the number of units. There were 2,000 units. These are 2,000 units, and they were valued at 5 million. So here the value is 5 million, 1, 2, 3. So we can determine our unit cost by getting the total cost. We divide by the number of units. Since we said we don't have normal losses, we just divide this to get the unit cost. It was 2,500. So we have additional material in the process 1, it is 0. So we go to the direct wages, which was given to us as 4 million. This is 4 million. Then we have the direct expenses are 1 million. Is 1 million. The question they gave us also that this production overhead is consumed or it by all these processes using 25% of the direct wages. What this one means is that when you get the 25% of the direct wages, for that will be for each process. Let's say 25% of process 1, this is 4 million, this is 3 million, this is 2 million, this is 1 million. When you sum them up, they shouldn't exceed 2.5, because the total is 2.5, but they are the way they accumulated those costs is by getting of this. This is how they got that. So we get 25% of 2 million. These are our production overheads. And I try to enlarge this. Production overhead, they said it is 25% to be equal sign 25% of, we are multiplying by the direct wages, which will be giving us 1 million. So if we have 1 million, it means we are now left with 1.5 on the 2 million they gave us. So there is nothing we can add on, as they are all done. Then we can sum up and we get the cost. This one is 2,000. When you balance it off, get here the totals. Here to give you a scenario, here you don't divide that you get 4 million divided by 2,000. No, because we don't know which rates they use to determine the wages. For this one, we can do that because they have given us the number of units. We can easily trace them, trace the total cost, and we'll find the unit cost. But this one, you don't divide, because this is the cost of labor that they used to, that was put on this 2,000 to make sure that it is converted into a finished product. But you don't divide. The reason why we are not dividing is because we don't know which rates they used, which method did they use to determine all of that. That's why here we put nothing. Then we sum up this one. We shall get the sum. It will be that up to there. Close that. To be giving us that. So we want the amount from this side, and what we are going to be having this side, we say this side, if you have the normal losses, if you have the abnormal losses and the closing stock, we put them here. But they told us there is no closing stock, there is no normal loss. So what we have here will be the output. But instead of calling it output, because the processes, they are not yet done, we shall say that transfer to process 2. Or you can just put, if you don't use transfer, if it is a bit wrong, you can just say process 2. When you're saying process 2, it means we've credited this one using process 2. So when we reach the process 2, we have to debit by this. So you get to know that when we've credited this using process 2, so when we are taking that figure, when you are following the double entry, it will be debited to the process 2 account because this side you have credited it. So if they have not given us what they produce, it means whatever went in came out. That's the implication. If they don't give you the expected output, then we assume that what we put in, all of it came out. It will be 2000, but now we need to value this. It will be valued at what will be the price for these units. How do we get that? We said to get the unity cost, we gave the formula for unity cost. We said it is equaling to the total process cost. We less the scrap value, then all of it we divide it by, we said we divide all of it by the expected output. That is expected output. So that's how we get that. But since we don't have the scrap value and we don't have all of the information, we shall just take this 11 million. It will be equal sign this. We divide by the expected output. We said since we're not given normal losses, so we assume that what we put in came out. You can just divide that, or you just divide by this. We get the answer. So it means that these units were sold at this cost. It will be 55. When you multiply this, you'll be getting, can say cosine this, multiply by this. It will be that. So when we sum up here, we are going to be having the same 2000, and here we are having the same. You can try to double underline so that you know that you are closing off. From there, you just know that this account is now closed. You can put in borders so that we have something which looks like bit profession. So that's how we do that. You can try to highlight all of the figures, or we highlight only these. This is total. So that one is done. That's the first account. So open another account. We can just use the same information. Can copy this one and we paste it here. So this one is supposed to be called process 2 account. Now this one is called process 2. So we can fill in the information that is pending. We have the same material, but here we are going to add an extra line for. Can add it from here, say insert, and we put an extra that is additional. So when we get that, we shall go to the question. The question says we have now what we have to start with is this. What we said, this was credited, so it must be debited within here, and it is coming as our. Here we don't have the raw materials. We have process 1 account because we did not have materials here. What we only have, we have the output that was for process A, because if you put here process 1 account, you will be seeing that there is a double entry. We've credited this side, so we are debiting this side. Let me make this one a bit broad. And what we're moving there, we are removing the 2000 units at a cost. We are taking this cost at 5500. Then the total is 11111, like that. Then we put the rest. Having completed the double entry, then we go to the additional material. We added 3 million. So we put in the additional material of 3 million. Then we have the direct wages. They said it is 3 million too. So even this one is 3 million. Then direct expense is 0. We don't have direct, we did not put the expenses, so we have to go to the direct overhead, the production overheads, but they told us it is 25% of the direct material. So it is going to be equal sign 25% of the direct material. The direct material is 3 million, which is that. Sorry, multiply by the direct materials. which will give us 750. But remember, the other one we used 1 million, so this is 750. We have to get difference. We see the whole total was 2.5 minus, now it will be 1,750,000. So meaning we are still having we are still having 750, because there is, when you add this one plus this one, we are not supposed to exceed the 2.5. So we add the total, we get the totals because there is nothing we are putting in there. The total is still the same. Then we get also the sum from here. Then we transfer this to process 3. Process 3 account. Then here we can add account, so that we separate. But what are we taking? We are taking the 2000 because they have not given us what came out. So we assume that whatever was put in also came out. So to get this one, we are not going to use, we are not going to write another the same formula. It will be the same. We are getting the total cost over the number of units. So it is going to be equal sign this, which is our total cost, we divide by the number of units. So it will be that when we multiply, it will be this, multiply by this, and you get exactly the same answer. So we bring this one this side, 750,123. We can try to highlight this, have to double underline. This is accounting, we double underline them. This means closing off the accounts. It means nothing is going to happen again. Here we have 2000. We also have to close it, and that one will be done. Can put in the borders so that the work looks a bit unique. Here, these are the totals. So that's the process 2 account. But remember we are transferring these units to process 4. But what happens is that when you are seeing that the costs, they are increasing, it means what we've got from here is no longer there. So it is within this. So when we transfer these costs, we transfer everything and we put it in process 3. So we can copy this one, copy, then we paste it here and try to merge this. But now this is process 3. This is process 3. And try to remove the whole of this. Then we put in the units, what we transferred from process. This will be now process 2. We are moving the items from process 2. We've removed that. We are removing it at its own cost, which is 88,750. Then we get also the 177,50,123. That's it. And we get the additional costs that are incurred there. The process 3, we did not put in extra additional material. We added only the direct. It's only the direct labor that increased by 2 million. And in this time, the direct expense went up to 500,000. So we are putting in, this one we did not incur, so we are putting a 0. This one went up to 2 million. Yeah. Then this one was 500, 1, 2, 3. Then we have to compute for this. But they told us it is 25%. It is 25% of the direct wages. And it is giving us 200,000, 500,000, sorry. So it means that our total cost which we incurred will be from here up to there. We are adding what we got from the other processes. We add what we've accumulated and we transfer it to, this will now be going to process. And what are we taking? We are still taking the 2000 units because we are told, and to get our unit cost, we get, it will be equal sign this. So this one, we divide it by the 2000, which will be 10,375. When you multiply, shall be getting still the same answers like that one. what you have to make sure is that these figures, they are supposed to balance. The number of units, they must balance, whether they are losses or whether they are what, they must balance, because those units that you study with, when at the end of the day, when you finish everything, they must be balancing. You can try to close off this and also close off this one by double underlining it. Close off also this and the last one, which is that. I hope you've seen how we do that. Can also try to get to that. Here we have the totals. So we can draw our last here. Let me try to paste it, see if it can come. Now let me copy it from here. Can put it here. I know it can fit. The good thing, it has fitted here. Let's try and get to this so that we see how we can finalize this. Can try to enlarge this one, particulars, at least for it, it needs to be big. And this one, can try to change this. We wrap up. Oh, sorry, I can't wrap. Hope you will be able to see these figures. This is now our process 4, which is the last one, because you need to see this. Let me try to enlarge. Hope you can be able to see everything. This is our last process, and here we are saying it is now from process 3 account. We've brought that with its cost, which is 10,375. The total cost is 20,750,000. That's the cost. Then we, of course, we have other additional material. We added 2 million, and the other one, the direct expense and the direct labor, they are 1 million, all of them. This one we added 2 million, 1, 2, 3. Then for this one we added 1 million, 1, 2, 3. Even this one, 1 million, 3, 1, 2, 3. Yeah. Then for this one we have to compute. They said it is equal sign 25% of the direct labor, and our direct labor is 1 million, so it will be 250. Remember, here we had, this is 500. When we add the 250, we are going to be having 750. When we add to this one, to this 750 we have here, it will give us 1.5. When we add the 1 million, it will be 2.5. That is what they gave us in the question. That was the meaning. So we can sum this one up, is that. Then we have now this one is no longer called to process 5. It is now called the output, because that is, or you can call it output or finished goods. The finished goods, they are still the same, 2,000, because we did not have. And to get this one, we said we divide the total cost we've incurred in the production by the number of units. Then we multiply it by this. It will be giving us that. Then we close off the accounts. This is 2,000. And this one is 25 million. 1, 2, 3. So when we are done with that, this one is total. And we can try to put these borders, and we see how we can make it look like it's fine. Then we try to close off this by double underlining it, and this the figure, the one we are double underlining, then this one, then the last one. That's how we are supposed to get that. We can try to, the whole of it, we put in the separators, we get something which is a bit okay. Hope there we could be able to get that. This one we can enlarge it a bit so that we can fill those spaces, and I see that we will be able to get this one very right, and that's all they needed from us. We can save it. That's what we were supposed to look at. This is the first unity cost. Remember, these formulas, they are not provided in the exam, so you are supposed to master them. That's all, and we can see that hope everyone can be able to understand this. It is very easy. Then we are going to look for others that has a bit, some component of normal losses, has some bit of closing work in progress until we reach to the equivalent units, and we see how we can solve them out. Just make sure you subscribe and you'll be able to follow each and everything we are posting. Thank you for watching. Good evening, viewers. Today we are looking at the computations of process account, where we have process losses, process gains, and abnormal losses within one question, and we are going to look at how we can handle this so we can kick off without wasting time. We are using question. It says Tororo Factory Limited produces product B, which passes through 3 processes, 1, 2, and 3. The data below relates to the month of May 2022. We have the items, we have the processes. These are the processes. Can try to merge these ones. These are processes. These are the processes. We have process 1, process 2, and process 3. We have the items. We have direct material. It is taking this amount. For process 1, it is 40 million. Process 2, it is 20 million. Process 3 is 24 million. We have direct labor is taking 30 million in process 1, 15 million in process 2, 20 million and 80,000 in process 3. We have direct expense is taking 12 million in process 1. This one is taking 2,250,000. That is in process 2. This one is taking 10,768,000 in process 3. Then we have the production overheads. The production overheads, they are 10 million each of the 3. They are 10 million each of the 3 processes. So they are saying that 20,000 units were introduced at the beginning of the process. That is process 1. They introduced 20,000 units. We have the additional information, and the additional information has items. We have the normal losses in percentages. We have actual production. These are in units. Then we have the scrap sales, and these are also in units. So we can try to get those ones, and we try to see how we can be able to reach to where we are heading. So we are seeing process 1, we have 10% as the normal loss. Actual production is 17,500. Then the sales, these are in shillings. When you try to view here, it is in shillings. I can maybe try to enlarge this one so that you can be able to view everything. Yeah, hope there you can be able to see everything. These are in units. These are in shillings, meaning the whole of the losses we had, they were scrapped. We had no wastages. So hope you can get now to know the differences. We said that if you have the wastages, if you have the scrap values, we have the scrap values, we expect that we can realize them, or we can get something from out of them. And here we are seeing that it is 10,000 in process 1. That's what they are paying. Sorry, it is 1,000. Then process 2, we have 5% normal loss. We have the actual production, which is 16,800, and the scrap units, they are bought at 2,000 each. And we are seeing, this one is saying process 3 has a normal loss of 2%. Then we have actual production of 16,400, and the scrap units are sold at 5,000 each. Then you have the required is saying prepare process accounts. When they say process account, it means they want many accounts, as from 1 up to the last one. We have the abnormal loss or gain account, and finally the finished goods. The finished goods, that is stock. Can call this one stock account. So we can go ahead and use this information, and we get to know how we can be able to apply it, and we get what we want. Can put in a separator so that we'll be able to see the figures. Let me also put a separator here. Hope that one is a bit clear for you guys. I copied the other information as it is reflected there. We are seeing that what we have here is the information we've got from there. When you see there the exact figures, we have process 1, process 2, process 3. These are the ones we are going to be using, plus the other table for this table. We can also copy it from here and we paste it the other side so that we'll be able to see it very well. You can just copy it and we paste it here. Just make it be next to this. I hope here you can be able to see everything and you can be able to identify whatever information that we have given without changing on the other side and coming back. So hope it's now okay with everyone. Then we can start off. Can save. So there are some things which I want you guys to look at if you are getting it. If you're doing any number on process account, what are the things we first analyze before we start doing the number? We can put here this is our solution. Now we go to our workings. Now working number 1, we have to first analyze each process by process, and we see the cost we've incurred, the normal losses, have the good units to know whether we have abnormal loss or abnormal gain within that process. So the first thing we start with, we identify, let me just use the words. I say step 1, we identify the inputs, what we've put in the system. And we've seen that the input in this system, they told us it was this figure, it was 20,000 units. So we are going to put our units there, 20,000. There are 20,000 units. Remember, these are in units. Identify the units. Then step number 2. Step 2, we have to get our normal loss. Normal loss. This time we are getting it in units. We get our normal loss in units. So when we get our normal loss in units, then the next step will be, step 3 will be getting the scrap value for those normal loss. Scrap value computations, we can put S. Then our step 4, we get the good units expected. When you get the good units expected, then the last one will be step number 5. Step number 5 is to get both the actual production, permit me to use PDN for production, and the abnormal losses or gains. You can say, and the abnormalities. We can get the abnormalities. How do we get these ones? We deduct what we were expected to produce from. Can remove this one here and we try to put it somewhere here. Let me adjust this one a bit. We'll put everything here and try to make these ones a bit broad. Those are the steps we follow. If you want not to confuse yourself, you must start with those ones whenever we are computing any number on, or let me just push this one so that this one is remaining the other side alone. Whenever we are handling any number, we start with these steps. Make sure you follow these steps so that you don't get confused. When you follow these steps, I'm telling you, you'll pass this number and you will not have any challenge. We said the units we had, they were 20,000 units. But remember what was our normal loss. They said in process 1, we are expecting a 10%. A normal loss is always on the input. You cannot compute a normal loss on the output because these normal losses are detected before even the production starts to take place. So we get our equal sign. We say they told us it is 10%. So it is going to be 10%. It is 10% of the input. And we get that. There are 2,000 units. So if you want to get the scrap value, these are the normal losses. We multiply by the unit cost. They told us they are going to be selling them at 1,000. So when we multiply, we shall be getting 2 million. And in that 2 million is going to be giving us the value or the scrap sales value. And that's 2 million we've got. And we said we want to get the good units expected. To get the good units expected, we get the input, what we put in, we deduct the normal loss we are expecting to incur, then we'll be remaining with the 18,000. Hope you've got that. Then we get either the abnormal. Now when we get these, we can try to change this one. Make sure we separate them because we shall be needing them. Can remove this one here. We'll make another step here that is going to be handling this. We can put step 6, the abnormalities. Then here we are saying we identify, because this one is always given in the question. So we identify the actual production. What if they don't give you this actual production? It means they must have given you these abnormalities. When they give you these abnormalities, they are the ones we are going to be using to determine the actual production. Because if you have got this, if let's say it is, you have got this, but you don't have this, but they have given you this one. They have given you that they made an abnormal loss or an abnormal gain. You either add it back on this one or you subtract it to get this one. Hope you can, it's just a matter of changing the subject of the formula so that you can be able to get that. We are saying the units, they told us that the actual production is going to be 17,500. That's the production in process 1. So you can now here deduct the good units expected. We expected to get 18,000, but the actual production, we got only 17,500. It means that difference is going to be, we are seeing now we expected to produce more, but we received less. It means that one is going to be an abnormal loss. It will be this minus this, which will give us 500. And 500, they are in units. Whatever we've been computing except this was in units. These units, we can also say we want to get the scrap sales, because they told us everything was a scrap, not waste. Scrap sales. For that abnormal sales from abnormal loss, we say this is a loss of 500 units because we produced less than what we expected, and we are selling these ones at the same 1,000 that was given to us. It will be giving us 500. That's how we compute that. And when we are done, because there we are done, the only thing we want is one to get for us the total cost so that we can just fill everything in our figures. We can insert here. Let's insert and we get the totals. We get the totals here because there is nothing we are going to be adding on. Everything is included there. We can get the totals. We say it is equal sign sum. But most of the question you may find that you have to reorganize all of this. But if it is organized like the way you are seeing, you just get the totals. Now we are seeing it is giving us that. You can get up to here. So you've seen that this actually is giving us the total cost they spent in the production. They incurred the whole of this in all the processes. So what we want, the only thing that is remaining is to get the unity cost. Why are we getting the unity cost? Because we want to determine the cost that we are going to be using for the final output. And we said to get a unity cost, it is equaling to the total process costs. We less the scrap, but here we are removing the normal scrap sales because we said the abnormal ones, they are not part of the production cost. Let me use normal scrap sales so that you can be able to identify this. And you say, because I don't want you to mix in the other abnormal one. We said those ones, they are not part of our computations. So here we are saying we are dividing over the good units expected or expected output, whether it is high or it is low compared to the production, it's what we take. We said, how do we get it? It is the input minus the normal loss units. That's how we get that. I'm trying to push it this side so that we get, hope you can be able to see this. Let me try to enlarge this. There, we are done now. Can put in here so that I separate this. Hope you can be able to see that different from. Now we start our accounts. We determine that let's first get the unity cost. The unity cost for process one. For process one, it will be equaling, we can put it here. We said it is going to be equaling to the normal, the total process cost, which is this, minus, we said it is minus the scrap value, which is this. The answer we get, we can say divide. Let's put this in brackets so that we'll be able to divide. Then divide by the expected units, and the good units expected, they are 18,000. We press enter. So it is 5,000. For process one, the unity cost is 5,000. So we can now draw our accounts. These are now going to be our process one account. And we said we have a column for particulars. We can put it here. Particulars, we have the unit cost, we have the units, we have the unity cost or cost per unit. Then we have the amount, it is a T account. Then we have particulars again, have the particulars, we have the units, we have the unit cost, we have the amount. So we've got that. Now what we want is, so we can try to enlarge this one. Okay, we start our particulars, we are putting in these figures. We can just drag this, the whole of these ones, we just post them there. Sorry, we are taking on this. We are pasting this one here, cut those ones from there, we put them here. We've seen how to do that. You can now enlarge this a bit. Yeah, it has not gone far. You can try to get that closer. We put in the units were 20,000. Since we did not introduce in any units, they are going to remain 20,000 for that. If we had the abnormal gain, they would have gone here. But since we don't have any, this one we can get how much was it? It is this divided by this. They were at 2,000. So we get our, now we are transferring the, we have to first write the normal loss, but the normal loss we are taking it in units and in terms of the cost. The cost was 2 million. 1, 2, 3. Yeah, it's 2 million. You can also, if you want, also put the price, but we have already multiplied it, even if you don't put that. And here we have to put our abnormal losses. And we are saying these abnormal losses, the value for these abnormal losses is, the units were 500. But remember, this abnormal loss, we are valuing this abnormal loss at the price of the finished or the good units and we are valuing them at 5,000 as the same way we are valuing the good units, that is 5,000. So don't get confused with this value here. Then we get also our outcome, the outcome of the output of process 1. But we said this one, it's not going to be the output, but it's going to be, instead of saying output, we are just going to be saying it is process 2, because the input of the output of process 1 becomes the input of process 2. When we put here process 2, it will be leading us to put that same figure into the other process to account at is, and we have the actual production, which was 17,500. We are valuing it at 5,000. The reason why we are valuing these abnormal losses on the same cost is because this one we did not account for them. They just happened, but we did not expect them to happen. We expect that they are supposed to go through the whole of the 18,000. So we value it at the good units cost. So it will be equal sign this. We multiply by this. It will be giving us that. Then it will be this equal sign. Sorry, cosine this. We multiply it by this. Then we'll be getting that. When you add up these units, we said these units, they must be equating to these ones. If they are not equating, then just know you've made a mistake. We say sum, they are becoming our 20,000 units, but this one we don't. We just leave it empty. We just sum this side. Even this side, they must be equating. The only way they can be not equating is when you've made off, when you've, let's say, rounded off, and what is causing the difference is because of the rounding figures. But if not that, they are supposed to be equating. So by the time you leave the question, you leave the examination room, whether you've passed or you failed, because they think they balance. So we've drawn our account. We can try to enlarge this, and we try to merge it so that it becomes in the center. So now we are done with our account, that is process account 1. We've done whatever is needed and it is balancing. So since we said here, this is process, sorry, this was supposed to be process 2 account. It means when you say process 2, the corresponding entry must be put on the debit side of the process 2 account, because here it is on the credit side of process 1 account, which indicates that the output of process 1 becomes the input of the other process, since we are producing similar commodities. Then we can we can put this aside and we take, hope it is okay now. We can try to remove these ones, then we put for the process 2 so that we don't go to another sheet. Welcome back, viewers. This is your tutor CPA Charles Kafel, and today we continue our series on. We are going to continue our series on process costing, and we are looking at this question, which says Tororo Factory Limited produces product B, which passes through 3 processes. process 1, process 2, and process 3. They are saying the data below relates to the month of May 2020, and we have the items, we have the processes, that is process 1, process 2, and process 3. Direct material, 40 million. We incurred 20 million in process 3, process 2, and 24 million in process 3. We have the direct labor costs, direct 1, 30 million, process 2, 15 million, process 3, 20 million, 80,000. Then the direct expenses, we have 12 million, process 1, 2,250,000, that's process 2, and 10 million was in process 10,768,000, that is process 3. Then we have the production overheads, 10 million each process, and below they are saying 200 units were introduced at the beginning of the process, that is process 1. Then we have the additional information, and within the additional information we have the items, and we have a column for actual production in units, and the last one we have a production for scrap sales. Those are in units, and what it means is that all the scrap or all the abnormal losses and the normal losses plus the abnormal gains, they were all scrapped units. It means we never had wastages. Process 1, we have 10% normal loss, 17,500, that was the actual output. Then the scrap units were sold at 1,000 each. Then we are saying that the process 2 have 5%, and process 3 will have 2% as in terms of the normal loss percentages. In the actual output in process 2 is 16,800, then process 3 it is 16,400. Then the selling price for the scrap units, it is 2,000 in process 2 and 5,000 in process 3. Then we have the required. They are saying the required, they are part 1 or Roman number 1, they are saying process accounts. We are required to calculate the process accounts, abnormal losses or gain account, and the finished goods stock account. So we can go to where we are going to be doing our computations. I copied up some of these stuffs, but we are saying we are preparing Toro Factory Limited process account for the month of May 2022. We have the direct materials. These are the ones that we are given up in the question. And we have this table also that was also given in the question. So we can start with our workings. These are our workings. So if you are to compute these process account, we have to follow in order to make sure that we can be able to calculate and get the rightful answers. So for the sake of learning, allow me give you the formulas, the steps we are going to be following whenever we have a number on process account, because when you don't analyze the information at the beginning, it will be a bit confusing, especially if you are not sure of what you are doing. Then we can say this is step 1. Allow me label them. We say step 1. We have to, first of all, we identify the inputs. These ones, they are already given the question, and they will always give you the inputs. And we say the input is 20,000, which are the units that we are given down here. 20,000 units were introduced in process 1. So we can now proceed and we go to our step 2. Step 2 is about computation or compute the normal loss. And step 3 is to compute our scrap values or the scrap sales. Then we go to step 4, where we are going to be computing our expected units. the good units. We call them the good units expected. Good units expected. Then step number 5, we have to identify the actual production. Permit me to use PDN for production. And step number 6. Step 6 is to identify or to compute the abnormalities. We compute the abnormalities. And how do we compute these abnormalities? Is by getting the good units expected, we less the actual production. We see whether we are having an abnormal gain or an abnormal loss. So when you have got that, we can be able to get to the last step, that will be step number 7, where we are required to compute the cost per unit. Compute the cost per unit. When we get all of this information, just know the process account. If at all you can be able to identify these information and you get them right, then process account will be done. You will not get any challenge, because the rest of the things is just application of what we've been talking about. They told us that the normal loss in process 1 was 10%. So it will be equal sign 10%, 10% of the input. Why are we saying the input? Because you can't get a normal loss on the output. The normal loss is always on the input, because that's where we suspect that we may lose this within the process. It will be 2000. Then when we are getting the scrap value, it will be our scrap units. These are the units we are scrapping. In terms of the normal loss, we multiply by the unit price for each scrapped unit, which will give us 2 million. And this 2 million is our scrap sales in terms of the normal losses. So we come here and we determine the good units expected. The good units expected, we said them from the inputs, we less the normal losses. It will be equal sign the inputs minus the normal loss. So we get 18,000. When we remove 10% from 20,000, we get 18%. The other person could get it in a sense that, since you have known that the normal loss is 10%, then to get the good units expected, you will use 90% of the inputs. Because if it is a normal loss, then automatically the 90% is supposed to be our good units expected. Then we get actual production, and to get this actual production, if it's not given in the question, they should have given you the whether we had a gain or whether we had an animal loss, so that you can add back or you deduct from the good units expected and you get the actual production. But since we are given the actual production here, we shall just be transferring the figure 17,500. So we get our abnormalities, and we are saying we are getting the actual production, we less it from the good units expected. We expected to produce 18,000, but we produced only 17,500. It means we have an abnormal loss. This becomes a loss of 500 units. We can also determine the abnormal sales, or we can call it scrap sales. But these scrap sales, they are different to the normal losses, because these abnormal losses, for them, they are not catered for when we are determining the unit cost. We only determine the unit cost using the normal losses, or the scrap sales that are coming from the normal losses. Hope you can be able to remember. If you don't get it well, you check our previous videos, because we talked about those and we explained more about them. So we shall get this, we multiply by our selling price for the scrapped units, then we shall be getting that. So we are saying now to get our cost per unit, we shall need to first get the totals up here for the cost we incurred, that is totals. For this, we can just get equal sign sum. We sum up the whole of these costs we incurred in process one. They are giving us 92 million. And when you get the totals there, those will be the totals for all these processes. Then we are getting our cost per unit. Can just add in here, and we say it is cost per unit. I can call it CPU, meaning cost per unit, so that you can be able to identify that. We can be equaling to, you can put it this side, and we said it is total process cost minus the normal loss, the scrap value of normal loss, scrap sales of normal loss. Then we divide all of this one over the expected. We are saying the whole of that is over, it is over the good units output. And we said to get that, we get the inputs with less normal loss units. Then we close that bracket, and that's how we determine the cost per unit. That's how we do so. Then we can fill in our figures so that we get to know how much we are going to be using. But we can copy this one and we put it down. We can move it from here and we put it down here so that we can create space, paste it there, and we make sure that this one, the whole of it is pasted. We can also paste it here. That's how we determine. We can get the cost, the unit cost from here. We get it down. We said it will be this. Can get it from here. Can get it from here, and we say it is equal sign this. We said it is going to be this, but we can put a bracket because we are going to be more subtracting. We subtract the normal loss value, which is that, and we divide by the expected units, which are 18,000. Don't divide by the actual production. We are dividing by the expected units, whether they are high or they are lower. Now we are seeing that these we are valued at 5,000. It means our final product, both the final or the output from process one, is supposed to be valued at 5,000 plus normal plus abnormal losses if any, and abnormal gain if any. Don't forget that. Then we go and we put our account. We can put our process one account, and we put our particulars here, and put our particulars. Then we put our units. We go to the unit cost or cost per unit. Then we get the amounts. Go to the particulars, then units, unit cost, then amounts. And that's all we need. We can just copy these ones. We copy them from there. We paste them here. Remember, these ones, we need them the other side, not here. We can cut that one off. We paste here. That's where we want the values. Now we have what we need is that these units, there were 2,000 that we put in the system. And since we did not introduce any stock, then we are supposed to be having that. At a unit cost, we can determine this by saying this one divide by this. It was valued at 2,000. Then we get our normal losses first. Normal losses. Our normal loss in the units, we have 2,000. It is this one. Then what was, because we are valuing it, we are taking the monetary element. We valued it at 1,000. Then we got 2 million. 1, 2, 3. So when we are done with that, then of course, now we go to where we are transferring, because this one would have been if it was only one process, this would have been the output. But since it is not it is not one process, it means it will be This one we will call it process 2, meaning that we are transferring the output of process 1 to become the input of process 2. That's why from here we are saying process 2 account. We are saying process 2 account. And how many units are we taking? We are taking the actual production, which is 17,500. We valued it at how much? It was this one, the unit cost we determined, which is 5,000. Then when we are done with that, we compute the value. It will be this multiplied by this. We get that. Then our last item, since we don't have the closing stock, it may happen that we have even the closing stock, but this time around we never had closing stock. That's what we are going to see in our next video. We see how we handle when there is closing stock, opening stock of raw materials, and when they are work in progress. Those are the ones we are going to be seeing in the next videos. So here we have the abnormal losses. Abnormal losses, and our abnormal loss in units, it's 500. These they were 500 units. But what is the cost we are valuing these units? We are valuing them at the cost we use to value the good units at 5,000. The reason why we are doing it is that these units, it's like they came as a result, because we did not expect them to happen, and they came as a result of some things which happened in the process, and we were not able to get our exact units. These units, they are supposed to be equating. When you add and you see that they are not tallying with the units you introduced in the system, just know you've made a mistake somewhere. So we can also sum up. Even these ones, they are supposed to be tallying. If they don't tally, just know you've made a mistake somewhere. So they are equating. Then we can just do one thing and we close the accounts. Of course, we are supposed to close off those accounts. Let's first put in these borders, and we come here, we close off the accounts. How do we close off? We double underline there, double underline that, and the last one. From there, we can even save. Then we've done our process 1 account. But since you are seeing here in process 1, we are saying that this is supposed to be in process 2. It means we've credited process 1 with the process 2 figure, which is supposed to be taken to the debit side of the process 2 account, so that we complete the double entry. So we can, I'm going to be using the same sheet, so allow me just clear the data from here, but I'm not going to repeat this. That's why I'm going to just rub off this. We put this one, that level. We just put the units. Hope you've been able to copy that down. Then we can try to clear this content so that we can try to put in the new information. Then this one, we can remove it, and this will move it to, so that we'll be having an empty account. But here it's now process 2. But remember, we had the information. Now here we are not supposed to be having direct materials, because we don't have in the question, we don't have any material that was given in, sorry, there is material that was supposed to be added. There is material that was introduced in process 2. That one is going to be there. Sorry, I've not seen. Can try to undo that. But here we are going now to introduce in another line that will give us, can try to remove these borders. We said here we are going to add in an account, another account, where we are going to put what we transferred from process 1. Let's just insert here. Sorry, we are supposed to insert below. Undo that. We are supposed to insert from here, so that it becomes upwards like that. Here is where we are going to put our process. Now here we are putting process 1. The reason why we are putting process 1 is because this is where the information is coming from. It is coming from process 1. So what did we produce? It was this. It was 17,500. It was 17,500, and it was valued at 5,000. So what was the cost? The cost was equal sign this multiply by this. Press enter and we get it was that. So we have also to change this, the whole of these ones, clear the information, and we'll be having 0 so that we start afresh. This one is done. We can try to do like this so that you get to know that this was done. What we have made in that form, just know that that one is done. What we are remaining is only, what is remaining is only this. Can try to adjust this so that it tallies with what we want. Sorry, you can't do that. It's going to be affecting us because I don't want the other one to extend the other side, but it's okay. We can do that from here. So let's go to our, we said we have to first identify the inputs, and the inputs, we said the input of the other department becomes the output. Sorry, the output of the other of the first process becomes the input of the second process. So our input is now 17,500. That's our input. And they told us that the normal loss is 5%. So it will be 5%. We multiply that by the input and it will give us that. So we get the scrap value. And to get our scrap value, it will be this. We multiply it by this because this is the scrap, the selling price for those units that are being sold that they have. We are supposed to be having that figure there. It's okay. Let's consider that and we'll be with it as for now, but hope you know where we are heading and you don't get confused. Now we can proceed. We can now get our good units expected, which are going to be this minus this. It will be giving us that. And when you check here, we have, and the actual production we are seeing from here, that the actual production was 16,800. Guys, I don't want you to get confused from the raw materials you are seeing they gave us in this two. Since they had not given us the units, there is no way we can divide and get the number of units they introduced as in process 2. We just take this one as, let's say that these are just additional materials. And these additional materials, since they did not start with the first stock, then we are not supposed to value it at the first stock of 20,000 units. Hope you don't get confused from there. Then we get our abnormalities, and we said this time it is going to be this, the good units expected, which is this, minus this. It is giving us a negative, which shows that this time around, instead of having an abnormal loss, we are going to be having an abnormal gain. This is a gain. Why is it called a gain? It's because we expected to get 16,625, but we rather produced 16,800,000, meaning this 175,000 is becoming our, so I can put it here, I put abnormal gain, because there it is showing a negative, there is no way we can multiply it, it will be giving us a negative figure. So we are on this one will be equal sign this, we multiply it by the selling price, which is giving us that figure. So we get our, can get it from here, our unit cost. Since we are using this one, it will be equal sign, we can open up the brackets. We are saying we are deducting the total process costs, but we can get this one a bit later because we are supposed to add, it will be, remember we are saying total process cost. This one, this 47 million does not include this. So to get our total cost that we have spent in the whole process, we are supposed to add what the raw materials we got from, the cost of the materials we got from process 1, we add to the cost that was incurred in process 2. Hope you can get that. Let me put it here because you may get confused. Here we are saying we have to look for the total. Can put it here and we remove this. Total process cost is going to be equating to this. It will be equaling to this, what we have there as the total, plus what we got from process 2. Then we press enter. This is now going to be our new value for that. We can now put our scrap values, but we have them here. We can now divide and we get our unity cost. It will be equal sign this. We can now put up the bracket. So let me put it up here so that you don't get confused. Hope you'll be able to follow. It will be this minus our scrap value, which are those ones. Then we close the bracket, we divide by the good units expected. We are not taking the actual production. Please get that right. We are not taking the actual production. So now, whatever we are going to be these abnormal gains, 175, they are going to be valued at this. Even this output is going to be valued at this. Hope you are getting that. Then we can introduce in our additional material that we got. It was 20 million. Maybe you can just highlight from here and we just post them, we copy and we paste here. Then we get our totals. These units, they should have one which is pending, and we said abnormal gains, they are supposed to be on the credit. They're supposed to be on abnormal gain, they are supposed to be on our debit side, and the units are 175, but the unit cost is supposed to be this. Sorry, this one is still, we need to remove that so that it's still having the other balancing figure, which we need to remove it from there. Okay, it's done. This one we are valuing it at 8,000. Then we take this side, we first write the normal losses. Then the normal losses in units, we had 875, valued at, it was 2,000. From here, this is where I get the 2,000. Then what will be it will be this multiply by this, which gave us that, and we get this is now going to be our process. We are not calling it output because we have not yet reached the final process. This is process now. This one is going to be process 3, because what comes from process 2 goes to process 3 as an input. But what are we taking here? We are taking the actual output, and the actual output was 16,800, valued at 8,000. This one, the unity cost. So we can try to get the figure here. It will be this, multiply it by this. Is that? Then we can try to get the totals. We can get them from here. We say totals. You're supposed to get the sum. This one, even if you just say this plus this, is giving us that. Then we add up this one. Sorry, I did not get the answer for this. So it is still having some cross, the double underline, which we are supposed to first remove. Is equal sign this. We multiply by this. So we get the equal sign sum. Let's enter. This is now our total. So we get for this, it is equal sign sum. Let's enter. Then we get also the totals from here, equal sign sum. Make sure you rather get these last values not balancing, but this one they must, because there is no rounding off in those units. Can get these ones double underlined, and we see what we can. We get them double underlined so that you get to know that we are closing off. That one is done. We can even save. If you want, we can add some of borders, we can apply all borders so that we'll be able to get something that is, we can try to put also these figures in whatever we put in those commas so that we can be able to separate those variables. I hope it is giving you some good time. Hope you can be able to see what we are doing, and that's all we need so that we'll be able to get that right and we proceed to the next one. So that's it, and that's the information we needed for that process 2 account. We are going to the last process and we are going to repeat the same information so that we get to know what will be the final accounts. I'm going to just remove this the same way I did for the other ones. We clear the content, and when we clear that, we are also supposed to clear. So we have to record some information before we take it out, because we need this. Before we take it out, we have to first copy this one from there. It's what we need only. We can copy that and we remove the information, clear the content, and we also clear this. But remember, we shall need this information for the abnormal loss account and whatever. But those ones, I will just show you how to get them, because for them, they are very easy. You can get them very fast. They are very easy to do. Clear even that. Since we have got that, but we have to paste this one, the one we already copied. Oh, it's not even coming. It's not even coming, but we know how it was. Indeed, it is going to be a bit headache to us. We did not write it anywhere, but can figure out how to handle that. We said it was this. Remember, it was the input, and the total value here was, indeed, we've gone to go back and see whatever we did so that we get to know those figures. We can write them somewhere, and the one we are taking to process 3 is 168, valued at 8,000, and the total is 134,400. That's it. We can now even pick our abnormal gain. Abnormal gain is 350,000, and the units are 175. We can take those ones are enough. We can try to read this. We can now put these figures. It was 16,800, and the unit cost was 8,000, and this was coming from process 2. The total cost was 134,400, then 111. Yeah, like that's how it was. So we can now go ahead and check out if at all we have what we can do, and we proceed for this. We said we first consider the units, and in this case, our normal units are going to be the output of process 2, which is 168, like that. Then we get our normal unit, our normal loss. Normal loss, we said it is equaling to 2%. They gave us 2%. It's here. Sorry, it is 2%. We multiply by this input, which will be that, and we get our scrap values, which is going to be this when we are multiplying it with this 5,000. It will be that. Then what will be our good units expected? They will be equaling to this minus this. We shall be getting that. Now we identify our production. The actual production was 16,400. This is the actual production, what we were supposed to produce this. It means our abnormalities are going to be equal sign this minus this. which gives us 64. It means that we expected to produce more, but we produced less. This becomes an abnormal loss. This is a loss. So it is not supposed to be here anymore. It is now going to be this side. So we can go ahead and try to get this information right. We see what we can do. We can try to remove these borders and we do something which is a bit fresh. And remove even this word total. Okay, since we've got that as 64 as our abnormal losses, then we get the scrap value for the abnormal losses, the scrap sales, which are giving us that. So if it is giving us that, then we expect that it will be that, then we get the total process cost. And we said the total process cost, it is inclusive of the one that was there in that process plus what we introduced. It will be that 199,248,800. This is the total cost. Then if you want to determine the unit cost or the cost per unit, we said it is going to be equal sign this. We put this in the bracket. It will be this minus this our normal scrap values, which are those ones. We divide the answer we get by the expected units, and we shall be getting that. This 12,000 is what we are going to be using to cost our abnormal losses in the process account. So we come here and we start with our normal losses, which are 336. Then selling price for those normal losses, it is 5,000. So we get here the total, the value will be that multiplied by this, which will give you this, which is the same as the other one. Then we record the abnormal losses. And these abnormal losses in units, they are 64. They are valued at this, which is 12,000. The only way we are going to use this value is when you are preparing the abnormal loss accounts and the scrap sales. That's where we are going to be putting those figures, but they are not supposed to be put anywhere within these computations of the process. They are supposed to be put in their respective ledger accounts and in the profit and loss. That's where we are going to be adjusting them from. Then we have what we'll call, now this one, since it is the last process, it will be called finished goods. Or you can call it stock. And what did we finish with? It is the actual output, which is 16,400. And it is valued at 12,000. It will be this, we multiply by this. So we can get the total because there is nothing we have here. Can get here the totals, even here, we put the totals, and sorry, supposed to be here, totals. So we can get the totals from here. We say cosine sum.
You have 2 new Instagram messages.
We are summing from here up to here. It will give us that. Then we get this also. It will be cosine sum. We are summing the whole of those ones. That, and sorry, it means I put in many figures. There are many figures. I selected a different, supposed to be sum, and we are summing this. Press enter. It is giving us that. It means it is the same information that we are supposed to be having this side. So we put in this information that we have here. It is this. We copy, we paste it here, and we try to get the equal sign sum. Will be this. Close the brackets, and we get the totals. Hope they are matching. And when they are matching, we just know that what we did is exactly what we are supposed to do. So we've got that, and it is giving us what we wanted. So we can try to double cross this one, double underline it so that we are crossing the accounts. And when we get that, then we just know that we have done what we are supposed to do. The information is very clear, and you can put in the borders so that we get something which looks good like that. We have the separators, so then if I don't put in again, we save the information, and that's it. The question wanted us to get the ledger accounts for finished goods. It's the one which is a bit unique. Let me show you how you do that. It's very easy. Finished goods account. With this one, we are not going to take a lot of space. Let's just use only one, and we'll put this side. We'll put this side that, since this one was on, this is not process 2, this is process 3. Make sure you change that. It is process 3. We are removing this from process 3. It means here we are going to be putting process 3 account, but remember this is the debit side. We are making a T account. We are removing, you can call this, we have the particulars. We can be having the same, the way you are seeing here. We put all of this, but we debit the fixed account. But remember, we have to close this account. Let me try to do it in that very account so that you get to know. But if I do that, I'm going to disorganize you a bit. Let me remove this one and I copy. Let me copy that. Let me remove this one, and I copy this. Let me just copy this. I show you what I wanted to show you. At least when you understand this, you can go and do the other ones, because so this is what this is what I'm telling you. This we call it finished goods account. So we can try to make it a bit, merge it. This we don't need it. What we only need is this. So let me first remove this. I show you something here. What is the one I'm going to pick? Let me cut it from there. I paste it here. But the rest of this is going to be removed. This is what we need. Even this one we don't need it here. Even this one, we don't need it. This is exactly what we need. But remember, we got this information from process 3. It was our last process. So when you get this information, this one you'll be done with our finished goods account. But there is something I want to show you. That's, let me make it a bit. I put it on 2 lines, put in the borders. This is what I want you to understand. When you're doing accounting, you know that when we've got the finished goods, where do we transfer those items? We transfer them to our income statement. On which section we are taking it to the trading account. That's where we find the stock. So when we are closing off this account, because we want to transfer this information and we take it for further, we give it to the accountant so that they can start processing whatever they want to process. Then we come here and we say we are taking this information to the trading. It's called the trading. You can call it trading profit and loss account. Those are the name. You can just say I'm taking it to the trading account. That one is enough. But because you know this is accounting, this is where we take the information. The stock we've purchased is supposed to be taken to the trading account. Can try to increase this. I want this thing to be fitting here so that I can put in the units. That one will be helping us. Then we put the exact units 16400 so that we close this account. We are not leaving it open. Then we remove the same amount 196800123. Then we get the same totals. Then we close off. Of course, even if we had not put the other whatever, we could just close it off from here. Let me just close off like that. Just know we've crossed it off, but this one they are not supposed to be crossed. Just double underlining, but you know what we only cross up. Even the cost is not, the unit cost is not supposed to be crossed off. But if you want, you can just do it like that. And that one will be done. There is nothing we shall need from there. Then the other thing I wanted to show you, when you create a normal loss account, since this one is on the credit side, you bring it this side and you say from process 3. So we bring all the normal losses we had for process 1, process 2, process 3. We put all of them here, the normal losses, because this account is going to be having normal losses. So we bring all these figures you are seeing here. We bring even the units. We sum them up from here. Then even this one for the sales, we do the same. We open up this account, the scrap sales account. Even for the abnormal losses, we use those double entries, the one we've been following, that when those abnormal losses, when we sell them, we expect that we are going to be debiting our scrap sales, and we credit the abnormal account. Remember, on recognition of the abnormal losses, we had already credited, sorry, we had already debited. When we credit it, it means we are trying to reduce that normal loss that we've incurred. You get that? Because all of those accounts, the normal loss, the only account that is going to be remaining closed, sorry, open, it is maybe for the scrap sales. But even those scrap sales, the balance that will remain there is supposed to be put to the bank. It's supposed to be, if it is remaining, upon deducting these abnormal gains and abnormal losses, we've removed everything. What remains there, we close off and it goes to the bank. I'll do another number which has at least one account, so that I be able to show you how to do those, to just make those ledgers. But what we need is this information. If you know how to compute this, the rest is just double entry. If you know how to credit, and when you know that when I credit something, there must be a corresponding entry somewhere. When I credit this, I'm supposed to debit another account depending on whatever information you will be having. So that's all. Maybe changing for you here so that I don't want you guys to get confused. From here, you will say that this person said the normal losses and they left the other units. It is 36. This is 5,000. Then this is 168. I'm just using the last one, but remember we had started with some accounts. But I'm just using this one because they are the ones which are available. This is 336, and this is 5. Sorry, this is 5,000, and the last one is giving me 16800. So that's how you close it off. Of course, this one we don't take it to that side. No, this one, the way we close off these normal losses, it depends on where we are going to be including these figures. Remember, these accounts, they form part, for these normal losses, for them they form part of the cost of the items. So it will reflect on the other, depending on how the other accounts have performed. Because at the end of the day, when you have got these units, we have to transfer them as in terms of the sales you've got. Because remember, these accounts, we've got the values. We have their values. So we transfer them, and when we adjust with the other gains and losses, and we see what we shall be remaining with. So it will be the one that we'll be closing with from here. Then the other thing I wanted to highlight a bit is on this one. If they ask you at what will be the cost, because this one you have given us the costing method, you have shown us how we get the unit cost, but the question, what will be the unit cost that we are going to be basing on to determine the selling price? These are the units, these are the amount. You can easily divide this by this to get the actual whatever. actual price or the actual unit cost they are going to use, so that they can put a profit component and they determine the selling price, so that they can be able to compare with what prevails in the market, depending on which method they use to determine their selling prices. Hope you'll be able to follow up, but what I'm going to be doing now is concentrating more on equivalent production, because I'm very sure that one gives the students headache, and that's what I want to concentrate more. I put more concentration and I go step by step on each and every category, especially when you have work in progress, when you have opening stocks, when you have closing stocks, and when you have all of them plus these losses we are talking about. Because this, if you don't understand these, make sure you watch this video for as many times as you can, so that by the time you get to watch the other ones, you will be able to compare and you'll be contrasting and getting something out right. Until we meet again, it's bye for now. Once again, good afternoon. I'm back to proceed with our series on process costing. And today we are going to be looking at how we can do the process costing when we have losses. And we are going to kick off. But what I want you to know is that when the process is taking place, we expect that the quantity of the input or the units we are putting in the system, we expect that when the output comes out, we expect that some of those, the quantity we've put in will not come out exactly like in the same kilos or same amount, like the same way we put in. We expect that there are some normal losses that are going to happen, even if the management has done each and everything and they have put in measures that can control losses to happen. We expect that there are some losses that happen in the production. What happens is that if there are those losses, we expect that we are going to be incurring those losses in form of wastages or wastes and in form of the scrap values or the scrap units. It means they are just wastes. We expect that those are the costs, those are the portions of raw materials that are going to be lost in the production, and we cannot recover anything from them. Those wastes that were when the production takes place, we don't expect to earn anything from them. One of them will have these gases, smokes, fumes, and others. We can use a certain example. If, let's say, you are engaged in coffee, let's say coffee drying, we expect that when you are plucking that coffee, you find it's a bit heavy. If you try to measure the coffee when you have just plucked it from the plantation, you find that you'll be having more sacks. But as they go through the process of drying, you find that that coffee is going to be losing value. It loses value in form of evaporation and others. What happens is that when the process of drying is done, we expect that the quantity or the amount we put in before those coffee were disposed to sunshine, we expect that the quantity was high, but when they have dried, we expect that the quantity is going to be low, because there are some normal losses that have happened, and those came as a result of evaporation and chemical reaction. Of course, some substances, they react differently on certain conditions, the natural conditions within the items themselves. So these items lose the value. We expect that there are certain things we are not going to be earning anything. But at the end of the day, when these coffee, when they are dry, we expect that we are going to take them to the grinding machine and they remove these coffee husks. They remove those husks, and when they go for that, for those milling machines, we expect that even the quantity we've taken, it will not come out exactly like the way we took it. It will change, but from there we shall get now the husks. We get the coffee seeds themselves, then we have the husks themselves. Now those husks, for them, they are the ones we call the scrap units. At least for those ones, we can be able to sell them, because there are other farms that can use that as their input. Like in poultry, people can buy those ones and they put them in their gardens as fertilizers. So when you see that you are remaining with some residual materials which you can sell, then we call those ones, they are called scrap. They are called scraps. So when you sell them, they are called, the value we get will be the scrap value, but that came as a result of a loss, because the total quantity was a bit much, and when they went through the milling machine, we got less quantities and we lost some of the materials. So that's how basically I can explain that. But as we know that these wastages, or the wastes, for them we don't earn anything. It's like the smoke that is coming from those milling machine. You just find that on the top of the roof of where the milling machine is installed, you find that there is a lot of dust there, there is a lot of smoke and everything. So to some instances, you may find that you have even to incur an extra cost to clean those roofs so that to remove that smoke. So we are saying that the wastes, for them, we get nothing from them. What we only earn as in a loss, it is those scrapped units. They are the ones we sell and we can raise something. Then we can go to the computations. If at all you've understood that, we are saying that because of the activities carried out at different processes during transformation process, remember we have put in our raw materials and we have put in other conventional costs that are going to convert those raw materials into finished goods. And we are saying losses are bound to happen or to take place. Whatever quality control adapted or other methods that you may use to make sure that you improve the quality, there are certain losses, as I said, that are going to happen, and they will happen in form of wastages or scraps. And we are saying a waste, this is the portion of the raw materials that is lost in processing or in the production process and has no recovery value. There is nothing we can get from that waste. And we are saying material is lost through evaporation, and sometimes residues may be there with no value, like the gases, as I said, the dust. That dust, as I told you, the one which when you just enter like the sawmill, you just find there is dust on the roofs of the building where those milling machines are installed. The smoke, by the time you just reach to the press, you find that the press is smelling. So those are the wastes we are talking about. And we are saying sometimes wastes can attract a cost in the process of disposing it off. Let's say they are just, the press is smelling. You may incur certain costs to remove some of those materials that caused the smell. So that's what we are talking about in terms of the wastes. But remember, those wastes came as a result of the production process that is taking place, or by the introduction of the inputs that we put in so that we can get the raw materials. Then we have these scraps. These are residues of materials from certain manufacturing operations that has a relatively minor recovery value. When you are talking about the minor recovery value, it means that you cannot necessarily get what you've put in. Let's say you've bought the inputs, let's say 10,000. You will not, when you're selling those residues, you will not sell them at the exact cost at which you bought the other inputs. You may find that you are going to be getting 500 per unit of those residues, and you have the sawdusts. Those, I know most of you guys, you must have attended secondary schools or primary schools where they use those sawdusts, those within the carpenter workshops, those dusts for them, particles that are removed by the machines from those woods that are used for cooking food. We used to see those things that being used at schools when they are cooking, and in other factories, like these factories which are making bread and others, they do use those ones. So at least if you have a recovery value, let's say you've bought number of woods and they have removed what they want, these remaining particles, you can use them and do other things. Or some people can buy it as their raw materials for further production. A live example you can get is like these sugar manufacturing farms. When they get the sugar particles, then those remains, they can use them to do other businesses. They can give to those who are engaged in agriculture so that they take it as fertilizers. They can give it to fertilizer manufacturers so that they can mix it with other ingredients so that they can make fertilizers. So that's what we mean by that. And we are saying process loss represents a shortfall in input because the final output cannot match the input where there is a loss. If we incur a loss, let's say we're putting 10,000 units and we get the actual production to be 9,000 units, we expect that the 1,000 becomes our loss. But we have also to know, is it a normal loss or it is part of the abnormal loss we've incurred? So you have to be careful. But remember, these normal losses, they are part of the production. They form part of the production cost, because when you are computing for the value of the unit cost, you find that you are getting the total cost minus the scrapped values, and you divide by the expected units. It means normal losses, for them, they affect or they are included within the cost of production, but these other abnormal losses, they are not included, because to get those abnormal losses, we already know our selling price, because abnormal losses, they are not included when you are computing for the unit cost. Hope you can be able to get that, and we can proceed and talk about the normal process losses. And we are saying these losses represent inevitable losses that may occur at any stage. As the word suggests, they are inevitable. So they come when you have no control about them. And we are saying normal losses are uncontrollable and expected to take place under normal working conditions. And such losses are always provided for at the start of the period. What this statement means is that when you are starting the production, we give you the percentage that you are going to use, that we expect that the normal loss is going to be, let's say, 5% of the input, or it is 10% of the input. So when we assume that, we expect that you are going to be getting those normal losses. If those normal losses have a sellable value, or you can sell them as in terms of the scraps, and we can sell them, we get the scrap values and we less it from the total cost. And lessing it the total cost, it means we are going to be crediting to our process account. Crediting to the process account, it means we are lessing it from our total cost of production in that process. We are saying such losses are always provided for at the start of the process, and cost of normal loss constitutes the cost of production. This is what I've been telling you, that it is part, because we expect it to happen. It is inevitable. We can't run business without expecting to incur. Then the logic of this lie in the fact that such losses are one of a normal cost of production and therefore charged to whatever production that emerges. And they are caused by the factors that are beyond the control of the management. Here, what we mean is that even the management cannot control these factors when they are likely to happen. We expect that, as I told you, some of these, they are just in the nature of the materials themselves. If we use the materials that are more likely to react to the natural conditions, there is a chemical reaction, we expect either the material to lose value. As you know, let's someone is using, let's say, these brewing industries, you find that they are using carbon dioxide, but the way they pack that carbon dioxide, because whenever it is exposed to different conditions, we expect that it is going to react. And when it is reacting, we are contaminating it. That's why you find that when they are when you are taking the cylinders of carbon dioxide, you find them that they are well protected from the natural conditions. So if they don't do so, they will just get contaminated and we lose some of the components. The other thing we said, it is evaporation. I told you that, let's say you are drying coffee. When you're drying coffee, we expect that when it is in its raw form, it is a bit heavy. But as time goes on, it dries up and you find that something which was heavy, it is becoming light because it has been exposed to sunshine and the water that was inside has evaporated. So that is kind of the loss we are talking about. So what we can look at now, we can see the accounting treatment. How do we treat this? We are saying when normal loss is represented by scrap, if those units can be sold, which has a realizable value, we expect that the process account is going to be created with the amount realized or received on the sale, thus reducing the process costs. And finally, the corresponding entry, we take it to the normal loss account. What the double entry is, we debit the normal loss account, then we credit the process account. The reason why we are creating the process account is because we are recognizing that the cost we've incurred in the production should reduce as a result of the loss we've incurred. As you know that always a normal loss, we treat that as an expense in the income statement. So we treat that process account as if it is an income statement where you can be able to adjust everything. So allow me stop here for today, and our next video is going to be about the abnormal losses and the abnormal gains. I don't want to mix them here because when I mix, you will get confused. Since we have the double entries and whatever the accounting treatment, let me handle each of them separately. Thank you for watching. You can subscribe once you get to know more and more as you see you go through your CPA journey. Thank you. Hello viewers, we are continuing our series on process costing, and we are going to look at how we get these abnormal gains. And as you are seeing, the word suggests that they are abnormal gains. It means a gain is always something like profit. You've made something, or you have achieved more than what you had put in. You have got an extra of what you've put in. So what we see with the abnormal gains, as far as process costing is concerned, it happens, as I said, when you input in the process, let's say process 1, you've put in 20,000. If let's say you've put in 20,000 units, and the 20,000 units, we are expecting that we are going to be having a normal loss of 10%, and 10% of the 20,000 will give us 2,000. That 2,000 will be our normal loss. So when that is our normal loss, we expect that what we are going to be producing as in terms of the output upon putting in the 20,000 units, we are going to be getting out the 20,000 minus the normal loss of 2,000, which will give us 18,000 units as the actual production or actual output. But when you come to this sense of the abnormal gains, you find that you had expected to produce 18,000. But when the actual production takes place, you find that you've got 19,000. That difference, which is exceeding what you expected, which is more than what you expected to get from the inputs you've put in the system, having considered the normal losses, that excess will be called the abnormal gain. And this abnormal gain, even though it is a gain, it is not included in the cost of production because we did not expect that. I'm repeating, that cost is not considered in the cost of production. What we only consider is the normal losses. So it means we are going to be treating this abnormal gain as an operating profit. This operating profit is supposed to be credited or should be added to the figure of gross profit in the profit and loss account. In other words, it should be credited to profit and loss account. What happens is that when you're getting these abnormal gains, don't think that you have got, actually you've got a gain. Yes, it looks like a gain, but it may be, you may find that that gain has happened because there is a weakness within the management, that the management wasn't even able to get a rightful computation of the normal losses we are going to be incurring in the process. So whenever you get a gain, don't think that since I've got a gain, it means everything is moving well. You may find that one of the factors that made that gain to happen is because the incompetence within the management, they have failed to actually locate the exact, let's say the exact output, or they have exaggerated the figure for let's say for the loss. And if you find that you're getting that abnormal gain, it may be as a result of the weakness within the planning process. So, but what we do, we consider that one as a profit, and operating profit is supposed to be added to the figure of gross profit. So it happens that if those abnormal gain, because we are computing these abnormal gains in terms of units and in terms of value, you may find if those abnormal gains in terms of units, they can sell them, they can be sold, or we can earn something out of those gains we've made. It means that we are going to be having the scrap values, whereby we shall be debiting our abnormal gain and we are crediting the sales account. The reason why we are crediting is because it's like we've earned an income. So with that, we can go through the notices, and we are saying abnormal gain represents any units in excess of the expected output. As I said, if the actual output was 19,000 and you expected 18,000, then that 1,000, which is the difference, becomes our abnormal gain. The other way it may happen is when the actual loss is less than the normal loss value. Those are the two methods we use to compute the abnormal gains and the abnormal losses. We compare with the actual loss and the actual loss and the normal loss, or we compare with the actual production and the expected. That's how we get either an abnormal gain or abnormal loss. And we are saying they arise when the actual loss is less than the normal loss. We have in bracket that the actual output is greater than the expected output. due to favorable conditions that were not anticipated at the beginning, or it may be faulty estimations or estimates made at the planning stage. You may say that, yes, we've got a gain, but it came as a result of people, they underestimated or they overestimated whatever figures that could lead to. So you take note of that, and they do not affect the cost of production. We are saying it doesn't affect the cost of production because the unity cost is computed in advance before the actual production commences. What happens is that when you are computing the unity cost, remember we are saying we get the total cost we are incurring in the process. By the time you put in, you start processing, you find that you have already incurred the costs. So we had estimated our total cost we are going to put in the system. We know our normal losses, so we shall just deduct those and we divide by the expected output because everything we shall be having them. These abnormal gains and abnormal losses, they were not catered for at the beginning of the process. So we are saying they are valued on the same basis as good production. Good production here, we are talking about the finished goods. What happens is that the way we value these abnormal losses and abnormal gains, we value them at the same unity cost like those ones which are finished, or the good units that we've got in the system. The same cost we use to compute for the output, finished, the actual production, is the same amount, is the same unit cost we use to value these abnormal gains and abnormal losses. Hope you can add that and you'll be able to go, because we are going to be looking at a question and you will be seeing whatever we shall be doing when we are valuing the normal losses, abnormal losses, and others, as we shall see in the next videos. We are saying that when you incur these abnormal gains, what we do, we debit the process account and we credit the abnormal gain. Remember we said when you are debiting this process account and you are crediting the abnormal gain account, it means if we happen to sell, some of these gains we've got, what will happen is that we shall be now debiting it. By debiting it, we are trying to reduce, because the other side we had credited it, so we are now removing the figure and we are taking it to scrap values, which at the end of the day will be closed down and will take the figure to profit and loss. That's why down here you are seeing that the balance of the gain, the abnormal gain account, is transferred to the profit and loss account by debiting the abnormal gain and crediting the profit and loss account. This is if it's not, most of the times you don't find that these abnormal gains, abnormal losses, you find that they have both them, or they have some realizable value. You find that most of the times what we can realize is the normal losses, most of the times. But if you find it, that's how you will treat it. Hope we meet on the next videos and we see how we can do the computations and we enlarge our understanding. We get to know this practicability of these theories we've been talking about, and we shall be good to go when it's time for exams. Thank you for watching. Good day. We are proceeding our series on process costing, and we've been looking at process losses, and today we are going to look at the abnormal losses. Abnormal losses, as the word suggests, it's abnormal. It's beyond what we expected. So we are saying these abnormal losses, how they happen is that if, let's say, we expected that we are going to be incurring a normal loss, let's say 10%, and our output is 10,000 units. If you are expecting a normal loss of 10,000 units, it means we are going to get 10% of 10,000, which will give us 1,000. That 1,000 will be our normal losses. But what happens is that when we compute the expected output, it will be the 10,000 as in our input minus the 1,000, that is the normal loss, which will give us 9,000 as our expected output. So we assume that when we put the 10,000 units in the process, we expect to get 9,000 units of output. But what happens is that if we put in the 10,000, instead of getting the 9,000, we get 8,000, which means the actual loss now will be the normal loss of 1,000, which reduced the input to 9,000, and also the 1,000 that reduced the expected output to the actual output of 1,000. So what happens is that when you're computing these normal losses, we either get it by getting our actual production minus, I'm saying actual production minus expected output. And to get our expected output is input minus the normal loss. So what happens is that if you find that the actual production is less than the expected output, there we are going to be having an abnormal loss. And the accounting treatment will be, if we have those abnormal losses, we are going to credit them to the process account first. When we credit them to the process account, then it means the corresponding entry will be debited in the abnormal loss account. But what happens is that at the end of the month, when we are closing off our books of account, we don't want to leave the other abnormal loss account unclosed. We transfer that cost to the profit and loss, because we are supposed to treat that abnormal losses, since we did not expect it in the production, and we did not cater for that when we are beginning or when we are planning our production. It means it's going to be treated as an operating expense or an operating loss. When we get that loss, it means we are going to transfer, by transferring from the abnormal loss account, the figure which is there, we make sure that we credit the abnormal loss account and we debit profit and loss account. Debiting profit and loss account, it means subtracting that figure from the gross profit. Hope you've got that. Then now we can try to go through into these notes, and we see how we can be able to understand more. Maybe to add on something, let's say those abnormal losses we have, let's say they are in form of, they are not wastages, they are scrap values, or they are scrap units, and they have a sellable value. If let's say you can sell them out, and whatever amount you get, it will now, when you multiply by what they are going to be giving you as in a unit cost or price, we shall be getting our sellable, the scrap value. When we get our scrap values, we are debiting the scrap value account and we are crediting the abnormal loss account. The reason why we are crediting this abnormal loss account is that we want to reduce the abnormal loss we incurred in its very own account. Because remember, when we incurred the abnormal loss, we said we are crediting the process account and we are debiting the abnormal loss account. So if we sell some of those goods, we just make sure that we credit it and we try to reduce that loss. Because you may find, what happens is that you may find that those units you have not yet sold, you have not sold all of them. You may find that some particles you can't even sell them. And we are saying these abnormal losses, they come as a result of negligence or carelessness of the management or the people who are in charge. So if it is as a result of those people who are in charge and they can be controlled, it means we are supposed to treat those as operating expense. Hope you've got that. Then we can go through these small information we have. We are saying abnormal losses represent the loss in excess. It is in excess, meaning something above, it is over and above the normal losses. The other method you can use to determine the abnormal losses is getting the actual loss incurred minus, and if you find that the actual loss is bigger than the normal loss, there we have an abnormal loss. The other alternative will be for the gain, as we are going to see it. So we can proceed, and we say that it's unexpected. Of course, we know that any loss is unexpected. We don't go in business willingly to make losses. They are all unexpected. They're unexpected and controllable losses. These are controlled, but they are not like the normal ones. These are controllable losses, which are not always provided for at the start of the process. When you are starting our process, we don't budget these abnormal losses because we assume that we are not going to incur them, because there is no business that can come in and you start the production with the intention of making losses. We just get what we can have as the normal losses, as the prudence concept says, that you remove what you were likely to face as in terms of the losses, not necessarily assuming that you are going to be making profit all the time. So we are saying that these are due to improper mixing of the ingredients. An example I can give you, let's say someone was just making chapati, and you find that instead of the person mixing salt, because one of the ingredients they put in chapati is salt, and you find that the person has put in too much salt. When you put in too much salt, it means you are going to scare away the customers, and at the end of the day, you remain with your chapati because they will not be eating them. So it is because of the improper mixing of the ingredients. When you mix those ingredients and they are not properly mixed, you find that you are going to create wastages. The other one, we have use of inferior materials. You buy, since you want to save costs, and you find that you've bought low quality materials, of which is going to cause you to buy more of the materials, and you get less of the output. Those are the things which are causing the deviations. Then the other one, we can talk about the incorrect cutting of, let's say, raw materials. You find that, let's say you are involved in carpentry workshops, because you know those guys, when they are doing their work, they keep measuring everything, and you find that you have measured, someone wanted 5 by, let's say 5 by 6, and you've cut it in a different form. Of course, you can't extend it because you have already cut it. So what you can only do is to sell whatever you, even if it is still good, but you can't make what the customer wants. Those are the losses, and they are due to negligence or the carelessness of the people who are responsible. So we said we are treating these as an operating loss, and they are the profit and loss account. Debiting profit and loss account, we said we are treating them as expenses, or we are lessing them, and we create the abnormal account. These are the things we. Good evening, viewers. This is your tutor CPA Charles Kafel, and today we are going to proceed with our series on process costing, and we are going to look at our second last topic or subtopics among the process costing. And here we are going to be looking at how we can treat the work in progress. If we have work in progress, how do we treat that? One of the things we have to understand is that production is a continuous activity, and since it is a continuous activity, we expect that when you are making recordings for a certain accounting period or for a given year, financial year, you may find that we are getting that information when the process is still going on. What happens is that you've commenced the production, and by the time the accounting period ends, you find that the production is still ongoing. What happens is that some of the units that we've put in as the inputs, you may find that not all of them have gone through to the final process or to the final stage where we get the finished items. We may find that some of the inputs, they are still in the system, or they are still in different stages of completion. So what we want to know from here is that we have to understand that there is work in progress. Those are the unfinished raw materials or the unfinished goods within the process or the production process, but they are at a different level of completion. You may find, we can take an example that at the end of the financial year, you may find that let's say you are basing on a brewing company, you may find that some of, let's say the bottles, they are at the stage where they are filled with beers, and some are at a process where they are about to get filled with the beers. And you may find that others are at a stage where they are supposed to be putting the covers, or where they put the brands and other things. So when it happens like that, we expect that we need to compute what will be the cost of those items that are in the production process but at a different level of production. What happens is that those units, they are the ones that we call the equivalent units. Those equivalent units, they come as a result of finding how much will it be within the cost of the work in progress, and how much will it be if you try to make sure we convert each item at a different element of cost and at a different level of completion. We try to look at how will it be if it is in terms of the completed units. What happens is that when you are looking for the equivalent production or the equivalent units, they are just notional units. Notional means the figures, they are not even there, but we try to express the work in progress in terms of the completed units. What happens is, let's say you have a half cup of water and you have another half of water in a different cup. When you try to combine them up, you find that you are going to be getting one full cup that is complete, or that is full. It is the same way we are trying to look for these units, and we try to find that, as in the example I've just used, you've seen that we are getting one cup of water that is full out of combining the half and the other half. That's exactly the same way we go through when you are looking for the equivalent units. And that equivalent units has different stages, as we are going to be seeing how we really reach on that, and we have the formula we are computing. But there is something you need to add on top of the units themselves being incomplete in terms of the raw materials, or at a different level of completion in terms of raw materials. There are also other elements of cost, like labor, because you may find that, let's say, a bottle which is already filled with, let's say, beer or soda, it will not be having the same cost like that one which is still at the process where they just fill in the sodas or the beers. So we need also to look at each item or each element of cost differently in terms of its completion, because you may find that different workers work in different processes, and we incur different amounts or different costs in regards to the employees who are working in different departments. What happens is that when you are looking at this the equivalent units, we need to look at the possible costs that can be actually in those items that are at a certain level of completion. If let's say it is 60%, 60% labor is complete. If let's say we've had material and material is at let's say 50% complete, and you find that in labor maybe let's say 45% or 60%, whatever percentage that it is, then the other overheads and others, they also may be at a different level, because at different stages we are incurring different costs. So that's all we are going to be looking at, and we find how are we going to be relating these work in progresses. We try to look at how much that will be in terms, if at all we express that into the completed units, and we try to look at the cost of those costs of incomplete units. We can go through the notes, but that's the whole picture, that when you are looking at the equivalent production or the work in progress, that's what we mean. They're saying, since production is a continuous activity, there may be incomplete production at the end of an accounting period. We said when we are counting, let's say when we are doing production, we do it at a specific period of time that we specify that we are going to be handling production from this and this, depending on how orders, how the organization is organized. And we are saying incomplete units mean those units on which percentage of completion with regards to all elements of cost. Now, in these elements of cost, we are meaning material, labor, and overheads. Those are the main ones we are looking at, and we see how are they completed, or at which level of completion are they in regards to the work in progress. But here we are saying that these incomplete units, those elements of cost, they are not at 100% complete. We have the units that are completed, but we have those ones that are not completed. When they are not completed, we are saying that the cost or the percentage of completion of those work in progress is different depending on the elements of cost. And we are saying such incomplete production units are known as the work in progress and are valued in terms of the equivalent or effective production units. This is what I was trying to explain, that we are trying to look at those work in progress or unfinished production, and we try to convert it into what will it be if at all it had been finished. What will be the number of units that are going to come out? So what happens is that when you're looking at this equivalent production, when they are setting the question, they give you the percentage of each element, and they will give you the work in progress that in terms of units, and they give you the percentage of completion at different element of cost. So we are saying that equivalent units represent the production of a process in terms of complete units. That's what we are trying to look at. When you get that units after converting the incomplete unit into, in terms of the completed units, then we get the units or equivalent production. And we are saying equivalent units means a notional quantity of completed units. It's a notional quantity of completed units substituted for an actual quantity of incomplete physical units in progress. And we are saying that when the aggregate work content of the incomplete units is deemed to be equivalent to that of the substituted quantity, and this applies when the operational costs are apportioned between work in progress and the completed units. What we are saying
about these operation costs, we apportion them in their percentage of completion. We take what went to completed units as in 100% because all of them, they are complete. But these ones, we get their percentage in terms of the elements of costs. How did they consume the elements, those different elements of cost? And we try to look at how many units that could have gone through if at all the production was complete. That's all we are looking at. So we can proceed to the next slide, and we try to look at how we can try to calculate the equivalent units, and we have the procedures or the steps we follow when we are computing the equivalent units. And one of them, we are saying find out the equivalent production after taking into account of the process losses. Make sure you understand the process losses, and if you don't, make sure you go back to the first videos I posted. We looked at how we calculate for the normal losses, abnormal losses, and abnormal gains, so that you get to know that. But here they are saying find out equivalent production after taking into account of the process losses, degree of completion of opening or closing work in progress, closing stock, through preparing the statement of equivalent production. So the first statement we have to prepare is a statement of equivalent production. But how do we get the statement of equivalent production? We have to first take into account the process losses, like the way we've been treating, because it is the same treatment throughout the production process. And we look at how the completion, the degree of completion of the opening and the closing work in progress. We shall look at how we handle if they are opening work in progress and if they are closing work in progress when we are using FIFO weighted average costing method and the LIFO, that is last in, first out. And the other one, FIFO, it is first out. Maybe to give you just a brief idea so that you get a picture. What happens with the FIFO if they are opening work in progress? What we do if they are opening work in progress, we first make an assumption that what came in first should be completed first. So what happens is that we specifically look at how the opening work in progress is completed in terms of the degree or the percentage of completion that will be given the question, and we first finish that. Then what happens next is that we get these other units that we've introduced and we work on them separately. We don't mix these opening work in progress and the introduced units or the input that has been introduced in the system. And what happens is that is very crucial is, one, when they are opening work in progress, it means those things they were already in the system. When we are introducing in the new input, it means those work in progress, for them, they don't need raw materials, meaning that the percentage of consumption of the raw materials will be at 0% because they are already in the system. So they are just remaining something small to get out of the production. That's what is important, but the rest are treated like the same way we are going to be seeing how we treat others, because for the weighted average costing method, for it doesn't differentiate the opening and the introduced units. For it suggests that what was introduced in the system and what was already there as in terms of the opening work in progress, they are all treated at once. There is no making differences. So you just do like the normal way. But what is a bit different is the FIFO, because for the FIFO, we have to first consume the opening stock, and when it is done, Then we get to the introduced units and the closing work in progress, as we shall see. We are saying that to get the equivalent units of work in progress, we are taking, it is equaling to the actual number of units in progress. If let's say the work in progress is 2000 units, you get the 2000 units, you multiply by the percentage of work completed for each, or separate for each element of cost. Why are we computing these elements of cost separately? Is because those work in progress units, they consume elements of cost at different rates. You may find that in a certain process we incur less costs than in the other processes. That's why we are computing using every element of cost, because they are consumed at a different rate. The second step is to find out the net processing cost. Net, what do they mean by the net process cost? Because we said in the first stage that we have to first take into account the process losses. Within the process losses, we have the normal loss, and you know that the normal loss is deducted from the input, so that we can be able to get our expected output. So from there, we have to first find out the net process cost according to element of cost, and they are in terms of the material, labor, and the production overheads. Third one is ascertain cost per unit. We ascertain cost per unit. Cost per unit of equivalent production of each element of cost separately. It means we are computing these equivalent units in terms of the elements of cost, but we are treating them separately because we said they are consumed at different levels, and we divide each element of cost by the respective equivalent units. What that means is that in each column, if let's say it is labor, we are going to be having different equivalent units, or the notional completed units. And if you are going to be having different items, it means we are going to be having different cost per unit for each element of cost. That's what we mean. So the other one is to evaluate the cost of output. Why are we evaluating the cost of output? Because we want to know what is the cost we've incurred in the completed units, the ones that actually went through, because they can give you the production process and they say that we are putting in 10,000 units, but out of the 10,000 units, they may split it and they say that 5,000 went through as completed units, and they may go ahead and say let's say the 3,000 was closing work in progress. It did not go through all of it, but it went through at different stages of completion in respect to each element of cost, and they give you the percentages. Then they may say that the rest was losses. We adjust losses and we try to compute to get the total cost of. That's what we mean by that. And we are saying when you have evaluated the cost of the output of the finished, then we have also to know the one for the work in progress, because we are evaluating the cost of output of finished, and also have to look at the cost of the closing work in progress, if any. I hope you can be able to get that. And we're saying we have an NB that the total cost per unit of equivalent units will be equal to the total cost divided by equivalent units. You can call them equivalent units or effective units, and cost of work in progress will be equal to the equivalent units in the work in progress multiplied by the cost per unit of effective production. Those one we are looking at we are looking at how we get the cost per unit. How do we get the cost per unit? We get the total cost we've incurred in the whole process. We divide by effective production, and this effective production is the same as the equivalent production, but this equivalent production has a component of the units that really went through the production process as completed units or output, plus the effective units in the closing work in progress. Remember, here we are saying that even that closing work in progress you are seeing, it is still in the system, but it's completed to a certain, it's not in its raw form, or it's not at the same stage as when they put it in the system. It's at a different stage of completion. That's why we are looking at what will be the effective units, what will be the completed units if you try to express the number of units that are within the closing work in progress. I know you guys may be a bit confused, but when we do the computations, you will just see everything flowing. But make sure you be able to remember these steps, because if you get one wrong, you just know everything is going to be wrong. Why? Because what we use at the beginning, you are seeing from step one, we've been using equivalent production. So if you get the equivalent production wrong, then you just know that even these ones, the whole of these ones are going to be wrong, because you can't get this one wrong and you expect that you are going to get the cost per unit, because the cost per unit we are dividing by the total costs over the equivalent production. And if you get it wrong, you just get everything totally wrong. So make sure you try to understand, and if you see things are not coming, make sure you watch this video more and more, and you try to be able to analyze each and everything that I've discussed with you. Hope it can be able to help you out, and we see how we can sort ourselves. The next one we are going to be looking at in the next video is going to be how we treat the opening and closing work in progress with the process losses. I'm not going to go into that, but at least I gave you a hint on how those are treated. But let's first try and understand and try to analyze these so that we'll be able to understand where we are going before we reach to more and more complicated numbers as we are going to be seeing them. But I can assure you that if you keep following and rewatch these videos, you are going to be able to understand each and everything, and you'll be able to master the things. Because the reason as why I'm heading very slowly is because this is what they examine at this level. It is very rare to find what we started with as being set in terms of computations. What they normally set from there, maybe they may give you theories, but this is what they really set within, because they know it's a bit confusing. But I'm going to make sure that I simplify this and it will be an easy topic that you can get all the marks, because getting all the marks is very fine, because everything just flowing, what you have got up is the one that takes you to the next step. Thank you for watching, and I hope you can be able to subscribe so that we learn more and more as we keep learning. Thank you.